dance floor. Well, Ben, you had such a key hand in organizing Concensus. Tell me a bit about the programmation highlights you're looking forward to.
Absolutely. We've got a packed schedule ahead of us for the next 3 days. Some of the highlights on main stage, which is just behind us here. We're going to have Bo Hines from the White House. He's going to be explaining White House crypto strategy. We've got people like Dave Portnoy, who's a massive kind of social media, cultural crypto phenomenon. We've got other people like Eric Trump, son of someone else called Trump.
Security's high.
And many other luminaries from the world of crypto and beyond. So we've got 6 stages, many speakers, and it's going to be quite a packed schedule.
And Sam, you had a huge hand in organizing the one of the stages here as well.
Yes, tomorrow I'll be running the Crypto Brand Summit, and our goal this year was to focus on who are the biggest brands in crypto that are going mainstream. So folks like MoonPay and like Galaxy, we're talking with Enron, which will be an interesting conversation. They actually have a lot to say since their meme coin actually got sort of taken over by the bots. So they're announcing something on stage. I think will be really interesting around that. But we're gonna have just some fantastic conversations with some wonderful builders in the space, and I'm really excited just for all the energy that's in this room right now.
Right. Sam brought up Enron. Christine, I know later you're going to be talking to DeLorean. There's a booth on the floor that is modeled after Blockbuster. A lot of old brands making a Web3 resurgence here at Concensus.
That's right. That's right. Well, you know, we're going to go back to the future or back to the past. We'll try to figure that out as we go along. You know, at the intersection of crypto, we've seen AI, we've seen space, we've seen fashion. What about time travel? We'll figure it out.
Time travel is the one thing that kind of freaks me out. Out of everything you've said, I'm okay with AI. Time travel is where I draw the line.
Well, what segments are you most interested in, Jen, in the upcoming layout of Concensus?
Well, like Ben said, there are 6 stages, so I think we're going to hear a lot of conversations, not only about brands and crypto, but we're going to hear a lot on regulation and policy. I think it's interesting. The reason Concensus is in Toronto this year is because when we were planning it, a lot of brands didn't want to go to the United States. We were in a different regulatory environment. The United States is much more friendly now when it comes to policy and regulation. And so I'm curious how that conversation is going to go and what we're going to hear when it comes to the regulatory landscape in Canada versus the US as it stands today.
Yeah, that's interesting with Canada now because we've obviously just had an election here. So we're in a kind of new environment. Everyone's wondering what the crypto regulatory space is going to be now with the Carney government. So that's another big question for us here.
Yeah. And Canada is the birthplace of Ethereum, the second largest crypto project by market capitalization. And if you believe that Peter Todd is Satoshi, possibly the birthplace of Bitcoin.
Canada's where it all happens.
Peter Todd is here this week. I heard he was out and about last night, so he may.
Wait, Satoshi was out last night?
Satoshi Nakamoto himself or herself was here.
On the streets of Toronto. Well, it's not only the birthplace of Ethereum. I think CZ is Canadian as well.
Right.
A lot of Canadians innovating in this space. I like to always highlight that.
I mean, not to put the boot in about Canada and crypto, though, but you know, I mean, Ethereum did start here, and Vitalik was born here, and a number of other big names were here, but they didn't stay here, and Ethereum didn't get incubated here. They went to Switzerland. So I think that's the question for Canada going forward is like, when the next Ethereum comes along, will it actually stay here in North America?
Yeah, so I think that's a question for all jurisdictions, all countries, governments. If you want to keep innovation, how do we bring regulatory clarity while also balancing consumer protection interests, but not to the point that it forces entrepreneurs to leave.
Right.
So
well, I also wonder, you have municipalities like Dubai. We were all in Hong Kong together a few months ago, Singapore, now the US, really trying to court these entrepreneurs to come and set up shop in their locality. So to Ben's point, is Canada going to say, especially under a Carney government, you're welcome here? Or are they going to say, we actually don't want to play that game, we'll let it go other places?
You know, Ben, I knew you were going to bring this up. I don't know, something at my sixth sense told me you were going to bring this up. And then I thought, Christine and I can't even defend ourselves because we went to the United States. So we can't even defend what's going on here in Canada. But I wanted to bring up on the point of innovation that the University of Waterloo will also have some representation here at the conference, and a lot of the innovation in tech in Canada comes out of that university.
That's right.
Yeah.
BlackBerry came out of University of Waterloo. So it's going to be fun to have some of the local universities here. We've got a big student representation here, which is always good to see. So I'm kind of fascinated for that conversation about Canada and where does it go from here after the election. And then there's this kind of arms race about regulation, right? So the US is now opening up. All these jurisdictions that Sam was mentioning, much more liberal than Canada is. So if you are a liberal, regulation sensitive startup, then you have a choice to make about where to base yourself.
I think that's what the Trump administration wants to reverse, and I think Eric Trump's presence here really shows that they want to go after crypto. They want to really hone in on this digital asset industry. They see the opportunity, the potential, and so I think it speaks volumes that they're making a presence here, even though they are getting flack in the New York Times this morning.
Oh, really?
There is a tiny company with Chinese ties that has said that they are going to invest $300 million in Bitcoin as well as Trump's meme coin.
Right.
So
I'm sure we'll hear all about that this week at Concensus.
I'm sure it's a safe, reasonable investment for them. Yeah.
Guys, we're expecting 15,000 people on the ground here in Toronto.
Wow.
100 countries, 450 speakers. I think Concensus always really is the top tier when it comes to these types of events. And we talk a lot about how business gets done here. Because crypto, as we know, is very nomadic. People want to go and hang out all over the world. There was a big conference 2 weeks ago. There'll be a big conference 2 weeks from now. What do we think makes Concensus so special?
Concensus is the OG. I mean, if you wanted to be in crypto in early days, you went to Concensus. You went to New York for the anchor event of New York Blockchain Week. But now we've spread out. It's a festival feeling. Crypto is global. So we have gone to different countries, cities as we progress. But Concensus is what started it all. So
I think one thing that defines and makes different Concensus versus all the other events is this big tent nature. It really has always been the kind of meeting of the tribes, whether you're Bitcoin, whether you're Ethereum, whether you're meme coin, whether you're more into kind of corporate blockchain stuff. This is a place for you to come and meet other people like you and people who are also different from you. And it's about that cross-pollination conversation that I think is so important.
This is the 11th Concensus, I believe. And, I think back to probably the last two Concensuses, Hong Kong and Austin. And each time I hear people here at the desk and out on the floor saying, it feels like it's maturing. It feels more serious. It feels more polished. I can come here. I can have the conversations that I've been wanting to have with folks. And I think that's what kind of differentiates it for me from some of the other conferences. And I want to come back to the Canada conversation for just a second, because Sam went through those stats and we came down a little bit on Canada. But as one of the Canadians at the desk, I do want to say that there are more than 80 Canadian speakers here, more than 40 Canadian sponsors, and more than 65 Canadian community partners. And I think that says a lot.
Yep.
Absolutely.
I was not knocking Canada, by the way. I was just saying that it is a race for attention these days. So. Yeah.
Ben and I did have a great poutine the other night, so I will say we are supporting local culture.
You got to get the poutine.
There's the beaver tails. What else?
Maple syrup. We've got
going
the
home
bacon.
With maple syrup.
Come on, we got breakfast for you.
This is how we do it.
All right, and we're gonna win the playoffs. All right, let's check out the main stage where we will hear opening remarks from Coindesk CEO Sarah Strataberta and Concensus Chair Michael Lau, also Canadian.
Please welcome to the stage Michael Lau.
Good morning, and welcome to Concensus 2025. I'm so excited to be with you all here at the largest crypto industry-wide North America conference. We have so much planned for you in store this week, and I'm so glad that you're here. Before we begin, I'd like to acknowledge that we are gathered here at the Metro Toronto Convention Center on the traditional territory of the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and Wendat peoples. As we come together to shape the future of blockchain and crypto, let's honor the enduring stewardship of this land and commit to building a future that respects all communities. My name is Michael, chairman of Concensus, and I also happen to be Canadian. Born, raised, educated right here in Toronto at the University of Toronto. Toronto's a great city to host a big conference like this. From venues like the Metro Toronto Convention Centre, plentiful international direct flights into Toronto, an extremely multicultural city with tons of great food and cool neighborhoods to check out, and a lot of sports. Go Leafs, go. I really hope you get the chance to see and experience all the city has to offer while you're here. Over the next 3 days, we're excited to welcome over 15,000 attendees from more than 100 countries. We'll hear from 450 speakers across 6 stages. We've got a packed show floor with 135 sponsors, 300 startups, over 1,000 developers competing in the hackathon. And not only that, but the crypto community is taking over the city with over 200 side events happening this week. A couple months ago, I came through Toronto to connect with a couple of folks in the crypto and Web3 community. And it dawned on me that Canadians have played an outsized role in the history and development of blockchain and crypto and still do today. As it turns out, there's a lot of founders that are at the global leadership level across the industry who happen to be Canadian. And in case you didn't know, a couple of them are joining us as speakers this week, including Anthony Diorio, co-founder of Ethereum and founder CEO of Decentral, Lorian Gable, co-founder CEO of Figment, Smokey Berra, co-founder of Berachain, Ethan Buckman, co-founder of Cosmos, Nam, core contributor of Bonk, Mike Siligetz, founder of EtherFi, Roham from Dapper Labs, and Don and Alex Tapscott from Blockchain Research Institute. Toronto specifically also plays a pretty unique place in this space. From the early days of Bitcoin meetups to the founding of Ethereum, there's a long-running history of innovation that was birthed right here and continues today. Not to forget also the amazing development talent that's coming out of the Toronto-Waterloo corridor. Could not be more proud as a Torontonian to be hosting this year's Concensus here in the city. With that said, Concensus has always been known as the big tent event that brings the global industry together. And we have many of the leading founders, CEOs, and executives from across the border and across the world joining us here this week. To all of you who traveled far to get here, we appreciate that, and we're so glad that you're with us. I remember back in my previous career in capital markets, a major hedge fund manager once said to me that you cannot make a fully informed decision without hearing all sides of the debate, and that the quality of decision, regardless of outcome, is where value is found. It's on this premise that I've always believed that high-quality, substantive content that provides insight, authority, or novelty can lead to higher quality decisions, whether it's on that deal, or building a business, or writing code, or navigating the future. And that's exactly what we strive to bring here to the stages at Concensus. And I believe you'll find incredible amounts of value here this week. When we approached the agenda for Concensus, there were a couple of major themes that we felt that were worth leaning into. And so I kind of wanted to take a moment just to kind of walk through a couple of those things and highlight some of the speakers that you'll be seeing here this week. The first theme is crypto in the context of the macro environment. I think it's pretty extraordinary that just within the last 7 days, we're back into Bitcoin above $100,000. There's major news and developments on the tariff front being made, and Canada also just completed the election. With that, we have a number of expert speakers lined up to talk through and give their insights as to what's going on in the macro environment, including Kevin Leary, Anthony Scaramucci from Skybridge Capital, Dan Moorhead from Pantera, Dan Tapiero from 10T, Tom Lee from FS Insights, and also tomorrow Dave Portnoy, just to name a few that are going to be here. The second theme was what I would refer to as tailwinds from the top. When I reflect on the different chapters of our industry, the best way to describe the first chapter when you think about the adoption story is that it was a bottoms-up, grassroots, peer-to-peer led adoption story. But in recent years, what we've found is that the second chapter started, where we're getting these tailwinds coming from the top, primarily expressed as public government support, as well as regulatory clarity. Most notably, in the last couple of months, has been the major shift in the US government on their stance towards crypto. And with that, later today, we've got Bo Hines, Executive Director of the Presidential Council of Advisors for Digital Assets at the White House, speaking together also with US Congressman French Hill. And on the regulatory front, we'll be hearing from both sides of the border as we have the Canadian Investment Regulatory Organization, Ontario Securities Commission, and New York Department of Financial Services taking the stage this week. The third theme is major industry developments. And Concensus, we want to make sure that you're on top of some of the major newsworthy and market-shaping events that are happening. A couple of weeks ago, you probably heard that Cantor Fitzgerald made waves with the announcement on the partnership with Tether and SoftBank Group on the launch of 21 Capital. And with that, we've got the chairman of Cantor Fitzgerald, Brandon Lutnick, taking the stage this afternoon. Earlier this week, just on Monday, American Bitcoin announced that they are going public on the NASDAQ through an all-stock merger with Griffin Digital Mining. And with that, we've got Eric Trump and Asher Ginu, co-founders of American Bitcoin, speaking tomorrow for the first time since the announcement was made. And then also, as you probably saw yesterday, Robinhood announced the acquisition of WonderFi, of which we got both Johan Kerbrat, crypto GM of Robinhood, as well as Dean Skirka, CEO of WonderFi, taking the stage later this week. I think it's pretty cool that all of these things happened all within the week that Concensus is starting. The fourth theme is use cases of blockchain. This is probably perhaps the longest running theme within our industry. What is the use case of blockchain? Where are we seeing traction? You know, aside from Bitcoin, which I think most people have appreciated, it stands on its own, much of the traction that we've been seeing has been on the financial application side. And I can tell you that when we look through what audiences and what people here at the conference are interested in, stablecoins takes it at the top. And we've got a lot of speakers this week talking about it. We've got folks from Ripple, PayPal, Stripe, BitGo, and many others talking about it, as well as Zach Folkman and Zach Witkoff, co-founders of World Liberty Financial, who recently launched the USD1 stablecoin, speaking on Friday. Outside of the financial applications, I really do think that we're still seeing experimental kind of proof of concepts going forward, but the conversation around digital property rights, amongst other things, is one thing that we see some traction taking over. And tomorrow we've got Yatsu, founder chairman of Animoca, taking the stage. And also later today, for all of us Canadians, we're fans, including myself, we have the lead singer of Our Lady Peace, Rain Maida, taking the stage to talk through his journey of what Web3 has meant to his company at Fandrop. The fifth theme is what I refer to as the trajectory of tech innovation. One of the things that's incredible about this space, I'd say, is the continuous innovation that we'd see around protocols, around the technology that fills this particular ecosystem. We brought in some of the most notable founders of ecosystems, including Charles Hoskin from Cardano, Sergey Nazarov from Chainlink, Sunny Liu from VeChain, John Wu, president of Avalabs, to join us. And we've also got a stage today referred to as Protocol Village, where we've got sessions dedicated to each ecosystem to give updates of what's happening there in their ecosystem. We've also got a hackathon, as I mentioned, that's hosted with our partners at EZA in parallel to the conference. And starting tomorrow, we'll have the CoinDesk Pitch Fest, where we hear startups talking about the latest things that they're developing in hopes of being able to win the prize. The final theme I'll just highlight is AI and blockchain. I think these are probably the two most important technological themes of our generation. And for the most part, they've been running on parallel tracks, and a lot of the conversation has been somewhat siloed. But I do think that we're starting to see the convergence of these two things, and staying on top of that, I think, is of critical importance, because if they are independently two of the most important themes in our generation for technology, the convergence of that will also be significant. And with that being said, we have an AI summit on Friday where we've got a stacked lineup of people speaking on this and talking about where these two themes are converging, of which we've got a number of people that were worth highlighting, including Dr. Lehman Baird, co-founder of Hedera, Shaw Walters, founder of Eliza Labs, as well as David Goyer, who co-wrote the Dark Knight movie, where there's going to be a discussion to talk about how creators are using AI and Web3 to unlock creativity and retain their IP, amongst other things. This is going to be an amazing week, and I can't wait for it to get started and for all of you to be able to experience that what we've got planned for you. With that, I also like to thank our sponsors, especially our 5-block sponsors, Stellar, 4-block sponsors, BitGo, FastX, Spacecoin, and American Bitcoin, and long-term sponsors, Grayscale, Rootstock, Waxmint, and Circle, for your partnership in supporting Concensus. And one final thing. I'm also excited to announce this morning that in 2026, Concensus will be returning to Hong Kong from February 10 to 12 at the Hong Kong Convention and Exhibition Center. Only this time, we'll be taking on the largest hall in the venue. With our inaugural Concensus Hong Kong earlier this year selling out at nearly 10,000 attendees, with over 75% attending from outside the city, over 350 side events, and over 300 speakers, we're so excited to be going back. In addition to that, we recently announced that Concensus is also going to Miami next year, a major crypto hub, and a unique gateway that's going to connect both the North and South American ecosystems together. I'm so pumped for 2026, It's going to be amazing. Consensus Hong Kong, Consensus Miami. Ticket sales go live today. Please go and sign up. It's going to be absolutely huge. I hope you have an amazing week with us, that it's going to be incredibly insightful, value-adding. I look forward to seeing you around. Thank you.
Please welcome to the stage Andy Baer, Anthony Scaramucci, Jonathan Steinberg, Pascal St. Jean, and James Seifert.
Woo! Let's go. All right. All right. Pretty good crowd for this early in the morning in the first panel. So thank you everyone for being here. We have a pretty star-studded panel up here. We're going to be talking about, can we call it an asset class yet? How serious investors can and should engage in crypto. So let's set the baseline here. Let's go to you, Jono. What's the current baseline for what institutional investors are looking at this space? Like, obviously we have the ETFs, there's some private funds. How are serious investors looking at this space right now in 2025?
I would say, we have a strong lineup of crypto ETPs in Europe. We've been in the market since 2019. If you were to allocate sort of by a market cap weighted approach relative to equities and bonds, you'd be at like a 2 to 3% weighting. I find that most institutions in Europe have not yet really pulled the trigger, though a tremendous number have done the due diligence. Really around sort of the hedge fund community, I think, is where there's the greatest early acceptance in the institutional community.
And how about you, Pascal? What are you seeing? Because we were talking backstage, and you were like, "Where there's some different things happening here in Canada."
Yeah, so we're doing a lot of education. When we talk about institutions, there's allocators, but there's also different asset managers and different banks trying to get into the space and trying to get educated. I think the ETF wrappers were a game changer from an investment perspective because they allowed compliance and legal to kind of step aside from a risk perspective and to say, you know what, this is now an investment decision, particularly for Bitcoin. When it comes to everything else, they're really still trying to understand how the networks function, what is a validator, what are all the different classes of cryptos? Because here we are on stage, a bunch of experts in the room and people who are in the day-to-day space, and we just blanket everything as crypto as an asset class. But the reality is when we go to an ETF conference, no one there is talking about are ETFs an asset class? It's what are in the ETFs. So there's still a lot of that education to take place, but they're starting to move forward. But Bitcoin, of course, is leading the charge. But I'm impressed by the level of understanding that these larger institutions are starting to take shape, and you're going to see a wave of that coming in the next 18 months.
Andy, to you. I mean, one thing I will say is, like, I feel like education has been what we need to do in this space since I started covering it professionally in 2017. I feel like it's probably always going to be. Yeah. But like, what else do we need to do to make this asset class more recognized, more standardized, more acceptable to serious investors and institutions? What are you guys focusing on?
To us, it feels like 1999, right? It feels like when tech stocks in the United States started to become more accessible with easier online brokerage, right? The E-Trade ads with the babies, and people started buying names that they knew a lot about. Then they started buying names that they knew less about. Then they started buying names that were going up that they saw in the Yahoo chat rooms. And there was a lot of froth. And around that gathered this QQQ ETF, right? One of the first ETFs, which was this liquidity container for 100 NASDAQ stocks. That took on a life of its own. It moved from being an institutional kind of liquidity mover to an allocation engine into tech. So we think that there's a lot of trading. Crypto is a trading asset class yet. We don't think it's quite an investment allocation asset class. There's a lot of trading. There's froth that will come away. But out of it, you need these liquidity containers that ultimately become benchmarks and that ultimately become the tool that retail will use to allocate to the space.
Yeah, it's funny. Henry Blodgett, the CEO of Business Insider, he was on one of my colleagues' podcasts recently, and he was talking about what he was doing because he was covering tech stocks in '99, and he basically told people, buy 5 to 10 of these things and hold them for 5 to 10 years. And that's how he ended up in Amazon so early and a few other things. A lot of them blew up. Seems very similar to what's going on in this space. So I think a lot of the stuff in this space is going to be worthless over time. But I want to go to you, Anthony. We talked to your colleague, John, before, and he was saying how you guys wanted to really go into the space in a big way in 2018, and it just wasn't ready. There weren't institutional backdrops. Things weren't set up for you guys to really go into the space. Obviously, you have leaned way more heavily into the space. Can you just talk about the growth that has happened and what you think still needs to happen for big institutions to jump in?
So, I mean, for us back in 2018, I didn't think there was enough wallets in Bitcoin at that time. I was having a hard time understanding where if I was going to make a 9-figure investment in Bitcoin, where I was going to store it safely. You know, we were 4 years out from Mt. Gox, and I was uncertain where to put it. And then the regulatory issue, I think, was hanging on us. By 2020, you could store at Fidelity or NYDIG or places that I felt comfortable with. And then you guys may remember this, the IRS deemed Bitcoin intangible property. Well, once that happened, in the US, property laws are fairly sacrosanct. They're bipartisan. There's 900 years of common law dating back to the Magna Carta. So I knew it was going to be impossible for somebody to take my Bitcoin if somebody like Elizabeth Warren wanted to make it unlawful. So we made our first investments in October of 2020. But I think this is a metric thing in terms of dollar value. I don't know what the space is right now. It's about 4 trillion.
I was going to say 3.
Probably, okay, just across 3 trillion again.
So 3 trillion is like a Mag 7 stock. 20 trillion is an asset class. And so if you tell me that Bitcoin can get to 500,000, people will be writing stories that Bitcoin is an asset class. I believe it is today, but others don't see it yet. But I think that's really what happens. Numerically, it's got to trade the overall market cap of all crypto, but more specifically, Bitcoin's got to trade closer to gold.
Yeah, it's funny, you talk about like the institutional custody, and I remember like thinking back in 2017, even through 2020, talking to people in this space, they were like, institutions are going to come, and like they can't understand the mismatch between like, you don't want to hold your own coins if you're an institution or you're running a pension fund. Like you need institutional grade custody, and there's this mismatch in people that were early to the space and people that are coming now between what they need and what's available. Go ahead.
Maybe I could just jump in a little bit here. I think why we're all, no one's surprised, but surprised at the same time that Bitcoin dominates this cycle compared to everything else, because this is more institutional capital coming into this space, and Bitcoin has overcome a lot of the things to potentially be deemed an asset class like gold or other things. It has hedging mechanisms. It has different wrappers. It's a little bit easier to understand. It's a digital gold for a digital age. Whereas everything else, when we talk about, the concept of a governance token or a utility token, it's a little harder for institutions to wrap their minds against what exactly am I owning? Am I owning the rights to future, basically fees from a decentralized exchange? No, you're owning the right to a vote on the protocol. That's still something they haven't wrapped their minds into, which is why we love what CoinDesk and the index and everything they're doing, and we partner with them. And I know Wisdom Tree has as well. Is it enables at least the abstraction of that complexity into something a little easier to understand, where you could structure products and hedging mechanisms to try to bring in more institutions in the space.
I was going to, even before the plug, I was going to agree with you that your journey about custody and about Bitcoin, your world as an active manager was Bitcoin and venture, right? Those were the two spaces. And that leaves out the public trading of everything else. Yet the public trading of everything else is vibrant and accelerated around the world. So I agree. That's the biggest problem, that the asset class, the crypto asset class, is a bit hamstrung by the fact that there's this giant singular thing standing there that people have to understand first, and then everything else becomes a trail. Yet you miss out on real blockchain technology, layer ones, where all these tokenized products are going to settle. Infrastructure, DeFi, you miss out on all that if you don't dig deeper, but it's a little bit hard to get past it, and that may just be an earliness thing. But hearing both of these kind of coming of age stories, I think that's where we are right now. This is the time to push, though, especially in the last couple of weeks when the rest of the space seems to be kind of resurrecting itself.
All right, we've been talking about dancing around this topic, but Bitcoin dominance is at like a 4-year high here. When I look at ETFs, that's obviously what I focus on. If you look globally, Bitcoin ETFs have 80 to 90% of the assets, no matter what you're doing. Now, granted, there aren't a lot of other ETFs available besides Ethereum. There's some Solana and XRP in the US. The US dominates. But Jana, let's go to you in Europe. What's happening? Are people are they just focused on Bitcoin, or are they looking at this other thing, the venture side of things that Andy kind of alluded to?
Earlier it was spoken about the queues and the basket of 100 public companies that made up the queues. So many of the cryptocurrencies have no value beyond speculation that it's very, very, you have to be very cautious. So a CoinDesk has to, if we licensed the DAO, the Crypto 20, you need to be the Wall Street Journal. Can't only be a cheerleader. So there's a lot of risk here. So Bitcoin was amazingly well constructed. It's not digital gold, because we actually have physically backed tokenized gold, which is gold, and it travels just as smoothly over the blockchain. But Bitcoin's done a better job selling the need, this alternative store of value, than gold has done. But I think Bitcoin is dominant. It is here forever, I believe. Some will emerge, but we have to be very, very cautious. I think that's sort of my take for the moment.
Yeah, so I could jump in a little bit here. The US has launched some futures-based ETFs, right? But Canada's been quite innovative at pioneering the ETF space globally, as well as staking. So we were the first to launch staking in an ETF with our Ethereum product, and recently launched our Solana SOLQ product. That one is attracting both retail and institutional capital because we're solving the complexities of a lot of things. So how do you package the technology, the staking, the security, the right custodians in an easy to access wrapper this is quite appealing for investors. And the other thing as to why institutions are starting to come in is they also start to understand layer one. So Bitcoin, they understand. Now they're starting to understand layer one, saying, okay, if all these applications in the future of finance need to settle on chain, I don't need to start picking which application is going to win. Like, is it Google or is it Facebook,
Right.
or is it Microsoft? You just own HTTP. You just own just own the layer one. And so people are starting to allocate through these vehicles because they understand what it is. And at the same time, through these staking mechanisms, they understand that they're participating in the security of the blockchain, which is a plus for them.
So everything that Pascal just said, we couldn't say 5 years ago. Take it back to 2020. And so I'm an early investor in SolQule, in Pascal's ETF, because it meets all the metrics that you would expect it to meet from an institutional investor standard. So we, because we were first money in, or started getting this thing started, and I expect them to have $1 billion fund. And as Solana continues to grow its ecosystem, I do think it will be one of the things that we end up tokenizing everything on. Stocks, bonds, real world assets, et cetera. I'm not saying there won't be others, but Solana has a big lead. It's fast and it's cheap. And the guys there have done a great job of building that ecosystem. And so this is the combination of a great story and a great asset management firm coming together to scale that for individual and retail investors.
This is great, and I agree, Solana is amazing, and I think the product's amazing, and democratizing staking yield is critical, right? It educates while it pays. Henry Blodgett's point about picking 5 NASDAQ names and holding them for 25 years, probably would have had Intel and probably would have not had NVIDIA, right?
Yep.
And understanding layer ones, you would have got it. You might not have had Ripple or Stellar, right?
Yep.
You probably would have had Ethereum and it would have been difficult. So staking's critical, and institutional grade staking is important. Solana probably won't be the Intel. It probably won't be the NVIDIA. It might be the Apple or the Amazon, right? So again, for people who want to make that 10-year bet, you just don't want to pick, right?
The index, 100%.
You want them all in there, and you want some benefit of staking yield. In the meantime, these products, I think, are a gateway. A SolQ is a gateway to making the whole environment a little bit more friendly, and kind of distributing some of that yield to holders, which will be a great feeling. So
can I ask John a quick question? John, in the United States, they prohibited staking on the Ethereum ETF. Do you think that the current SEC, the new rubric of the SEC, will change that and reverse it and make it consistent with Canada and other parts of the world, or you think we're stuck with that?
I believe it'll evolve to allowing staking, but that's not like the SEC has given that visibility. But I believe that's going to be the trend. We're coming off of what was such a restrictive SEC; it was completely unreasonable. So, and the ETF really mainstreams these exposures for all investors, whether it's retail or institutional.
Yeah, so I can actually answer that. The SEC's final deadline for the 19B4, which is like basically when they have to say yes or no, you can do these things, for staking is going to be in October. Our view is it's going to be approved. How long after it's approved before all the plumbing is set up properly where the SEC is comfortable? But I do want to give a shout out to the OSC, the regulator up here in Canada. Pascal kind of hinted at it, but Canada always beats the US first to market for every new type of ETF out there.
I thought these guys
I don't want to brag.
I thought you were the socialist country.
It's not the OSC, it's 3IQ pushing.
Oh, okay.
That's okay.
All right. Well, actually, everyone here probably knows about the Grayscale lawsuit with the SEC. I'm assuming maybe people up here in Canada, if you are actually Canadian, but 3IQ, or before that, actually fought a similar battle with the regulators here in Canada. Can you just talk, right now we've gone from super massive headwinds over the last few years. It seems like we have a lot of tailwinds behind us. Can you just talk about what happened with that 3IQ lawsuit and where things are going?
Yeah, so fundamentally, it was working with the regulators to basically, understand what they have the right to regulate and what they don't have the right to regulate. So fundamentally, originally, they came back, in the early days, because it took 3 years, in terms of, where are you going to custody with, how are you going to have your market makers, your banking, all the complexities. And so 3IQ went to go solve all that and brought together a lot of the parties that today make the infrastructure that manage most of the ETFs in the market, right? Once we came to them, then they kind of denied it again, at which point it became infrastructure solved, and so why are you denying it? Because the regulator in Canada is not allowed to dictate which asset class can or can't be invested in if you solve for those problems. And that was the particular lawsuit, was now you're picking and choosing what you're allowed to invest in, and that's not your right as a regulator. And that's how we won, relatively straightforward, because it was basically saying we solved the infrastructure problem. Now you don't have the right to pick and choose. And I think it was a similar case potentially with the SEC. But that was the 3-year journey. Since then, basically they've been quite open at working and listening to asset managers at fitting within existing 81-102 regulations. So what's missing in Canada to really take off compared to some of the other jurisdictions that are building crypto native regulation is that we don't have crypto native regulation. So everything we do has to fit within existing laws. And so you really have to, open up your paradigm shifts and educate and think this through in terms of what does it go into to get all these different products approved. So it's a slower process, but it's working, and it's keeping assets safe, secure, and so far simple for investors.
Yeah, just to Jono real quick. I mean, our view here at Bloomberg is like things have kind of switched in the US from what is going to get through, how can it get through, to like where is the SEC going to draw the line? Because pretty much everything is likely to get, they seem to be more libertarian minded. We don't know for sure. But I'm just curious if you could, at Wisdom Tree, if you kind of think things have shifted enough that way, and also if you can compare and contrast, like you have a lot of products in Europe, obviously, like what's the difference in working with these regulators has been?
So if we do sort of beta, we want to be sort of first to market with beta or near first. When the SEC held our application for Bitcoin for like 5 years, and so that when they did approve us, they approved us with 11 other firms. Not really an ideal environment for actually the asset manager. Funny though, Gensler created just what he didn't want. In the US, there are more Bitcoin ETPs than S&P 500 ETFs. So he created, by allowing 11 firms to say we're first, he created a tremendously competitive and mature foundation for Bitcoin, which I think is just very good for the asset class. I agree, it's more when, not if, and I'm expecting there to be a lot more competition and exposures to come to market.
See, I think one of the things when you talk about is it an asset class or not, can a bank, a money center bank, a large U.S. institutional bank, custody Bitcoin? Meaning, if I own 50 Bitcoin, can I move it to my account at J.P. Morgan and have them hold it for me? When do you guys think that happens?
I think that's happened. I think Bank of New York has gotten that approval.
So it has happened.
It's just, I mean, if it hasn't happened, it's about to happen, but I believe it has happened.
I think in Bank of New York, maybe I didn't understand it, but I thought in Bank of New York's case, it was like a trial balloon. They were letting them have a trial basis, one bank. I'm talking about the proliferation, Jono, of like all banks. You walk into your bank, you're going to move assets over, you can move your crypto too.
Is
that 5 years from now?
No, I think it's sooner than that. I mean, there was, regulated financial services, you bow to the regulator. You can't go afoul of them. No one is more difficult than the OCC and the banking regulation. And so they were really discouraged, the big banks, from touching the asset class in any way. And that is falling away. And so crypto should be able to sit side by side with other asset classes and other services, be normalized. And that's where, and I think that journey is happening. ETFs were a part of that journey. These regulation changes are a part of that journey. And I expect that it'll be pervasive. Now, custody is a tough business and it's a scale business. So, Coinbase has a fight ahead of them.
I think, custody is one thing, derivatives also important, right? If you don't have index derivatives that are liquid, even on the biggest derivative platforms, you have a lot of liquidity in Bitcoin, some in Ethereum, and then it trails off. If banks really start to develop structured products or hold or trade or serve customers, suddenly statutory capital is going to be, something you have to manage. And Bitcoin alone, optionality isn't going to solve that. So you need other big containers. QQQ did this really well. Options market for tech stocks exploded. The futures got better. The index options got better. ETF options will handle some of that, but that's a very capital expensive way to manage risk. So we do think that derivatives, custody, and ETFs, you put all those three together with the right kind of scope, that will help distribution, that'll help risk management.
But I don't think there's any argument on the stage that it will, like everything we're talking about is on a journey of happening. The question is, it's slowly then suddenly type of analogy. So is it 18 months, 36 months, who knows? But globally, regulatory clarity is happening. A lot of mid-tier banks are custodying and bringing in crypto-centric clients. Structured products are happening in certain jurisdictions. So fast forward, right, just the mental model shift over the next 3 years. If we looked at the space in 2017, like Anthony was saying, it was non-investable for Skybridge, and now all of a sudden they're one of the leading players in the space. Do that in another 5 years, it's an asset class, guys.
So can I just
go ahead,
say
Anthony.
Just a couple of things why we may not actually be bullish enough. Number one, proliferation of capital into the public markets for things related to Bitcoin and other assets. Kraken is going public would be an example, but other companies are going public. American BTC spinning out of Hut 8 as an example.
Yep.
So there's a lot more capital in the space, which means it's going to eventually flow into things like Bitcoin and Solana. Number two, copycats that are out there of strategy, formerly known as MicroStrategy. There's a proliferation of those. You have the selling cycle. Jono, how long have you been on Wall Street?
Since 1984.
Okay. All right. So I've been, just like you, I'm 89. So there's a combined 70 years here. We're both lying about our age. Don't look us up on Wikipedia. But what I'm getting to is we both know that Wall Street is a selling machine. And BlackRock is just turned on the dial of thousands of consultants going out there. And so you saw in April, after quote unquote Liberation Day, Bitcoin sort of was not super correlated to the Mag 7 and others. So I'm just wondering, proliferation of capital, copycats, introduction of wider regulation, Wall Street selling machine for these ETFs and other products, we may not be bullish enough.
One thing I will say on that is I work at Bloomberg, and I have a lot of clients who don't take this asset class seriously, which is exactly what we're talking about. And some of them saw what you were talking about that happened in April, that kind of like, I don't want to say the word, but it kind of disconnected from what was happening in the markets, or at least it didn't act the way most people expected. And that prompted a lot of people who were like, maybe I should take this a little more seriously and look into this narrative. You want to say something, Pascal?
I was going to say, so we've seen moments. So like during the banking crisis in 22, Bitcoin completely disconnected to the upside, right? And so we cannot forget the impact that, for example, the cash and carry basis trade is having on Bitcoin right now. These ETFs are being used to run that trade. And when liquidity, basically there's a liquidity crash and you need to get out. So everyone has to get out. And so Bitcoin becomes correlated.
Pascal, explain the trade. Explain the trade.
So basically there's a disconnect, and this happens in every commodity, but essentially in crypto right now, particularly in Bitcoin is very popular. But if you go down the chains, particularly those that have futures, you have a very large spread between the spot asset price and the derivative asset price. And basically, if you want to do a market neutral trade, you go long the base currency, so in this case Bitcoin, and you short their futures or you short their perpetuals, and you basically achieve what you call the contango spread in the middle. And for now, that's been close to high. It's beating treasuries almost by double right now. So it's a very popular hedge fund trade. A lot of institutions, some pensions are executing the trade. We're trying to package that trade in an easier way for individuals, and so it's becoming popular. But when there is liquidity crunch, and that is your source of liquidity, Bitcoin's very liquid, people unwind the trade, and so it does, get Bitcoin to get correlated to everything else. But in moments of stress, you've seen Bitcoin succeed at its job at bringing in risk assets.
Yeah, so I'll just add, like if you just look at the spot Bitcoin ETFs, about 15 to 20% of those assets are in hedge funds likely doing this trade. And we saw billions flow out. They went from a peak of $40 billion inflows. $5+ billion came out from February through the end of March. And almost all of that was unwinding the basis trade, because you went from double-digit yields on basically risk-free to single-digit yields, and people just took their money out. And then the outflow kind of stopped, and now it's gone back in, but that basis hasn't gone up. So this money that's come in our view, over the last month or so, billions of dollars, we're now at a new all-time high of inflows, isn't because just the basis rate like we saw was happening.
This time here, yes.
Yes.
Yeah.
So I want to talk to someone we kind of were hitting on before. We were talking about headwinds turning into tailwinds. Something I've been worried about since November, and we're starting to get more signs that this might be the case. I want to go to you, Anthony, on this one. Has the pendulum swung too far from a headwind into a tailwind with some of the things that the administration has done with the Trump coin, Melania coin, some of the things happening World Liberty Financial? I think a lot of people want this to be bipartisan. They don't want it to be an issue. They don't want too many things to be happening. And it almost feels like this is giving more ammunition to the people who are anti-crypto solely for political reasons to fight this. I want to hear you just talk about this for a minute.
All right. Well, so don't ever forget this with the president, okay? I just want you to imagine you're at Mar-a-Lago and there's a buffet table, okay? And you have to eat everything at the table, okay? You can't take your tray over to the buffet table and say, I want pro-crypto regulation. I want a little bit of banking deregulation. I'd like some lower taxes, okay? And then you walk back to your thing and you drink your Diet Coke with the president. You don't do that. You got to eat everything at the table. You got to eat the meme coin before the inauguration. You got to eat Canada's the 51st state. Sorry about that, Canada. You gotta eat we're gonna take Greenland. We're gonna take Panama. We're going to have tariffs on, tariffs off, Liberation Day, no Liberation Day, I just blinked. You get everything, the $400 million plane, okay? and so you have to understand that you have to eat everything at the table. So to me, if I'm just talking about our industry, he's better for our industry. If we're going to be objective about it, Jono just cataloged briefly some of the things that went on in the last administration. And so, yeah, is there some headwind now? Is there a slowdown for the stable? It's so funny that these things are called stable and genius. So we'll just call them the stable genius legislation. Is there some slowdown up related to that because of what Trump is doing with his family? I think that there is. What I would say to Eric and Don, I assume, because I know those guys well, that they're not doing anything wrong. So just be as transparent as possible to reduce the fight, the tension. They're business people. Their dad's the president. They're allowed to be in business. You see what I mean? But I do think that stuff gets passed by the August recess.
Go ahead, Andy. You want to say something?
I couldn't agree more, but
What are you eating at the buffet table, though? What do you like most? You like everything, or you just
start with A, go all the way to Z.
All right, you like the plane the best, I think. You like the $400 million plane from the Hamas Qataris.
$400 million plane would be nice. Why stop there? The weekend that the Trump coin went live was an amazing demonstration of liquidity moving, and I think it pointed to. I just love the volume that went through. Nature will take care of things that shouldn't be in the ecosystem, and 10 years from now we'll look back. But that was a build. Like, that was an amazing feat of global coordination of liquidity to have that happen. So
on Solana,
and when did you who had on their bingo card that the president would put up a website with a Solana address at the bottom? Like, that was pretty cool. So it doesn't matter how it happens, but it did advance a lot of things, and it educated a lot of people. So the right and wrong will wash away with time, but it was a groundbreaking thing that was pretty impressive to watch. And for investors who want to stay at the quality end of the curve, yeah, you got to have some Solana. You don't want to, this week proved you don't want to bet against Ethereum too hard. You may not want to pick which layer ones, but you want that top layer of infrastructure because all that stuff is going to be happening up there. So, Trump is not in CoinDesk 20. It won't be, it can't be, but the results of it, the picks and shovels are in there. And so it was impressive.
So when we looked at advisor surveys and investor surveys, the number one reasons people gave for not investing yet in crypto was there was no wrapper they liked. Most of them preferred an ETF. We now have the ETF specifically in the US and elsewhere globally. And the other one was regulatory clarity. We got a decent amount of regulatory clarity when the SEC approved the Bitcoin ETFs and Ethereum ETFs. It may not be explicit in some regards, but that was pretty well done, right? But there's still a lot of regulatory clarity that needs to be sorted out. You mentioned the Stable and Genius Acts on stablecoins. Anthony, obviously thinks they're going to get done. We probably need a market structure bill. I guess I'm going to go to you, John. Are institutions that are thinking about entering the space, how much are they relying on some sort of, legal framework coming out of Congress in the US, or are they worried about regulatory clarity in order to get into this space?
I think that you can't generalize. All institutions aren't the same, and there's certainly those that are sort of the early adopters. You are seeing the financial intermediary, now that you have the ETF wrapper, embrace it. If you had asked 2 years ago or 3 years ago how many advisors had put their clients into a crypto or Bitcoin, it would be 0, while their clients had actually bought it on their own. So this, and in the US, money moves through the financial intermediary. That's a big money channel as opposed to direct to retail. I think this isn't so different from ETFs, where it's not a straight line. The regulations take time. The American Stock Exchange was in front of the SEC for 7 years before the SPDR was approved. And then it started with only equity indexes. And then it went to fixed income indexes a couple of years later, self-indexing after that, commodities. So it's a journey, but I think we have that momentum. It is happening. Writing the legislation, though, isn't easy. And some of it may or may not get approved. I'm not as bullish that it will actually get done, but I'm not sure it needs to get done for the asset class to thrive. You just need the SEC not to regulate through enforcement.
See, Pascal,
so we speak to a lot of advisors, of course, and before the ETFs, it was hard because you had access through SMAs. You just say to your client, go on Coinbase or go on Kraken and just buy and just do what you have to do. So today the ETFs are available. From that being said, Bitcoin, again, why we're seeing the dominance is the easier one to explain if client demand is there. We're seeing some of the asset managers being a little more innovative and just adding Bitcoin as part of their global macro portfolio. So now everyone gets Bitcoin without having to be sold Bitcoin. And so people are solving for the access problem and the problem of the advisor not having to have career risk by saying, let's go 3% Bitcoin. And then all of a sudden volatility kicks in and he's got 200 clients calling him like he's trying to golf. He doesn't want that. Okay. So basically the advisors are saying, we're comfortable with Bitcoin. We're comfortable with these macro funds. What we really want is an index and a basket, because then we can go to our client and say, it's a diversified, professionally managed, solution. And we're going to put that in your portfolio. And I could go golfing.
We call them 5%ers, right? The advisors manage in the United States over $100 trillion, and there's trillions in retirement funds, trillions in annuities. You don't want that 5% allocation to be 20% or 50% of your headaches, right? That ultimately we feel will have a Bitcoin chunk and we'll have an index chunk. We hope CoinDesk 20 will be that index chunk, and then that's what you hold for 10 years or 20 years or 30 years, and by then, I think that's a pretty solid bet.
Anthony, you had something you wanted to say?
Well, just briefly, I think Jonathan's ultimately right about legislation. It's very cumbersome, as a huge sausage factory. But I just want to remind people that Fair Shake, the crypto pack, came in 24, dumped $250 million in. Other crypto aspirants gave the president something like $150 million to help him win that election. And I find it very hard to believe that the Democrats are not going to be at least crypto neutral by the time we get to the 26 election season. So that's the reason why I'm optimistic. But Jonathan and I have a lot of experience with this stuff, and we can go haywire when you're in the Congress, but I think the incentives are there to get these bills passed.
Yeah, if you're not optimistic on this asset class and more broadly after this panel, you probably weren't listening too well, but that's all we have time for. Thank you, everyone, for coming early.
Great job.
Always good to see you. I'm going to see you this summer, I hope.
Hopefully.
Welcome back. We're coming to you live from the CoinDesk studio at Consensus 2025 in Toronto. I'm Christine Lee, joined by my colleague, Ben Schiller.
Good to be
Ben.
here. Thank you, Christine.
All right, so we're kicking off things. We heard from our Consensus chair, Michael Lau. We also heard from a panel that Bitcoin is an asset class, Anthony Scaramucci, Andy Bear, ETFs, et cetera, et cetera. You've had a key role in programming the sessions at Consensus. So give me a sense of what you're looking forward to. What are the highlights?
Yeah, so that session we were just watching with Anthony Scaramucci and the founder of Wisdom Tree and others was really talking about this idea of Bitcoin as an asset class and really coming of age in this cycle since the election. And they were talking about some of the politics around crypto regulation and then the impact of the US on other jurisdictions around the world. So that's one of the themes of this conference is that, post the American election, we're going to see other places like Canada being more front and center with crypto adoption in the capital markets.
I found it interesting when Anthony Scaramucci was talking about, when people think of Bitcoin as an asset class, everyone here already thinks of it as an asset class. It has to hit around $20 trillion.
Yeah.
It's at $3 trillion now. And then we have a whole slew of altcoins. Bitcoin dominance is at a 4-year high.
Yeah.
And so where are we in the cycle now? It's getting more mature for sure.
Well, it's interesting for anyone who's tracked crypto for a long time because a lot of people have obviously predicted that Bitcoin would become less and less important over time as more and more altcoins, different digital asset products came on the market. But actually the opposite has happened. There's been this flight to quality, which is Bitcoin. And Bitcoin is as dominant now in the crypto market as it has been for 10 years or 8-9 years. So 65, 70% still. So it's just been interesting in this kind of moment when some of the other assets are going down. Bitcoin has very much been the asset in the crypto market. And to a lot of people on Wall Street and other financial centers of the world, Bitcoin really is crypto. There is no crypto. It's just Bitcoin, which is obviously music to the ears of Bitcoiners around the world who've often said that Bitcoin is crypto and crypto isn't a thing really. So
it's interesting. You can really tell. Well, now Bitcoin is the OG, but you can also tell when people got into digital assets. They're hardcore Bitcoiners. Then there was cryptocurrencies with Ethereum and the ICO boom, and then we started calling it Bitcoin or blockchain, not Bitcoin, but nowadays definitely Bitcoin, not blockchain. And then it started being called Web3. So, but at least at Consensus, we embraced it all. We're just here for the digital asset revolution.
Well, that's true. We're sort of fairly agnostic about different chains, and that's one of the ideas of Consensus is to really bring all the tribes together. And we believe in the technology of blockchain decentralization as much as single assets like Bitcoin. So to us, let a million flowers bloom here, and you can see that very much represented across the 6 different stages here and the different speakers we have here. So it's not a Bitcoin fest.
We have 15,000 attendees from over 100 countries, over 450 speakers, over 200 side events. That's another thing about crypto conferences that I love. Whenever you have an event going, there are so many people from the crypto community also just throwing events, just getting people together, wanting to show their innovation, wanting to make deals happen.
And that's decentralization, right? And you can see that in this conference and in other conferences as well. It's like we're offering a platform for people to come in to Toronto, wherever we are, and set up their own event. And if they're interested in some esoteric art thing or some like esoteric finance thing, whatever they want to do, they can do their own event. And it's still part of the mix here, still part of the conversation. And we like to be very inclusive into everyone having a voice.
Just one note, though, on Bitcoin. When Bitcoin goes up, it rises all boats. We're seeing a boom in Ethereum, which was the most hated coin for a while there, but now it's really surging. Let's take a quick look at Ethereum and Bitcoin, actually. Okay, Bitcoin right now, $103,293. It's trading pretty flat today. Let's head on over to Ethereum. Yeah, Ethereum is at 25.72. Yesterday was ripping over 9%. You see that in the chart up there. Now it's still holding a sizable gain. So we're seeing a lot of acquisitions, mergers in this time because people are excited again. They want to they see that the crypto market is back up and people are ready to make deals again.
Yeah, I mean, it's interesting to see Ethereum come up. Obviously, people have been complaining in the Ethereum community and the wider financial markets that Ethereum is a laggard in this cycle, that it's not running with Bitcoin, but it's now very much up in the last week, 25-30% from where it was. So, that's encouraging to see.
And as I mentioned earlier, Ethereum was born in Canada, in
Yeah.
Toronto to be exact. Canada is the 10th largest economy in the world with a GDP of over $2 trillion. It's a resource-rich country with plenty of blockchain adoption opportunities in sectors like energy, agriculture, healthcare, and finance. Joining us now to discuss is Kalea Carrington. She's the Executive Director of the Canadian Blockchain Consortium. Kalea, thank you so much for joining us.
Thank you so much for having me here.
So, I mean, Canada has quite a history in developing the crypto industry. And so tell me what is the latest that Canadians are doing to help this industry thrive?
I would say that we're very actively engaging with our policymakers and regulators. What we've seen in a lot of other G20 countries, looking at Singapore, Japan, the UK, even into like El Salvador, Middle East, a lot of times when these industries are starting to thrive, including the States, we're seeing legislative and policymakers producing the kind of policies that allow for regulators to interpret in such a way that it can become more friendly. So we're just engaging very strongly from a regulatory and policy perspective to help create a framework that makes Canada a more friendly place to do business.
So we just had an election here in Canada, but crypto was not really on the agenda very much, not like it was in the US election back in November.
Wait, I'll qualify that.
What?
I mean, Pierre Poilievre, he was a Bitcoiner. He said that.
But he wasn't really discussing it during the campaign
that is true.
so much,
That is
right?
true.
So why was that? Why was crypto not really a thing here?
So I would say when Pierre had come out very pro-Bitcoin at one point, he had purchased some shawarma with Bitcoin. It became quite a big news story where the opposition or the leader, Justin Trudeau, a lot of negative rhetoric came out. So I'd say from our industry's perspective, we're actually quite happy that it didn't turn into more of a partisan-based issue where the conservative, or if you're used to American terms, Republican Party was very pro, and then the Democratic Party was very against it. So they didn't table it mainly because they didn't want the controversy, and they recognized that over 35% of Canadians actually interact within this industry. So neutrality was actually a better position to take than positive and negative opposing views.
What do we know about Mark Carney and his views on cryptocurrencies and the wanting any innovation in the digital asset space and wanting regulatory clarity?
So historically, from what we've seen, because as he's been prime minister, we haven't seen any recent developments or statements regarding our industry. But historically, he's been very pro central bank digital currency and very pro blockchain innovation. We are hearing that there are members within his ministry and caucus that are very pro digital asset space and interested in within this innovation. So we're definitely hoping to see a more positive lens from our prime minister coming towards this industry. But I think it's going to take the right policies put in front of his desk that help him understand the actual economic benefits that this industry brings, the jobs, the growth, the ability to support meeting a net zero standard through utilization of the technology. So,
and how much are we dependent on the central government of Canada in Ottawa versus the other provinces of Canada to make regulation?
So I would say, like, if we're looking at provincially leading the pack, it would be Alberta. So Alberta's taken a very strong position on this industry. We have the premier. She's actually had multiple ministers that are mandated to support the file. A lot of digital asset miners are looking at coming into the ecosystem. So they've made it very clear, even travel to events in the States that are put on by the Texas Blockchain Council. Alberta's open for business for this industry. Our Alberta Securities Commission regulators are considered one of the most friendly in Canada. Of course, they focus really strongly on consumer protection, but a lot of companies come in to engage with our regulators first. We have some of the most crypto-friendly banks through ATB Financial. Of course, it's not guaranteed to get a bank account, but they are always willing to explore and see if you're within their risk tolerance. So we have friendly government, friendly regulators, friendlier banks. We'd love to see that taken all across Canada, but right now we haven't seen that coming from other jurisdictions as of yet.
All right. Well, Kalea, thank you for joining us with your insights.
Thank you so much for having me here.
All right, that was Canadian Blockchain Consortium Executive Director Kalea Carrington. Now, will Drake make an appearance at Concensus? You know, Toronto is the home of crypto tech and Drake, Ben. And folks on Myriad Markets are placing their bets on whether the King of the Six will make an appearance at Concensus 2025. Let's take a look at what the poll says right now. We have 4 prediction markets set up on Myriad Markets, 3 of which are points markets. So, folks, just for fun, they are: will Drake show up in person at Concensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman tweet more than 20 exclamation points during Concensus? There is one market that you can bet USDC against for our heavy bettors out there, and that is, will Bitcoin hit $110,000 during Concensus? I like that one. I mean, Concensus has a history of raising.
Historically, that's true. There has been a
FOMO.
consensus effect on the price of Bitcoin, so we'll have to see if that happens again.
Join in on the fun at Myriad Markets. Meanwhile, Coinbase is the largest U.S. crypto exchange with over 100 million users worldwide. Its Canadian arm, Coinbase Canada, is registered as a restricted dealer with Canadian securities regulators, making it the largest international crypto exchange registered in Canada. And joining us now with more is Coinbase Canada CEO Lucas Matheson. Lucas, thank you so much for joining. So we just had a whole conversation on how Canada is addressing the crypto industry and innovating and such. So where is Coinbase Canada positioning itself, especially with news that we've just heard that Robinhood is acquiring WonderFi, and so there's competition coming in?
Yeah, Canada is actually a thriving crypto ecosystem. It's the third most crypto-aware country of all the international geos that we operate around in the world. And Canadians generally really understand the opportunity for crypto adoption. So Coinbase has been building a business here in Canada for the last couple of years. As you mentioned, we're registered as a restricted dealer under the CSA. We're pursuing our CRO registration to get our full dealer status. And our role here is to help expand the opportunity for Canadians to get access to digital assets. And we work very closely with regulators to provide more regulatory clarity in market and expand the types of products and services that Canadians can use. Today, we're actually launching our electronic fund transfer, which allows users to connect directly to their bank accounts and transfer more money in and out of their bank accounts. It's the most requested feature that we've had in our app over the last couple of years, and really excited to be able to service a more broad, diverse group of Canadians and higher net worth individuals that are looking to move more money in and out of Coinbase. So yeah, I'd say crypto is thriving in market right now.
There was also news that Coinbase had acquired Deribit for $2.9 billion to establish dominance in the derivatives market. Is that going to be a product available to Canadians? I know Coinbase Global had that deal going on, but will Canadians be open to that market?
Absolutely. We're really excited about the acquisition of Deribit. It positions Coinbase to be the number one, to have the most comprehensive suite of crypto derivatives in the world, and we're really keen to bring it to Canadian market. One of the opportunities for us as an industry in Canada is to work with our regulators to expand the opportunity, and this includes options, derivatives, leverage, and products like yield on USDC. And so we have a lot of opportunity in Canada to expand the types of products that we bring, that we can make available to Canadians. And that's really the opportunity for the industry over the next couple of years.
How do you see the recent election with Mark Carney coming in as Prime Minister? How will that change the conversation around policy on crypto?
Yeah, we're really excited to work with Mark Carney and his new administration. Yesterday, Minister Champagne was announced as our new finance minister, a key role in supporting crypto adoption in Canada, specifically around regulating stablecoins, which is a key theme for us in the industry. We're very keen to have our federal government recognize stablecoins as a payment instrument. Currently, we are defining in Canada as under our securities regime, and the direction of travel all over the world is to treat stablecoins as money, define them as money through market structure bills, and to make sure that they can be fully utilized as they were intended. And so one of the opportunities that our industry has been working on over the last 2 years, specifically with our federal government, is regulating stablecoins at a federal prudential level so that we can integrate it into our Retail Payments Activity Act, our open banking, and allow Canadians to use stablecoins for everyday payments.
What is the state of stablecoin offerings at Coinbase? I mean, Tether is the largest stablecoin issuer by market cap, followed by USDC. Coinbase also has its own stablecoin. So, how is that? What product? How are those product offerings being offered on Coinbase right now?
Yeah, so yesterday actually we made an exciting announcement that Coinbase invested in StableCorp to help partner with StableCorp to bring QCAD to market. QCAD is a Canadian denominated stablecoin that has been working over the last few years with regulators to bring QCAD to market. And we're really keen to bring a Canadian denominated stablecoin into market. We need to make sure that Canadians have access to digital assets and be able to diversify and use stablecoins in market. And we're excited to have a Canadian denominated stablecoin and hopeful that over the next year we can bring that to market successfully.
And how is Coinbase interacting, engaging with policymakers to influence crypto policy in Canada?
Yeah, one of the big initiatives in Canada right now is Stand with Crypto Canada. It's actually been a huge success. We've had a lot of people sign up to Stand with Crypto, and the idea with Stand with Crypto is that we gather advocates in Canada to help bridge the gap between our members of parliament and their understanding of the opportunity for us to embrace this technology and integrate it into our economy. And so Stand with Crypto is a really great opportunity to help us connect our constituents with their MPs. But more broadly, Coinbase is very active in working with our Bank of Canada, working with members of parliament, and working with policymakers and regulators to help define a clear path for regulation in Canada.
Apart from stablecoins, what other things would you like to see policy-wise?
Aside from stablecoins, the things that we're really keen is just helping expand the pie. So today, as an example in Canada, if you wanted to buy a digital asset that was in Bitcoin, ETH, Bitcoin Lite, or Bitcoin Cash, you are limited to $30,000 a year. And so we have quite a narrow scope of regulatory opportunity in Canada. And derivatives, leverage are two of the areas where I think we have a significant opportunity. Following on the back of our acquisition with Deribit, this is a natural extension of crypto solutions, and derivatives and options are an important part of an investment strategy and profile. And we're very keen to bring products like that into Canada to help Canadians.
I just want to follow up on your comment on Stand with Crypto. I mean, in the United States, Stand with Crypto, as well as other blockchain, crypto policy lobbyists and whatever, had a huge impact on the U.S. elections. They went in there and they supported candidates on the congressional level as well, able to eliminate Sherrod Brown, someone who really hated Bitcoin and cryptocurrencies, was able to get an incumbent like him off, and someone who's more business friendly into his seat, more friendly to crypto as well. So do you see that impact happening in Canada? Will it become an election issue?
So we just finished an election in Canada, and our hope for Stand with Crypto is that we can educate our member of parliament, our new cohort of elected officials in Canada. And one of the exciting things that we saw with Stand with Crypto in the U.S. through the U.S. administration was that we saw a Congress educate themselves on the opportunity to embrace crypto. And now we see, 80% pro-crypto on both sides of the House, 90% in the Senate. And the goal with Stand with Crypto here is to educate and bridge the gap between some of the misunderstandings of crypto and the opportunity for us to build a national strategy in Canada to embrace this technology, to prioritize it at a federal level, and to put people in charge of coordinating across our government. And so our federal government has a pretty significant opportunity to embrace this technology and to prioritize it. And Stand with Crypto, I think, will help bridge that gap and connect constituents with our appreciate that Canadians care about crypto. Canadians are passionate about crypto. We have, as I mentioned, we're the third most crypto-aware country of all the international geos that we operate in. We always say Ethereum was founded here, and Canadians have a sense of pride around the fact that we used to be leaders in crypto here in Canada. And we believe that we have an opportunity to embrace this technology and to empower Canadians to build on Web3. As you know, we have an incredible, diverse group of Canadians that are building in Web3. We have a very strong university system, strong computing science programs. Thousands of Canadians are building on-chain and in Web3. And it's important that we provide that regulatory clarity so that these businesses can help drive growth and economic growth in Canada.
All right, yes, seize the opportunity, seize the day. Lucas, thank you so much for joining us.
Thank you.
All right, that was Coinbase Canada CEO Lucas Matheson. We're going to take a quick break. Coming up, we've got the Tezos co-founder, Arthur Brightman. speaking with us next. That was my Can you speak, Carrie?
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Welcome back. Tezos is a self-upgrading blockchain platform known for its energy-efficient proof-of-stake protocol supporting decentralized applications and smart contracts. Its native token, XTZ token, has a market cap of about $700 million, ranking 103 of all cryptocurrencies tracked by Coin Market Cap data. Here to update us on the state of Tezos is co-founder Arthur Brightman. Arthur, thanks for joining us here at Concensus.
Thanks for having me.
So Tezos launched in 2018, had some exciting developments. I remember seeing tokenized art, gaming. It's dropped off on the chart a little bit in terms of daily transactions. I saw it peaked in 2022 with about 300,000 transactions. Nowadays, it's about 50 to 100. And so the token is also down 90% from its 2021 peak. So I guess, what's the game plan to get more people using Tezos, to get it on the map in daily transactions again?
Well, first of all, today we have a lot of transactions on Etherlink. Etherlink is a layer 2 platform which has been built on top of Tezos, which is entirely compatible with Ethereum, and there's a few 100,000 transactions on that on Etherlink. So if you look at the total amounts, there's actually way more transaction now. I would say most tokens today trade on sentiments more than anything, but there's no lack of excitement in what's happening inside the Tezos ecosystem. We have more builders coming, joining and creating applications on Tezos. So I think there's a matter of visibility. Definitely a lot of attention has shifted away from Tezos towards other projects, and it's regaining this attention and showing that there's a lot of exciting things happening on the network.
In terms of exciting things happening, what are the biggest use cases? Is it stablecoins? Is it art? Is it NFTs? What are you bullish on in terms of projects on Tezos?
Look, at the end of the day, Tezos is a layer 1 platform. It supports enshrined rollups, so it is for everyone. It is for everything. There are exciting use cases in art. We have an absolutely fantastic art community on Tezos L1, which is extremely active and producing beautiful art. You can check it out on object.com, for example, or Teia, which are some of the major platforms. We've had new exciting projects launching on Etherlink as well, like Henji, which is an order book DEX for trading in DeFi, like Superland, which aggregates yields from different platforms, and also recently launched Uranium.io, which is a platform where you can actually buy physical uranium. You get beneficial ownership in physical uranium on chain, and you can do that today.
Amazing. What about meme coins? Are you interested in that? I mean, that was obviously a strategy with Solana a couple of years ago. They were suffering a little bit, but they definitely had a sort of bonk structured strategy around meme coins that's really lifted their profile. Is that something you would do?
There's a few meme coins platforms on Tezos. I don't think any of them are sparkly taken on, so we have a few of them on the Tezos platform. People are experimenting. Pro experimentation. I think that on the one hand, the meme coins, I don't think they bring anything like very, very tangible. I see it as a form of like fun and gambling. On the other hand, I think a lot of them are playing cards on the table by saying this is what it is, so why not? But that personally, it's not what I'm most excited about. But like I said, Tezos is a platform for everything and everyone, and if you want to have a meme coin, this is a great platform to launch it.
What regions in the world are you seeing particular development use of Tezos? And maybe you could tell me from the ground those particular stories that are emerging.
It's a bit everywhere, but we see some traction specifically in Europe and Southeast Asia.
Okay. And tell me about what on the ground are you seeing in terms of stories that people using Tezos and I guess transitioning into this new digital age?
On the ground, that's a wide question. Look, I think the industry as a whole, it's not just about Tezos, is in search of use cases, and I think it's one of the major, problem in our industry, which is that Bitcoin came out in 2009, and there's still only a few killer use cases that exist today for cryptocurrencies. Stable coins have been one of the major ones. It's real, like people are really using them for remittance, they're using them for payments, they're using them for savings. Store of value has been a narrative, but by and large, the main use case for a lot of this has been buying and selling tokens. That's what a lot of the industry is about. That's what DeFi is about. DeFi essentially supports people buying and selling token. And so I think we need to move past that. And that's why I'm excited about the tokenization of assets like uranium, because you're actually bringing something. People have tokenized gold in the past, but you can buy gold anywhere, right? There's a million ways to own gold. There was no way really to own physical uranium before that unless you were willing to pay $4 million. So unlocking new markets is something that I haven't really seen happen, and I'm glad that this is being pioneered on Tezos.
You mentioned Europe and Asia seeing activity there. Now that the Trump administration has come and they are opening up crypto policy, trying to get regulatory clarity, inviting entrepreneurs to come back, do you see potential of entrepreneurs returning to the United States?
I think the entrepreneurs are they're very courageous breed, and a lot of them stayed and did build in the United States even when the government was actively trying to shut down the industry. So it's shown great resiliency. But yes, I think we will see more ventures starting in the United States as a result of the government not actively trying to kill the industry, which is already immense.
All right. Well, Arthur, thank you so much for joining us.
Thank you so much for having me. Thank you.
That was Tezos co-founder Arthur Brightman. All right, let's check in on the top headlines in crypto today. It's Wednesday, May 14th, 2025. This is a CoinDesk Daily Special from Toronto. We're coming to you from the CoinDesk studio at Concensus 2025, sponsored by MoonPay, the global leader in crypto payments, building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. For more news in your pocket, download the CoinDesk mobile app, available on iOS and Android. All right, checking in right now, Israeli crypto trading platform eToro is going public on the NASDAQ, raising about $310 million from investors as it sold 6 million shares at a price of $52 a piece under the ticker eTor. The listing values the company at $4.2 billion. It is the first firm to go public after a market pause due to U.S. tariff concerns and global trade uncertainty. Cantor Equity Partners disclosed a $459 million Bitcoin acquisition, purchasing over 4,800 BTC at an average price of $95,320 per coin through Tether as part of a merger with 21 Capital, according to a regulatory filing. The deal positions 21 Capital, led by Strike CEO Jack Mallers, to launch with over 42,000 BTC, making it one of the largest public Bitcoin treasuries. 21 Capital is being launched by Brandon Lutnick. He's the son of U.S. Commerce Secretary and Cantor Fitzgerald Chair Howard Lutnick, by a SPAC structure using Cantor Equity Partners. Brandon Lutnick will be speaking at Concensus at 3:10 p.m. this afternoon. Finally, Robinhood is acquiring Canadian crypto firm WonderFi for $179 million in an all-cash deal valuing WonderFi at 36 Canadian cents per share, a 41% premium over its prior closing price. The deal is expected to close in the second half of 2025. WonderFi's platforms BitBuy and CoinSquare will bring Robinhood into Canada, ramping up competition for exchanges such as Coinbase and Wealthsimple Crypto. Let's take a look at the chart of the day. For XRP prices could surge to $3.40 after a bearish head and shoulders pattern failed, with CoinDesk Research's AI-assisted analysis predicting a rise to $2.85 by June 1st, driven by a breakout above the $2.40 resistance level. The bullish outlook is bolstered by XRP trading above its 200-day moving average and high trading volume, signaling strong trader confidence. Market sentiment remains positive due to Ripple's legal victories against the SEC and optimism surrounding the crypto-friendly policies of the Trump administration. For more updates, head on over to Coindesk.com. METI token surging 60% on the monthly chart, rising with the crypto markets. METI's decentralized infrastructure deploys a dual network ecosystem combining the Andromeda network with the AI-optimized Hyperion Layer 2 blockchain, designed to power high-performance Web3 applications like DeFi, gaming, and on-chain AI. Joining us now with more is Natalia Amelin, decentralization coordinator at METI. Natalia, thank you so much for joining us.
Thank you for having me here. Excited to be here.
So is alt season back? I mean, we saw Ethereum climb, surge, leading the crypto markets. Are you seeing similar returns on METI?
What I see, because I think in the markets we see a lot of signals, and some of them are driven by fundamentals, and some are driven by the different sentiments that are created by different economic statements that are being made, or political statements, etc. But what I do see is the excitement and creation engine in the ecosystem that is really churning. And I think we're going to see a lot of exciting things coming out. And I think that the fundamentals will continue kicking us off.
So tell me what METI Hyperion is, how its AI-optimized Layer 2 blockchain differs from traditional Layer 2s such as Optimism, and Arbitrum.
So Hyperion is different in several ways. We had to think about what are the traditional blockchains are lacking and what we need in order to bring the AI inference and AI applications on chain. And what we see, of course, is the lack of current blockchain's ability to handle the volume and intensity of applications and data. So the L2 Hyperion is instant, high throughput layer 2 that is optimized for AI applications. The way it differs from the other L2s is, for example, it has the METIS has the decentralized network of nodes. And these decentralized nodes actually become, their role is kind of twofold. It is, first of all, it's as sequencers, they are used to process transactions, but with them, we can rebalance the load effectively, and this helps with the throughput that we see in our network. Also, it's another purpose of that is the decentralization. You don't want to have the whole keys to your purse in one person's hands in a blockchain, generally speaking. So with having the decentralized sequencer nodes, this risk is minimized.
So you're Canadian, I believe, or? Yeah.
Sorry?
So, are you Canadian?
I am Canadian,
good,
yes.
Good. So I'm just wondering what it's like to be an entrepreneur here in Canada working in crypto. How do you feel about that?
I think it's different, right? And I think in Canada, we can definitely benefit from the improved I guess, improved business climate for the crypto companies. But in general, I wouldn't say I wouldn't say we have any problems, right? I think what I see is some of the impediments to the progress is a lack of regulatory clarity still that exists in Canada around the firms operating here. And because of that, you still see the firms choosing to incorporate or move to the different jurisdictions, thus making Canada to miss out on the economic potential that is here. So I think that's a challenge. I see in the US recently there has been a trend with providing a little bit more certainty for the crypto companies through regulation and clarity. And I think we could benefit from it here as well.
Absolutely. It's fascinating. I mean, everyone is jumping into artificial intelligence. So tell me a bit about how Hyperion's approach differs from, say, more centralized applications like ChatGPT and Gemini.
Yeah, I think what we see, and that's exactly why we started creating our AI stack at Metis, and Hyperion is part of it, that we see several problems in AI industry, right? And I mean, we can talk about it forever, but very briefly, it's all boils down to a lack of verifiability and understanding what is actually happens, and a lack of human control over it. Today, we see that the models or the, I guess, the market really dominated by a large generalized models. And these models are not necessarily human aligned, or we don't know that. What I mean by human aligned is we don't know if their actions, behaviors, and proposed decisions and outcomes are aligned with human values. It appears to be so on the surface, but ultimately it's the test that AI still needs to pass, and we do not have a way to verify it. And I think that's one of the problems. Second problem is that we believe that the problem of data alignment comes from the data being sort of undefined, unpriced, unvalued, and as a general rule, it's available on the internet. So the large companies scrape it and use it in their data models. But there is no really benefit for you as a data provider, or me. And we think that because of that disconnect, it's very difficult to make AI align with human values. We think for that, humans need to have a governance over what kind of data is used to train AI.
Right.
And that's where our AI building blocks are coming through. So Hyperion is one of them. It's a high-performance network that allows for the AI inference even to run on chain. But also we're building the less AI, which addresses exactly the problems I talked about, the major one, data alignment. And that will be the next kind of, you can think of it as the platform for the next AI economy, where we're introducing appropriate incentives for quality data, and you as a user can take control over it.
Fascinating. Okay. I mean, we could say so much more about the artificial intelligence conversation. Maybe if I could just sneak one more question in there.
Of
but
course.
If you could paint the utopian vision of what AI will lead to us versus the dystopian one, what would those futures be?
I think mine is at this point. Maybe right now, mine is a bit dystopian too.
Okay.
Because we still need to build it, right? There's a lot of work that still needs to be done in order to deliver on the true promises that AI has and have it built
So
in a way.
what does the dystopian future look like? I mean, AIs control all our data. We're basically carbon bodies servicing their artificial.
You know what? That's not the world I want to live in.
Okay.
I still want to be creative contributor to the society. I want to have AI as my friend and trusted advisor. Let's put it this way. Who can help me become a better human, more intelligent, to learn more, to act fast, and do faster research, etc. I don't want it to take over my life. And I think a lot of people will agree that our life is pretty darn good, and we need to live it and not AI.
All right, we'll leave it at that. Natalia, thank you so much. Exciting stuff.
Thank you.
All right, that was Metis Decentralization Coordinator Natalia Amelie. Also, folks, follow along with us on social media to get a glimpse at some of the best moments here at Consensus 2025. Let's see what people are saying right now. Oh, we've got Anthony Scaramucci. Wow, that looks really nice. He's at one of the massage
do one of
stations
those myself,
at
yeah.
Consensus. It's a must, given the stress this industry causes us. By learning to stay calm and stack sats. Lovely. We love that, Anthony Scaramucci. We love the Zen vibe you're bringing to Consensus with that. Oh, we've got Thomas Chow. Crypto won't be considered a new asset class until it's a 20 trillion market. Crypto has not come of age yet, per the panel at the main stage that we heard earlier this morning. Gold is a 20 trillion market class. We're almost there. We're at 3 trillion with Bitcoin just past that milestone. All right. And we've got Samu and one of our colleagues here at CoinDesk. We are so unbelievably back. We've got blockchain video on the conference floor. We've got folks visiting that. I'm curious to see what. I remember the days of getting blockchain video. I'm curious what's inside.
Blockbuster.
Yeah.
Yeah.
All right, blockbuster video. I'm already forgetting.
Who
All
is
right.
this person here?
Berachain is a layer 1 blockchain focused on DeFi, innovating a unique proof of liquidity consensus that blends staking and liquidity provision. Its testnet launch in late 2024 drew significant developer interest, signaling strong ecosystem growth. Joining us now to discuss is Smokey Bera, co-founder of Berachain. Smokey, thank you so much for joining us. I'm so glad.
You're speechless.
I'm speechless. But tell me, what's going on with the anonymity for folks who may not be so familiar with crypto culture?
Yeah, certainly. I can imagine that a couple people were a little bit taken aback by this, so apologies in advance for any scares. I think the root of Berachain was very much in crypto native culture. We started this more than anything else as an NFT project for fun more than anything else. Like close to 4 years ago in the summer of 2021. And what spawned out of that was now a layer 1 blockchain that's been live for the last few months, millions of users, a couple billion in TVL sitting on the network, and a pretty active and raucous community. I think the anonymity came from a number of different angles. One was that as we were starting to build Berachain, that like summer 2021 timeframe, I think the regulatory climate was meaningfully less certain when it came to crypto as a whole. And alongside that, we saw that some of the best developers that we actually knew were not, I'd say, those who were crypto natives devs, if you will, but there are people who were spending their 9 to 5s or, like 3 hours a day working at a FANG, and then spending the rest of their time, I'd say innovating in the trenches in DeFi and consumer, in NFTs and social and everything in between, right? And we very much thought that by actually building ourselves as anonymous founders, we were enabling a lot of that ecosystem to actually form in a manner that gave those people a shot on net, right? Whether it was that they had their own family and they weren't really ready to take that leap as of yet, or whether that's simply were unsure about regulatory, or whether they wanted to dip their toes. I think that actually lowering the bounds for incoming new developers was something that worked very much in our favor, while also very much allowing us to play to a crypto native audience of those tens, let's say hundreds of thousands of people that live their lives on chain. And that actually became a really good group of initial community members, sticky users, and folks who truly want to engage with interesting new primitives being built in an on-chain world.
Okay. And I love the Bera community. There's definitely so much vigor in the Beras, which is amazing. Do you think that with the regulatory clarity that is developing, especially in the United States now with the Trump administration, if that becomes more progressive, do you think people will be more open to being not anonymous?
Yeah, I think so to a point. That being said, I feel like every day we see different types of threats pop up. In that even in Toronto, we've had various CEOs of crypto exchanges get kidnapped. I think earlier this week we saw someone in France, CEO of a large company over there, have their family attacked. There does remain an increasing concern around security, which is like terrifying in a different sense, right? So I think I see both sides, truly. And I don't think we've ruled out any possibilities for ourselves in the future. On one hand, I imagine that we could see a bunch of pushback if people are like, "Oh no, they sold out. They're finally doxed and in the public." But at the same time, I think lots of people have met us at conferences. Lots of people have seen us wandering around at events. Thankfully, I do not walk around with a bear mask on all the time. That might be, both impractical and a bit defeating for the purpose.
And maybe hot as well.
You know what? It's not too bad over here. It's an outdoor panel in Singapore that really gets you.
I hear you on the concerns with the kidnapping. I mean, we do have people attending this conference who have been kidnapped for their Bitcoin and crypto and whatnot. But we also want to talk about Berachain. So, I mean, for a 10-year-old, explain to us what proof liquidity is, and why we need another layer 1 blockchain in this very crowded and competitive ecosystem right now.
A great question, a very fair one. I think that if we're trying to do like the ELI 5 version, if you will, the best way to think about it is a little bit like the App Store in a sense. And I think that many chains can use this analogy, but the real value here, the real differential, if you will, between a base app store, if you will, and a Berachain app store, is that the app store itself is actually helping to power and give incentives and rewards to its applications. As we see it, or if you look at a typical proof of stake chain like Ethereum, Avalanche, Solana, whatever that might be, they have a carrying cost, right? The chain or the application, whatever you want to, the base layer or the operating system, if you will, has a cost to live. It has to give out emissions to validators, these nodes that secure the network. And normally they're paying for security, which is great. But at the same time, one has to note that security doesn't really do the job of growing an ecosystem by itself. So if you really want the App Store to flourish, and if you want to have lots of applications that people want to use, one could argue that the best use of those emissions or those costs or those rewards that have to go out should actually be towards the apps themselves. So if one is to look at Berachain in a nutshell, the thesis is that the carrying cost of the chain or its emissions should go towards supporting applications and users of those applications, as opposed to people who are simply statically holding a native token or sitting idle, if you will. So in the classic blockchain context, it's taking inflation and it's pointing it into the app layer as opposed to out to the validator layer. And in that operating system context, it's like saying, by using, Windows or Microsoft Office, you're actually getting rewarded for using Word and Excel and PowerPoint along the way.
Okay.
And why do we need another L1 blockchain, which is a very reasonable corollary there, is because right now there actually are 0 blockchains that exist in this manner, right? Where they're actually, I'd say, mechanistically designed to drive value to their application layer. On the other hand, that is really Berachain's core purpose. It sits and it exists to effectively reduce the customer acquisition cost and accelerate, positive user behavior loops within the application layer itself. And if we were to believe that, a future of chains is dictated by breakout apps and things that one can actually do on chain that you cannot quite as easily do off chain or in the real world, if you will, then we almost think about this in a venture portfolio or Y Combinator-esque approach, right? If you say there's going to be 100+ applications building on this chain, Berachain's role here and Berachain's ability is to actually help accelerate each of these and give them a better shot on net by reducing their customer acquisition costs or user acquisition cost, increasing LTV. Then you hope for 3 or 4 unicorns out of that batch, and that can spawn the next Uniswap, the next pump fund, the next virtuals, the next whatever you want to call it that has been a breakout in crypto. And that's sort of the thesis at a very high level.
Do I have Ethereum was born in Toronto, in Canada. Do I have it right that Berachain was also a Canadian-made project? And what would you want to say to policymakers to help this industry thrive?
Yeah, 100%. I mean, I think we've actually seen reasonably meaningful steps in the right direction from policymakers recently. Like even the OSC has recently been, I think, looking much more favorable.
But this is a Canadian project. Yeah.
Yes, it is. So Berachain is, like I'm born and raised in Toronto. My co-founders are born and raised in Toronto. We all went to school at Waterloo at different points in time. So I think that there's a lot of Canadian blood over here. And a lot of the team is folks who are ex-Waterloo, ex-U of T. And we have our offices in downtown Toronto as well, along with satellite ones in Milan and Bangalore and so on and so forth. But we're very much proudly Canadian. And I think that the biggest thing I'd be thinking about for policymakers is how you actually encourage Canadian companies to not experience the same brain drain in crypto that they're seeing in everything else, right? As in, I think it's still very common, especially for our old classmates at Waterloo, to head off to the Valley or to New York or, wherever they might want to go in the US at this stage of life. Crypto has always been a little bit less problematic, in my opinion, in Canada than the US. And I think there is, an advantage to really pressing that. Yeah, and then I think it'll also be interesting to see if we see the breakout of Canadian stablecoins. I know that we've seen initiatives from Wealth Simple, et cetera, type players around CAD-C and whatnot, and I think that could also be quite healthy as that market explodes.
All right, Smokey, that's unfortunately all the time we have for you right now, but I would love to speak with you further later on. Okay, that was Barra Chain co-founder Smokey Barra. Up next, Ripple has entered the stablecoin race. More after the break.
Crypto? Never miss a market move with our new mobile app. The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you, add them to your watch list, and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise, curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
Welcome back to CoinDesk live from Concensus 2025. I'm Jen Sanasi with Christine Lee. Our next guest is a longtime fintech executive who's calling 2025 the year of the stablecoin, and he's leading that charge at Ripple. Jack McDonald, Ripple's Senior Vice President of Stablecoins, join us now. Jack, welcome to the show.
Thanks for having me.
Well, I got to start here, Jack. We have stablecoin legislation that we thought we were going to get in the United States. Now it's looking a little bit rocky. You called it the year of the stablecoin. Is it still going to be the year of the stablecoin?
Yeah, stablecoins are having a moment. It's a bit of a thing. I think politics are playing out, but the conversations we've been having, we have a full policy team in Washington, D.C. that keep their ear to the ground, and it certainly feels like stablecoin legislation is coming. Still working through some nuances, but my sense is it's going to come, and it's going to come sooner rather than later, which will be a huge unlock for the industry.
Is it becoming a bipartisan issue? So we're seeing the Democrats reportedly delay stablecoin legislation, concerned about ties with crypto and President Donald Trump, that he is unjustly enriching himself using his public office for personal enrichment. But is it becoming a partisan issue now?
Well, a lot of politics become partisan, and I'm not, here to talk about the nuances of the bills as much as I think there's a general direction of travel that both sides of the aisle want to have a more meaningful environment, a more constructive environment in the U.S. for digital assets. And stablecoins, I think, represent really the lowest common denominator. It's really the least crypto that you can have, and so it's something particularly for newcomers to the space to really wrap their heads around because of how they work. And certainly and the whole premise of this legislation is to provide regulation and clarity around stablecoins. And so being dollar-backed, being regulated, I think is something that both sides of the aisle are getting behind.
I mean, there was talk on the Republican side that they were hoping to have stablecoin legislation by the summer. Trump has said that. Do you see that happening?
I'm optimistic, but I'm a half-full kind of person.
I was going to say, you're one of the only optimistic people I've heard from on that topic.
There's been talk that it's going to be part of a market structure bill. There's been talk that it's going to be on a standalone basis. My sense is that there's a lot of motivation and momentum behind it, and I don't want to throw a date out there, but my sense is we're going to have stablecoin legislation here fairly soon.
We talked to a lot of stablecoin issuers at CoinDesk, little platforms that offer stablecoins.
For you, what is that killer use case for stablecoins? Does it have to do with remittances? Does it have to do with real world assets? Does it have to do with providing infrastructure to the traditional financial institutions and rails? What's that killer use case for you?
Am I only allowed one answer?
Yes.
Can I have two?
Okay, you can have two.
So clearly global payments, cross-border payments is right at the crux. I think most people believe that stable coins are the killer app for cross-border payments. Ripple's had a front row seat in that business since our inception, and certainly a part of the origin story. And payments are a broad range: remittances, treasury movements, charitable donations, payroll, paying of consultants and whatnot. We're really, really excited about capital markets as well. The recently announced acquisition of Hidden Road is a quantum leap forward, I think, in terms of our ability to lead the charge of bridging the divide between traditional finance and crypto Web3. Stablecoin is right at the crux of that. We'll be able to use a stablecoin as a piece of collateral to cross-margin assets between those two different industries. And so I think the next couple of years are really going to play out in meaningful ways about how capital markets are really reinvented by using stablecoins. So I'm really excited about that part.
Okay. Well, I mean, Tether is the largest issuer by market cap. And how do you see RLUSD competing and trying to grab a share with that? And do you see that dominance by Tether coming down below 50% in the coming years?
Well, in many ways, hats off to Tether for starting this industry, right? I mean, they've created a meaningful business, Circle to follow them. The two of them dominate the space today. We're not entering the space because we think it's not going to grow and it's strictly going to be a market share game. We think the space is going to grow meaningfully. So you talk about the addressable market, and whether it 5Xs or 10Xs, from here over the next couple of years, we're going to be a leader in that space, and we're going to take our fair share. I think different stablecoins have different use cases that they're targeting. They also have different business models that they're using to approach. Our focus is on serving institutions. We want to do it in a regulatory compliant way, which is what all the Ripple businesses have done. It's always an enterprise focus. It's got regulatory compliance at the forefront. And so we're approaching the market going forward a little bit differently than some of our competitors. And we think there's meaningful upside for us. We're quite excited. The launch of RLUSD is ahead of plans. We've got some great partners coming on. And so we're excited about the future. We're excited about what we're going to do with Hidden Road.
All right, and before we let you go, what are you excited about for Concensus? This is our first day. It's the morning. A lot of events still to come. What are you looking forward to?
Well, it's just a great atmosphere here. Obviously, there's some positivity in the air with all the regulatory changes, the price of Bitcoin. I was just talking to your next guest about Bitcoin over 100 has this mood-enhancing element to it overall. So I like the vibe here. I like the builders building, and it seems like the traditional institutions are also leaning in. So we've got a good mix of people here, and I'm excited about the next couple of days and appreciate everything that the hosts have done to have us here.
I know you said that. I know that we said you have to go, but I want to talk about Bitcoin over 100,000 for just a second. We have a prediction market on Myriad Markets at Concensus 2025. People are putting bets against if Bitcoin will hit $110,000 while we're here. Maybe you're not allowed to make a price prediction, but what do you think? You think we could get there?
I'm not allowed to make a price prediction.
Okay.
I think XRP will outperform. How's
Wait,
that? Yeah.
here's another one. Okay, we heard also earlier that for crypto, for Bitcoin to be considered a asset class that institutions really understand, it has to be 20 trillion. For the stable coin market, where do you see that market cap hitting in the next 5 years?
Very interesting question. I don't think about it from a market cap perspective. I think stablecoins are taken very seriously today, which is part of your question. And I think regulators, and there are conversations going on right now around the world with different regulators. If stablecoins can be treated as good collateral, if it can be used as regulatory capital with the regulators, for example, that is a huge unlock from a capital market standpoint. And the logic behind having a stablecoin treated as good collateral or reg capital is because the underlying assets for some issuers like us have treasuries, cash, and government money market funds. And those assets are treated as good collateral. So those assets are, and you just simply have a digital representation held in a bankruptcy remote account, held by a fiduciary, there's really no reason why they shouldn't be. And if you can pledge a stable coin as collateral, the sky's the limit in terms of where this market can go.
Jack, thanks so much for joining the show. Enjoy the rest of the conference. All right, that was Ripple's Senior Vice President of Stablecoins, Jack McDonald. We're going to take a quick break. We'll be right back. Thank you. Yeah.
U.S. President Donald Trump's second term in office has been a roller coaster ride for the markets, driving Bitcoin to an all-time high of $109,000 and plunging U.S. stocks to historic lows. Joining us now to discuss is Anthony Scaramucci, founder of Skybridge Capital. Anthony, welcome to the show.
Good to be here. Thank you, guys.
We were just talking about that massage you got this morning.
My back is my back better? I don't know. Does it look good from the angle? I don't know. I'm working on my posture, ladies.
Sitting up straight.
Is this
I like
okay?
it. Yeah.
Yeah, when you're vertically challenged like me, every little bit of posture helps.
You got to get ready
Positive posture.
for the crypto ring.
Yeah. By the way, that's a great idea. Getting massage. If you speak at a CoinDesk event, you get a massage.
You gotta see it to believe it, folks.
Trying to market for you people.
All right, Anthony, you famously lasted 11 days as the White House communications director. You've seen firsthand Trump in the office. You've campaigned with him. What has changed from his first term to his second term in terms of how he's approached the presidency?
I think the central thing that has changed is that he is more confident in himself with that job. I think and I think this would be true for anybody that's had the job. It's a job that George Bush, Bill Clinton, they would all say for you that no job can prepare you for the job of the U.S. presidency. So Donald Trump joins Grover Cleveland as the only president to lose an election and then regain the presidency. So those are the only two figures in American history that actually had experience at doing the job. And so he's way more comfortable in the job. And he made a decision, rightly or wrongly, to clean out all establishment Republicans from the Republican Party. So people on staff with him now have sort of taken that MAGA test. And therefore, whatever Donald Trump wants to do, President Trump wants to do, we're going to do. There's no pushback. Gary Cohn, as an example, they probably wanted to implement those tariffs in 2018. Somebody like Gary or Steve Mnuchin was like, all right, we're not doing that, and threw it in the waste bag. And so, I think that it's leading to some volatility and distress in the markets because those things are not great economically. And then the flip side, there's good parts to the president where he's doing some things well. Crypto regulation. I think some of the things he's saying in the Middle East are very positive. But you have this underlying current of nefarious activity that's going to slow things down for people. That's just the facts.
We were just talking to Jack about stablecoin legislation. Stablecoin legislation was really a bipartisan issue, now becoming something that's looking a little bit more partisan. Democrats are saying, they question President Trump's involvement in crypto projects and stablecoins. Curious to hear your thoughts there.
Well, I think it's still going to get done. I'll make a prediction on your air that legislation gets passed before the August recess.
Oh, wow.
That's a bold prediction.
Yeah, it's aggressive, but I think it's necessary for everybody because if you step back, I don't think the Democrats want to deal with Fair Shake, the political action committee that ousted lots of Democrats in 2024. And I don't think the Democrats have found an anti-crypto voter. There are pro-crypto and in some cases single-issue crypto voters, but there's very few anti-crypto voters. So I don't think the Democrats want to be on the wrong side of the stablecoin bill. Are they protesting right now because some of the things that President Trump is doing? I don't like it. I can understand why they don't like it. 2 or 3 days before you're getting re-inaugurated to the presidency, you're launching a meme coin. Let's just go over this quickly.
Yeah.
58 wallets, 10 million apiece. They make over $500 million. 794,000 people lose $1.1 billion on the coin. It's not right, guys. Okay,
Well,
and so they can justify it any way they want. But
Last night,
that's
the New
what's
York
going
Times
on.
released that article showing a company with ties to China has said that they are going to invest $300 million into Bitcoin and Trump's meme coin. And so this is raising questions about buying influence to the presidency and public office. Your thoughts?
Well, listen, if you buy enough Trump meme coin, you can have dinner with the president and get a tour of the White House. So, To me, it's too conjoined. I think you're over the line of what is right. Remember, there's the spirit of the law, and then there's the letter of the law. Even if he's inside the letter of the law, he's outside of what the spirit of the law is, and I think it hurts the country. I think it makes us look bad. So he can defend it any way he wants. It's not right. By the way, don't go by me. Ask Laura Loomer and ask people like Ben Shapiro. They're Trump supporters. I'm no longer a Trump supporter. They are dead set against some of the stuff that he's doing, which is in a direct violation of the emoluments clause in the U.S. Constitution.
Is this grounds for impeachment?
Grounds for impeachment. I'm not sure. I mean, I hope the country doesn't go down that road again. I mean, the only way if Donald Trump was going to get impeached, it would have to be something even more egregious than what we're talking about right now. But you would have to get the Republicans on side with the Democrats. I don't think impeaching him again and having a partisan vote in the House and then a partisan vote in the Senate is the answer to America's dysfunctionality. I wouldn't recommend it.
I want to turn now to Skybridge Capital. Have you adjusted any of your investment strategies based on Trump's more crypto-friendly policies?
No, not really. We sort of same as we've always been. I was on this desk in Davos 3 years ago. We're getting demolished because, we were tied to Sam Bankman-Fried and Bitcoin was at 16,000. Bitcoin, I think, is what, ladies? Where is it now? 103?
Over 100,000 for
yeah,
sure.
So, listen, I mean, we stayed long every one of those positions. And so we're 5-1 from that bottom. I'm not allowed to talk about our performance, but I'll just say this. We've got 35% of our business is tied to digital assets. And so if you just take a look at what digital assets have done over the last 2 years, we've done very well. And but listen, I've been humbled by markets and I've been humbled by life. So I'm not here bragging. I'm just saying we're doing well right now.
Yeah, buy the
We
ticket,
haven't
take
changed
the ride.
anything.
It's going to be
Right,
going to be
exactly.
a roller coaster.
Exactly.
You've got the
Exactly.
gumption
I don't
to
even know if
handle
I
it,
reached
so.
the height requirement for the roller coaster that my life has been, but I'm doing the best I can.
I also want to ask you about the tariffs because that has been a roller coaster ride for the crypto markets, for the stock markets. What do you make of the game that is going down?
It's misguided policy. President Trump's wanted to do that for 40 years. He's got a group of willing sycophants that are willing to implement the policy alongside of him. It doesn't work. The market and the bond market, equity market, bond market, told you that those policies don't work. And so he had to walk back those policies. And so they're even the tariffs right
But
now.
was
are
that
even
his plan
too
all
high.
along?
I'm sorry?
Was that his plan all along?
No, I mean,
Introduce
come on,
these
you know that was it.
incredibly
He's playing
high tariffs.
He's
and then-
playing Let me
Anthony,
give you a
most people who
newsflash.
sit at this desk say that was his plan all
That was
along.
his plan all along. Okay, he's playing 19G chess. Okay, he's not. Okay, he's sitting in the corner eating the chess pieces. He's not playing 19G chess. Okay, and so the plan is not the right plan for America, and it's not the right plan for the integrated global economy. If you want to make the trading system fairer, there were a lot of different ways to go about it that would have been better for the country.
All right,
You didn't need this level of volatility and chaos.
I guess that's true. I have a mental image now of those chess pieces being eaten in the corner.
They look like McDonald's French fries, but they're like shaped in chess pieces, just to give you the full visual.
Just before we let you go, Anthony, I know you have to go in just a minute, but you keep coming back to Consensus. You keep sitting at this desk with us. What is it that keeps
like
bringing
you
you back
I
to
like you guys.
Consensus?
Look, listen. I'm a long time crypto investor now. This is my 6th year in the business. Bought the, I bought my first Bitcoin in October of 2020. We own a lot of Solana. We own a lot of Avalanche, and some other assets, Casper, et cetera. And so hopefully you'll continue to invite. Tell you what, if you continue to invite me back, I'll keep coming back.
Fair. I think that's a deal. And we'll have a massage chair for you ready.
Thank you. Yeah, that was great. Big shout out to the massage team here at Consensus.
Anthony, thanks very much.
Good to be on with you guys.
Always a pleasure.
That was founder Anthony Scaramucci. Welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. MoonPay recently made 2 historic 9-figure acquisitions in Iron and Helio, building on its vision for the future of payments. I'm Jen Sanasi, here with my co-host for about the next hour, Andy Bear. Andy.
Hey, Jen, we're at Consensus.
We are at Consensus. Andy and I do this thing where we just travel around the world and talk to each other. It's my favorite thing to do.
But we're in your backyard now.
We are in my backyard. I am a Toronto native, and so I love that we've brought Consensus here to Toronto, here to Canada. Talk to me a little bit about you coming here. I know you were telling me you used to travel to Canada a lot when you worked in traditional finance. Talk to me about the significance of Consensus being here.
I think it's always been a big scene for the pension community. The Canadian pensions have always done advanced strategies using a lot of derivatives and a lot of global allocations. So it always made sense to come up here. And, you know, it's easier to get here from New York than Boston, you know, and you just fly, you know, hop on a Porter's flight, land in Billy Bishop, and you're right there. So it was wise to have Consensus here in springtime, maybe not in February. That would have been a different experience.
That would have been a completely different experience.
Hong Kong in February, and then, you know, nice place in the spring. So always a delight to be here.
I don't think we would have had 15,000 attendees in February in Toronto. And so I'm happy that it's happening here in May.
Yes, that's right.
Yeah.
So, and looking forward, I guess we've announced. So next year, we've set some dates out. We'll get those later for Hong Kong in 2026, and then down in Miami. So
yeah, next year we're going to be in Hong Kong. We're going to be in Miami. No cold weather for us, but we're going to keep, I guess, the maturity and seriousness of Consensus going. Andy, every time I meet you at Consensus, it feels more serious. It feels more mature. Talk to me about the types of conversations you've been having at the events of the last few days.
A lot of it has been about, I guess, moving crypto from this trading asset class to an investment asset class. To us, as an index company, that means putting portfolios together that people can hang on to for 10 years and not have to worry about picking individual names. So we just did a panel with Anthony, who was just on, and with Jono from Wisdom Tree, who's going to be on with us in a few minutes, and with Pascal from 3IQ about, you know, what would you buy now that you could put in a drawer for 10 years, confident that you're going to end up with cycle survivors on the other end. So we like CoinDesk 20 doing that, and we feel a lot of progress in that direction, certainly since we were in Austin last year.
What did they say? What was their answer?
I think that they've all commented that in the last couple of years, there hasn't been as much acceleration of progress as there has been in the last couple of months. We're catching up with Europe, which is sometimes an unusual feeling when it comes to technology and adoption, especially for investments. So we are catching up. A lot of legislation ahead. We have the stablecoin bills that we're trying to muscle through. Then we have more structural legislation around crypto, more ETF approvals, in-kind subscriptions and redemptions, laws around permitting staking for proof of stake tokens, which Canada has, again, done before the United States. So there's a lot of near-term stuff. I think long-term, we want, I think maybe it was Anthony who said, Wall Street's just a big distribution machine, and they need simple, understandable things to distribute. And I think ultimately that's where we want to get.
That's interesting. I know last year in Hong Kong, there was a little bit of an event for institutional players that happened before the conference. That happened this year?
It did. And, the funny thing about Asia over the last couple of years, a lot of it was about RWA, which to old timers means risk-weighted assets. Why are you talking about risk-weighted assets? Of course, in this generation, it means real-world assets. Tokenization has now landed here, right? And you have great products by Wisdom Tree and by Fidelity and Franklin Templeton, and they're getting used, right? They're being used to enhance collateral. They're being used to keep sideline money still earning. So those are super exciting. Of course, stable coins now up to about $250 billion in TVL. That's super exciting too. Millions of use cases there. All of these things need to sit on blockchains. Yeah. So people, Ethereum is up, 35-40% in the last week since the Petra upgrade. So Ethereum's not going anywhere. Solana's remains strong and has a lot of new products. So it's a really exciting time up near the top of the quality curve. Once you get down into the other stuff, then, buyer beware.
Yeah, we don't need to get down there. Both of our last two guests, Anthony and Jack, said that they think that we will get stablecoin legislation before summer recess. Curious to hear your thoughts there, Andy. And the reason I'm asking you is because most people after this last vote are saying kind of iffy now as to whether that will happen.
We would love to not care. We would love to be able to be patient. But I think that the idea that we need legislative momentum, right? Last year, we had a lot of Bitcoin adoption momentum.
Yep.
We need to have legislative momentum here, get the naysayers out of the way, get stuff done now to provide a platform on which more legislation can be passed. In the meantime, when it comes to the kind of stuff we're doing, we hope to be as legislation neutral as possible and just get better products in the hands of distributors that make sense, easy to understand, that can get them out into investors' hands.
All right, Andy, you and I are going to be talking all about markets. So it only makes sense to take a look at what the markets are doing. Let's take a look at the price of Bitcoin before we get into our interviews. $103,412 right now. Andy, I don't know if you know, but we have a prediction market going on in Myriad Markets. Will Bitcoin hit $110,000 during Concensus? What, I know you're not a betting guy, but what do you think? I mean, we're looking pretty good.
Bitcoin shape-shifted from a tariff tantrum mooring, which it did a great job, to an all-time high seeker in the last 2 weeks. So never bet against Bitcoin upside. That's what I got to say.
Never bet against Bitcoin. All right, before we get to our next guest, let's take a look at the price of Ether quickly. 2,588 right now.
Sitting at 1,600 for so long. What's going on with Ether? The thing that had no steering wheel, no rudder, all of a sudden back in the game after the Petra upgrade last week, although it's hard to see if that was really the catalyst. And now we're back. But look, again, $250 billion in stablecoins.
Yep.
A lot of tokenized stuff. All of that has to sit on blockchains. Ethereum is the kind of the gold standard for security. So even if things are settled, even if they're not executed on Ethereum, that still counts. So
all right.
Still matters.
We'll keep an eye on those prices. Our next guest has been leading PayPal's move into digital assets, including the launch of the PYUSD stablecoin. PayPal Senior Vice President of Digital Currencies, Jose Fernandez de Pont, joins us now. Hello again.
Hello, good to see you. Good to be here.
Yeah, good to have you here. It's been a real stablecoin theme this morning, I have to say, and I've asked everyone, including Andy, about that stablecoin legislation. And so I want to hear from you. Do you think we're going to get stablecoin legislation before August recess in the United States?
Save my job for me, please. how are you guys thinking about
that regulation
about tokenization beyond treasuries?
Well, we've done equities. I mean,
You know what I love about PyUSD is the experience of acquiring it, right? Because we're already in PayPal, people are used to it, and suddenly there's this new kind of module, right? And I think it gives people reason to just spend more time in the space.
So we're launching
right? And to investigate
in
it more, make
July
it more
our
of a
global
home
markets
base.
platform.
How do you think about
which
the user
wraps
experience there
really
and
any
making it
public
a place where
security that
people
you
want to
can
hang
buy
out?
it.
We have sleepless nights about the user experience. We care so much about it. What we are trying to do in the end, we're trying to do three things. We are very aware that we have a very large problem. So for us, it's all about how do we get the digital asset space closer to the mainstream.
Right.
Include some wisdom tree funds.
So we're trying to get, first to make PayPal and Venmo the best mainstream. It's never going to be a case of specific wallet. It's never going to have
And that's the key. And
It's
you
never
know, it's a
gonna have
secured
50 tokens
tracker
there.
certificate.
But we want to be that gateway product that gets people into crypto. So we started supporting 4 tokens. We added Sol and Link recently. We will continue to add things that with that experience in mind. And then we're trying to get, for stablecoins to thrive, we need that to be not only available in institutional markets and in capital markets, we need to have hundreds of millions of people carrying a stablecoin in their wallets. And that's what we're trying to do. Not only, and everything is part of that user experience. We recently announced that we're going to have be providing rewards for people holding stablecoin in PayPal and Venmo. That's also part of the user experience, is giving people a reason to hold and to use it and to pay with it.
I think that's critical, right? Because I have a PayPal balance just generally, right? Because you kind of just do, you want it around. Getting rewards on it is important. If I'm actually going to send money in and have that expressed in PyUSD, having rewards is critical. You don't want people to buy PyUSD and then exit the platform and not be there anymore, right? You want them to stick around. Hey, while I'm here, I might as well buy some Solana and sit on that for a while.
And the way that you get people to use it is counterintuitive. But to have PUSD stay in the system and circulate, you need to make it really, really easy for people to get it out. Because if people are concerned that they're going to be frozen into the crypto asset class, they will not be using it. They say, hey, the moment that you want to take it out and go back to your bank account, you can do it. And being that conduit between fiat and crypto is super, super important for us. The analogy that we keep using is SMS, right? You were talking about your PayPal balance. The way we think about PUSD is tokenized PayPal balance. And the advantage is that you can send it to people who don't have a PayPal balance. I'm old enough to remember when you could only do SMS with your people who were in your own carrier. And we look back at that and say, that was insane. That was a stone age. Same thing. You should be able to send value, stable coins, ours and others, to people who are using a different wallet.
Right. Fantastic.
Beyond stablecoins, what's PayPal looking at?
On the digital asset space, we get 2 questions from people. They want us to support more tokens. We get 2 requests. Is A, make our money work harder for us. Rewards is going to be a part of that, but also we're doing a lot of stuff in the traditional payments space. And then we want more tokens. We like the experience. We understand that you're not going to be the long tail of crypto, but we are covering now assets that represent probably a little bit south of 80% of crypto market cap. We will continue to go there. And more, what you're going to see is the place where I think we can help the most, which is getting more crypto, more stable coins into core payment use cases. You can use it today to buy crypto. You can use it today to buy a checkout. You can use it in the remittances business. And we have already announced that we're going to be doing that for bill pay. So merchants can hold the stable coin and they will be able to pay their bills with the PayPal bill payment platform that. So we believe that the uniqueness of our stablecoin is actually the merchant and consumer platform, and we really want to drive payment use cases there. We want the stablecoin to be available in crypto markets. That's where a lot of the volume is, and volume drives liquidity. That's why our recent partnership with Coinbase is so important. And I do think that institutional investors want more options. They want that ability to do more than 1 or 2 stablecoins.
Jose, it was such a pleasure speaking to you here at the desk. We have to wrap now, but we look forward to seeing you around the conference.
Thank you so much. Thank you for having me.
Thank you.
That was PayPal Senior Vice President of Digital Currencies, Jose Fernandez de Pons. We're continuing the conversation at the crossroads of TradFi and DeFi. Ondo Finance made headlines this year for tokenizing real-world assets like U.S. Treasuries and offering yield-bearing products on chain, pushing the boundaries of what's possible. Ondo Finance's CEO Nathan Allman joins the show now. Nathan, welcome.
Thank you so much for having me. It's great to be here.
I know the last time the three of us were together was
that
in
your
New
Ondo
York
Summit?
City at the
That's
Ondo
right.
Summit.
Absolutely.
It's a great time.
I know that this morning you have some news to announce, so I'm going to hand the mic over to you. Take it away.
Great. Yeah, we're very excited to announce that we completed a transaction where an investor using a tokenized deposit on JP Morgan's permission blockchain ledger was able to subscribe atomically to a tokenized treasuries product OUSG on Ondo Chain on the first real testnet transaction for Ondo Chain. And so this is the first time ever that you can go 24/7, 365 from a tokenized bank deposit to a tokenized treasury. And it really starts to break down the barriers between the innovation that's been happening in the public blockchain ecosystem with what the banks like JP Morgan have been doing for a long time in the space.
So as a test trade, I'm sure there were a lot of engineers kind of, holding their knuckles tight and product people and everything like that. Ultimately, we want this to be a button push, right? So
Yes.
the whole thing about your value proposition is interoperability. Here's a great demonstration of it. This was a first shot. How soon can this grow into something that people do without even really thinking about it too much?
Yeah, we certainly expect this will be the first of many. I mean, the transaction itself was done in real time, but certainly there was a lot of hand-holding and prep work to get up to that point. But yeah, I mean, this is moving into production, and the Ondo Chain itself is gearing up for mainnet launch, and that's in the not too distant horizon is what I'll say for now.
Nathan, lay that out for our audience even more. What does this successful transaction mean for the future of payments? What future does this enable?
Yeah. Look, I mean, I think it's important to take a step back and observe that for many years, I mean, from 2015 until now, there's been almost entirely siloed efforts where the banks have been focused on using blockchain to drive cost savings and efficiency gains. JP Morgan in particular is very famous for their intraday repo facility where banks are able to move cash balances between each other 24/7, very quickly. And then in parallel, we and others in the public blockchain world have been focused on using tokenization to expand accessibility to things like the dollar globally. I mean, that's where we look at stable coins, $200 billion plus circulating today, several $1 billion in tokenized treasuries starting to, share some of that yield with the holders. But those efforts have been totally siloed until now. And it's very recent that institutions have started to look at the public blockchain ecosystem as an opportunity to diversify their investor base, and really seeing the distribution angle. And so I think these benefits are going to start to combine, the savings and efficiency gains that the institutions have been working on with the accessibility, that we and others have been working on. And, ultimately, cash comes in so many different forms today, bank deposits, money market funds, short-term treasuries. They're all on sort of different settlement rails, SWIFT, securities settlement at the DTC, and so on. And I think through tokenization and, the ability, leveraging things like Chainlink to connect different blockchain ledgers and provide for interoperability is going to really break down those barriers. And, it's all just going to kind of look the same on the back end.
So I've got two questions about Ondo Chain. I hope we have time.
Yeah, we do. Andy's going to get the last two in.
Let's get the last two in. In the end state, right? How present is the Ondo Chain function going to be in a transaction? Is it something that's entirely, is it a front of house
No, it's very much behind the scenes,
Right.
as I think most blockchains will be. I mean,
Right.
I think most investors will hold certainly public securities that ultimately settle on blockchain rails, but that won't be known to them. Just like investors aren't aware of all the clearing and settlement mechanisms that take place at the NSCC and the DTC today. So, I mean, OndoChain in particular also helps to facilitate settlement between different permissioned and public blockchain ledgers, with the help of Chainlink and other interoperability platforms. But yeah, it's definitely something that the protocol developers will be aware of, maybe the asset issuers to some degree, but not the end investors.
So that leads to the second question, which is, people who are looking to place their bets on different blockchains for saying what's going to grow, like where do I want to actually put my money and let it sit? How do you convey to them what your growth prospect looks like, what the value is, how OndoChain kind of fits in? They're going to be seeing a ticker, they're going to be seeing a price. People may be tempted to buy it and stick it in their portfolios.
How do we convey to asset issuers,
to potential investors or to potential buyers of the tokens,
of the tokenized treasuries products,
or of just the OndoChain, presumably, the OndoChain token itself?
Sure. Yeah, look, I mean, I think we're still very focused on tokenized treasuries, and I think the market size there, at least is floored at the stablecoin market size of a couple $100 billion, and I think we've really barely started to scratch away at that. So I think in the next year or two, tokenized treasuries will be a much larger percentage of that, and then sky's the limit from there. I mean, certainly there's $5+ trillion in money market funds in the U.S. So I think we'll see them come on chain very rapidly.
Fantastic.
Nathan, we're going to have to leave it there. It was such a pleasure talking to you again here at the desk, and we'll see you around the conference.
Great. Thank you so much.
Thanks, Nathan.
That was Ondo Finance CEO Nathan Allman. Our next guest is the CEO and founder of Wisdom Tree, an ETF powerhouse with $119 billion in assets under management globally. As Wall Street meets Web3, he is helping redefine how investors access and engage with the markets of the future. Jono Steinberg, welcome to the show.
Thank you for having me.
Thanks for being here. You were on stage this morning, weren't you?
Yes, I was.
Your session was called, Can We Call It an Asset Class Yet? How Serious Investors Can Engage in Crypto. My question for you, can we call it an asset class yet?
It's not quite an asset class yet, but it's moving it well along the way. I mean, Bitcoin is fully established for sure. Mm-hmm. And I think what we've done with CoinDesk with our Global 20 or the CoinDesk 20, those kinds of products, I think will really go a long way to mainstreaming the asset class for investors.
I wrote that title, Jen.
I was going to say, Andy, weren't you there?
And I was also there,
Andy
and
was
I have
there.
to agree. Bitcoin's super established. CoinDesk 20 is going to be a great QQQ of crypto to make that rest of that distribution process easy. And Wisdom Tree, 119 billion in assets. I got to say, you accumulated that the hard way, right? It's all Wisdom Tree known for new stuff, for breaking down barriers, for giving access to new ideas, which means you need to educate and then you need to distribute. I guess done a great job in crypto so far. How about the tokenized products? How does that education process work, and how do you think about mapping out the market?
So for us, digital assets is a big initiative. It includes crypto, the ETPs. We manage about $2 billion. We have about 15 exposures, most out of Europe, but more coming in the United States. As a part of that, we are trying to sort of tokenize real world assets. We now have about $150 million in tokenized assets, mostly in our money market fund, but also equities. We've tokenized gold. So I'm very bullish on tokenization on the blockchain as the the next wrapper of the future beyond ETFs.
I guess, is that what serious investors should be paying attention to when it comes to digital assets? Where do you think serious investors should be looking to?
First of all, serious investors, there are a million ways to skin the cat. So you don't really want to generalize. It depends on where they are. For crypto, the asset class, it's still very early days. Most institutions in my background have not really allocated their 1 to 2 or 3%. If you did this by market cap of liquid assets, crypto would get a 2% weight, let's say. That hasn't happened to most institutions. But tokenization of real world assets, it's going to be a hard journey to displace the ETF, which has the least amount of friction. That said, when you think about the wrapper and you can make them programmable exposures, there's a lot of innovation that can come beyond just liquidity and convenience. And I'm very, very bullish, but it's a journey and we're in it for the long haul. But with this effort, I was 13 years behind State Street in ETFs. This time I wanted to be first through the regulatory door. It's easier to be first, but they made us work hard for it so far.
They did make it. Yeah, they made it work hard, and they made sure the finish line was at a place where everybody was at a tie, which was anyway, we got through that, but now I think the gates are open. So there's two things, right? Taking treasuries and tokenizing them, making them available on chain, taking crypto assets and ETFing them, making them, ingestible right into portfolios. Those are two different sales processes. So how do you think your distribution team, how do they think about that?
I'll tell you, what we were trying to do is we wanted to normalize crypto, the asset class, so that it could sit next to traditional assets as well as traditional banking services like the debit card. We also wanted to take traditional assets, gold, equities, treasuries, and get the seamless globalization that comes from the blockchain and blending that experience. That's sort of what our vision for this is. And much of there's crypto ETPs, which plays to the core business, and that my team does. That's what we do. We also have something called Wisdom Tree Prime, which is a direct-to-consumer effort. There, I'm still working through some of the regulatory hurdles to really launch it, but it's been like a 4-year journey. I'm close, but it's really an endurance test, this whole thing.
I mean, a lot shorter than the ETF journey so far.
Hopefully.
Far, right?
Yes,
And,
that's true.
Speaking of journeys, you just said you anticipate it being a long journey before tokenized assets can displace ETP products or ETPs. How long does that journey look like for you? What are you preparing for?
When you think about, like ETFs are like 32 years old. It was only a couple of years ago that they surpassed mutual funds from a revenue standpoint. So this will, and the ETF really satisfies investors. It's a very, very good experience. That said, you can't do peer-to-peer exchange of value. There will be certain things that the on-chain community has that others will want. When you look at your iPhone, it's not about a phone call, it's about the pictures, it's about the internet. Really, the on-chain community is the cutting edge, and they are going to have a better experience than traditional investors, and the other investors are going to want that seamless experience, like T0 settlement of all assets. Can't really be done on the old rails. So we're going to make that happen within Wisdom Tree Prime and Wisdom Tree Connect.
This is fantastic. To realizing the limits of the ETF wrapper, even though that's been the bread and butter of the business and where you've been a leader, and now going into Connect and Prime just seemed like a next logical step. Let's go with the regulatory approval so we can get that thing rolling. I'll be the first customer in line.
Thank you.
Jono, thanks so much
Real
for
pleasure. Thank
joining
you.
the show. We hope you enjoy the rest of Consensus.
Thank you. Thank you for having me. Bye-bye.
That was Wisdom Tree CEO and founder Jono Steinberg. Welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. I'm Jen Sanasi, here with my co-host, Andy Bear. GSR is one of the earliest crypto trading firms, starting as a market maker in 2013. It has backed builders, provided liquidity, and traded across spot, derivatives, and options. GSR Chief Investment Officer John Laughlin joins this special edition of Markets Daily Now. Hello, John.
Hi.
All right, we got to start with a little bit of a scene setter. We're here at Consensus 2025. We've been talking so much about the markets and what's going on when it comes to institutions, but what have you been up to at Consensus? What have you been enjoying?
Yeah, just walking around and meeting people, connecting with, a lot of people that I know, but it's just a great, venue for gathering.
Great to see people IRL. I know so often we are stuck to our phones. We talk in front of a screen. That's how Andy and I communicate and do the show sometimes. And so it's great to be here IRL. Let's get into it. I want to ask you, what are we seeing in options flows?
So with the short dated, we see a lot of, kind of income generation, options selling out to kind of 1 week or 1 month. Also with the short end, we see just a lot of kind of noise, many players just sort of messing around with short-term options without any clear theme. At the long end, primarily, the theme we see is, people buying call options on Bitcoin out of the money, kind of out 1 year. So, 125,000 strike, 150,000 strike. And that's really looking for a lottery ticket like payout, betting on Bitcoin repricing higher sometime within the next 1 year.
John, you and I know each other a long time, and you spent decades really understanding the traditional options markets, both in equities and indices. What you just described is really different from how investors behave in equities, and certainly is absent of things that institutions have to do to manage risk. At what point do those two worlds collide, right? Because they're both kind of developed options markets. Where do you see them starting to cross streams?
Yeah. So I did spend 20 years trading options and running derivatives portfolios, looking for mispricings in equities, FX, credit, and rates. And I think that the main thing that I don't see, I guess there's several things I don't see in crypto yet. There is some call overwriting, but it's not nearly as dominant in crypto markets as it is in traditional finance markets. And I think part of that is just the markets really rewarded people for kind of staying long the upside wing. And they believe that it'll continue. So we don't see that as much in crypto, but maybe as more traditional and institutional players from, TradFi allocators get involved in crypto, they might kind of bring some of those same, thought processes and behavior patterns. I think the other thing we see a lot more of in traditional finance markets is index, right? Like within credit, like the options are primarily on the index, then the S&P 500. Really a lot of the traditional asset classes are kind of very focused on index vol first, and we haven't seen that as much. Obviously, the CoinDesk and Andy, you're progressing on your CoinDesk CD20 index and options on that, and we have seen some trades. We did, I think, the first trade in that. So I would say those are two themes from that we might see develop here.
I hope you're right. I mean, index options as a risk management tool, or as you say, they're primary. But even a year ago at Consensus last year, we didn't have Bitcoin ETF options yet. And now there's a lot in strategy options trade a lot. They're converts. We'd love to see index options in the United States someday. On the other hand, Coinbase goes and buys Deribit, and that's a scale-up maneuver. Do you see the two, I guess, the on-chain option market and the traditional option markets continue in parallel, or does one start to dominate? We're still so early in terrestrial market derivatives trading. So how's that horse race look to you over time?
Yeah. I think there's different market participants, right? There's, hedge funds and traditional institutional allocators. If they're doing anything in crypto at all, it's going to be kind of on the CME or the IBIT options. Crypto native players tend to prefer Deribit. There's also Paradigm, which allows you to get kind of larger block trades done and multi-leg option structures. In terms of those merging, I think I might say there's probably a prerequisite for kind of more clear regulatory guidance, or maybe even legislation from Congress before you really see the CME and Deribit kind of merge into the kind of same thing. I think right now you can trade on either. There's good liquidity on both. Arbitrage in between them is something that can be done, but it requires a lot of focus and high speed automation. That's more of a market making game. So as an end user, I don't think you're getting a significantly different or worse price in one venue or the other. And just pick one.
John, we got to leave it there. I think we could talk about this forever, but unfortunately we are all out of time. Thank you so much for joining us at the desk. We'll see you around the conference.
All right, thank you.
That was GSR Chief Investment Officer John Laughlin. Let's now head over to one of the stages at Concensus. You're watching CoinDesk Live.
This is actually sort of my spiciest take. We're on a yield-bearing stables panel here, and I think that whether the yield is endogenous, internal to the stablecoin, or you get the yield by parking your money in an institution may not matter as much as people think it does today. I mean, I would love to have more flexibility for entrepreneurs to build the products that people, businesses want to use. But ultimately, if you look at the verbs, the actions people take with stablecoins, it's they'll spend them, they'll send them to someone else, they'll save them, and maybe they earn with them. And for spend and send, it doesn't really matter if it's yield bearing, because it's a very fleeting moment. If the transactions now are less than 1 second, they cost less than 1 cent, and so we don't necessarily need to have yield for that really atomic unit of time. Yeah. But then when you're saving them, well, look, you're not spending them. You might feel comfortable parking them somewhere, and so we're starting to see obviously this great development in yield bearing stablecoins, and we want to see yield-bearing stablecoins because they're going to be super useful for treasury management and collateral and all these other things. Yeah. But for a lot of users and a lot of use cases, you might feel comfortable leaving a stable with, I'll just say because it was a recent announcement from PayPal, leaving it in your Venmo or your PayPal account or some institutional version of that, where you can earn yield that's passed through from the institution that you're storing your stables with. So I just want to point out, like, there are other ways to construct this product that might mean that the two assets look a lot more fungible and they solve the same use cases, even though the yield isn't actually in the stablecoin.
And just to add to that quickly, I mean, you see that with USDC and Coinbase, right? If you're leaving your USDC, depending on, again, regulation and what's allowed in your particular environment, but it's just not directly through the token, but they're paying you back on the back end for distribution effectively. So I fully agree with you.
Yeah.
Sam, I want to go back to that actually, because I think it's interesting. Do you think it's just like, so crypto historically has risen in like a zero interest rate environment, right? Yeah. Do you think that it's like the marginal opportunity cost that is now sort of, investors are now faced with a marginal opportunity cost for keeping something in a stable coin that isn't giving them, 5% interest that they could find in a bank account, right? So do you think that that is what's fueling the rise of the yield part of the stablecoin conversation, or do you think there's some other use case specific thing that's driving that demand?
Yeah, look, so we've had the term yield in crypto for a long time. We've seen these, like, frankly, ludicrous yield numbers in the industry. People offering 18, 20% and then saying risk-free. That's nonsense. We know what the risk-free rate is. It's something like 5% or whatever the treasury rate is. That's sort of like a classic economics term. And if the risk-free rate is going to be 5%, then people who are storing a lot of cash because they want to use it for investing, or they want to just save it in that format, or whatever their other reason for holding cash is, yeah, they probably should be receiving the 5%, and they're going to be a lot more motivated when it's 5% rather than 1%. But that said, I think that the current rise in stablecoin adoption, it's really it's become uncorrelated from speculative use cases of crypto, where we're seeing stablecoin volumes and stablecoin transactions continue to grow, even though speculation is down/flat. And to me, that means that people are not, and look, most of that growth, as we mentioned, is in non-yield bearing fiat reserve stablecoins. So for me, that actually points to the current use case that's driving the market is probably in more standard send and spend use cases, as opposed, or maybe composing with DeFi. But the point is, the yield stuff has not yet been what's actually driving the market, although I'm excited for the use cases that use yield-bearing stablecoins in the future.
I do want to go back to the ghost of yield past, right? I mean, we all remember Terra. Anyone remember Terra, Luna, UST, that stablecoin? Yeah. Ostensibly yield-bearing if you put it into the Anchor protocol, which offered 20% yields magically. And we all saw that thing nuke and caused a whole catastrophe 3 years ago at this point. Do you think that the ghosts of yields of past in crypto land present sort of a marketing challenge for this yield-bearing aspect of the current crop of stablecoins? I'll put this to you, Sam.
Yeah.
Because you mentioned it, like yield historically has been somewhat sus in crypto. And I think now we're starting to see like real yields come into the conversation in a different way.
Yeah, sus is the investing term for okay, fine. That's why I split these two different types of yield-bearing stablecoins apart at the beginning. There's this wrapped treasury asset that I think really mimics the risk-free rate, and then there's these dollar shares of hedge funds that are running some sort of strategy that if you're going to participate in it, you should probably diligence and understand. And one of those, I think, is the one that's wrapping a treasury is a reasonable place to park your treasury if you're an enterprise, or to save your money, or maybe to use as collateral for other trades. The other should be taken as a product that where you're looking to get yield based on some strategy. And so that's sort of the simple way of looking at it. And just to tie it back to your question, like, are we haunted by past stories? I think that the cleaner version of these, the one where we're wrapping a treasury, probably shouldn't be. It's a really straightforward product. And the other, I think they're going to have to make a case for the fact that they can do the yields they're promising in a safe and transparent way.
I think though this kind of gets to the regulatory point, right? Which is, for the most part, these treasury wrapped stablecoins, these yield bearing stablecoins are securities. And so as long as they're deemed securities by regulation, you're going to be very limited in the use cases that you can use them in, right? You can't use them in DeFi. You can't really use them to make a payment. You can't send them off platform into emerging markets and different things. And so I think we really need, if you're going to truly have yield-bearing stablecoins at scale, the use cases have to expand. In order for the use cases to expand, you have to have regulatory clarity. And until we get that, I think it's going to be challenging. As you highlighted, Zach, I think yield-bearing stablecoins are 2% of the market cap today, 2.5%. And I think that's what's really preventing them from unlocking, is the fact that there really isn't a good way to earn yield and use it. So if you're in a developed world, why not just hold your funds in a money market fund in your brokerage account, right? So I think that's the unlock that we need to see.
Yeah, thanks for bringing us back to the regulatory pivot. I appreciate that. You did mention, people on the sidelines, right? Bank of America, others saying, hey, we need a little bit of clarity here out of Washington. Joe, I'm going to put you on the spot with this question. Do you feel like you have the clarity that you need as, a state entity to go ahead and issue a token of this nature?
Well, we are a state, we are a sovereign. And even though we are a sovereign, we still have to look at what the rails are for us to launch not only a stable token, but also a yield-bearing stable token. We've been looking at both and also working with legal counsel. We've looked at the OCC regs, Articles 8, 9, 10, and 12. We've been looking at MICA, which is the European regulatory framework. And we're still waiting for the Genius Act to formalize. We see what Canada has done here, and they've identified these to be securities. And we're trying to, pool all of that information together to build something that is suitable to the marketplace, that won't trip us up when we're, go out to market. Getting back to the yield-bearing tokens, we have been analyzing all the yield-bearing tokens that exist out in the marketplace. And I think over time, in order for this segment to grow further, there's going to have to be an understanding of the risk parameters that generate a yield that's anything over a treasury. So if it's between 20 and 30%, there's got to be risk parameters and a framework to understand what's going on, and you can disseminate that to the investing public so they can make better decisions about their investments or the transactions of monies.
Got it. All right, we have a few minutes left. We had a semi-spicy take already, so now we're going to move to the Galaxy Brain take section of the conversation. What do these things enable? What use cases are we going to look forward to in the 2 to 3 years that are unlocked by this concept, maybe of the endogenous stablecoin that bears yield in a crypto native?
Yeah, sure. So actually, I think that Ben, you made a point. Like, you're in a sophisticated market like the U.S. Why not put your money in a money market fund? Like, that's a reasonable alternative, and people should consider it. Like, if it's their needs. Well, there's things that you just cannot do with a share of a money market fund today. You've got lockup periods. You can only trade between whatever 9 and 4. You've got contracts to write and people who have to review them, and you don't get this programmatic, permissionless flexibility that you get with crypto. And so, what we're seeing use cases that probably are not the ones that bring people to this conference today, but maybe should be, which are things like you are a large company, you need to write hedge contracts against something, your delta, and you've got to hedge against the price of jet fuel. Well, today you're going to be moving collateral from underwriter to underwriter to take out options against those prices. This is like sort of an esoteric thing, but what we're realizing is that they're being incredibly capital inefficient today because they've got to store excess capital with each of the providers they're writing options against. I know there's a lot here, but what we're excited to see is people be able to move collateral mobility, so they can just be much more collateral efficient as they manage their treasuries. That's at an institutional scale, but I think individual investors and people will feel similar use cases as we move sort of down the complexity ladder and make these use cases more accessible to day-to-day people.
Yeah, Matt, same question to you. What's the next chapter here? What do you see this evolving into?
Yeah, I mean, I would really just echo that. Like, it just removes friction. I think it's very, very prominent and obvious for folks that operate on-chain businesses, whether you're a DAO, whether you're a protocol, whether you're a crypto market-making firm. Just the frictions of moving between your crypto holdings on an exchange to a brokerage account it's not easy. There's frictions there. It takes time. It's expensive, and so I think at least that's really the most important thing I think for now.
Yeah, and Joe.
Yeah, absolutely. So in the state of Wyoming, we're going to be launching pilot programs. We're going to go through, the S&P 500 has 11 sectors. We're going to go through each and every one of those. We've done a lot of that work already. We're going to work with financial institutions, all the retail businesses in the area, and see where this is mostly applicable across all those sectors. And we're looking also to service those that are unbanked, and also the ones that are receive the less service. Getting back to your money market point, one of the other constraints are minimums across all mutual funds, 3,000, 5,000, 10,000. There's a lot of people that don't have access to the financial instruments that we enjoy every day.
Maybe a final thought. Yep. So we haven't talked at all about other fiat currencies on blockchains. I think that that's really, really interesting. Today, it's denominated by US dollars. But at BitGo, we're having conversations with firms in Canada, in the Middle East, in Latin America that are saying, hey, I want to put a peso, I want to put a Canadian dollar, I want to put these other instruments on blockchains. And that becomes really, really interesting when you think about how these interact with each other and how it transcends commerce and payments. So super fascinating times.
It is.
Yeah, interesting times indeed. Thanks for closing on that note. Thank you to our panelists. Let's give them a big, warm round of applause. And thanks to you all for being here. Have a great consensus. See you.
Please welcome to the stage Michael Higgins, Ryan Rugg, and Ian Allison. Hello, everyone. Oh, yeah, this is working because it just about fell off. Um, my name's Ian Allison. I'm a reporter at CoinDesk. I've been there since 2018. That's a fun fact. I'm going to let the panelists, my esteemed panelists, introduce themselves. To start with you, Ryan.
Hi.
Go right ahead.
Thanks, Ian. Appreciate it. So Ryan Rugg, I head up digital assets for Citi's Treasury Trade Solution business. I've been with the organization about 2.5 years, and we'll talk more about Citi Token Service later. Prior to Citi, I worked for IBM, where I was head of their digital asset practice for the Americas, and we launched CBDC, identity projects, as well as several others. And then prior to that, worked for R3, fintech startup in the space, where we developed Corda. I was employee number 20, so I got to do everything from sweeping the floors to helping build, Corda as well as go to market.
Mike, go ahead. Can you hear me through this? Yes.
I can hear you.
It's better. I can hear you. Mike Higgins. I'm the international CEO and global head of corporate development at Hidden Road Partners, based in London. Prior to helping set up Hidden Road 6 years ago, I spent over 20 years in electronic trading, multi-asset, and the bulk of my time in the foreign exchange markets. Very briefly on Hidden Road, we are a multi-asset PB and clearing firm that was set up and funded by the buy side, so a sell-side business funded with buy-side capital. Over the past 6 years, we've been razor focused on improving the technology behind the core infrastructure of PB clearing and margin financing in traditional markets, and applying those same applications and practices into the digital asset space. Ultimately, as a PB, we do one thing: we provide access. It's access to two things: access for counterparties to trade across the entire liquidity landscape unencumbered, and then access to balance sheet to trade across that in a capital and cost-efficient way. Recently, Ripple's in process of acquiring Hidden Road, and so that certainly helps us unlock the ability to deploy more capital against counterparties in existing asset classes as well as digital assets.
Nice. Ryan, Citi have been, people probably know this, Citi have been in this space for a long time, but you recently launched the Citi, I'll get the name right, Token Services.
Yeah.
Talk about Token Services. What's new? What problems are you kind of solving, and so on?
Yeah. So when I joined Citi 2.5 years ago, we had been working on a lot of projects on various networks with the regulated liability network with the Fed. Now it's kind of matured into Project Agora. But to be able to connect to a network, you first have to be able to move a token safely and soundly around the four walls of your institution. So last year we launched what's called Citi Token Service, and it was based on the thesis statement that our clients gave us. They wanted 24/7, 365 payment and liquidity, regardless of bank holidays, regardless of cutoffs. Where if you think about the traditional market, if it's 5 p.m. in New York on Friday, it's 5 a.m. in Singapore, and typically you couldn't send money. So what our treasurers do of our multinationals is they park this money early in the day, or to make sure that the money's there. And now you can do it just in time. So if it's Friday night, if it's Saturday morning, you could send money. And the interesting thing to me is we started off with liquidity and payments being our thesis statement to solve for our clients, but we've now seen it go into the cap markets with, recently it was Chinese New Year in Singapore, but we had a client that wanted to settle US equities. So, again, they would typically forecast for what their margin calls are going to be, what their kind of cost of funds are going to be in that market. Now they can move it instantaneous. So we've targeted our large money hubs first, which is US, UK, Singapore, and Hong Kong. And those are the ones that have the largest cutoff, as well as the largest amount of friction. We move on a daily basis somewhere between $4 and $5 trillion for our clients, but there is friction in the traditional market. So we've kind of taken a two-prong approach where we are updating our traditional infrastructure with solutions like 24/7, Spring by Citi, real-time liquidity, but also looking at more innovative structures that are using emerging technology like Citi Token Service to be able to provide that access, transparent, and liquidity for our clients.
So it's live and it's saving the bank money.
We have dozens of clients on it, moving multi-million transactions 24/7. And as I mentioned, it's really interesting to see, where the platform is going. And everything we do is dictated by our clients. We build for our clients, by our clients. So every additional hub that we add, every additional currency that we have is really mandated by them. And, we're seeing them not just use it in off hours. Like our thesis statement was that it would be used when the branch was closed. But we have large clients that are just using it for, real-time settlement for instead of having to do batch settlement at the end of the day to reduce costs for, reconciliation and stuff. So yeah, it's live.
Lovely. Mike, do you want to talk about securities on chain from the prime broker, through the prime broker lens and all that stuff, collateral and all that stuff?
Yeah, sure. I think, can you hear me okay?
Yep.
Yeah?
Okay, yeah.
Sorry. Look, being able to move value 24/7 has a huge impact, not just on the crypto space, but in traditional markets as well, right? And really upgrading that infrastructure. And that's ultimately going to change the way commerce is transacted. From the lens of a PB, traditional PBs operate in a T1 and a T2 cycle. In digital assets, we're already at T0 and instant finality, right? So these solutions will leapfrog traditional prime. So going through the lens of PB, the biggest knock-on benefit is actually on the risk side of things. If you think about what we do, we give access to counterparties, and we require them to post collateral based on their portfolio and all the assets that make up that portfolio. The math behind the margin methodology of how much collateral they need to post is based on and calibrated on what are the assets in the portfolio, the size of those assets in the portfolio, but also the ability for a client to top up margin and meet collateral calls, right? Cure periods form part of the legal framework and are part of your risk management. And so being able to ship assets 24/7 reduces the risk from a PB and shrinks what's called your MPOR, your margin period of risk. And so the knock on to that is prime brokers are able to price that more aggressively from both margin as well as fees. And so that makes it cheaper or ultimately more efficient for counterparties to trade those assets. And if it's more capital efficient, then the treasurers can hold more collateral and generate more yield in corporate treasury. So ultimately, tokenizing assets improve 24/7 margining, better real-time risk management, and better settlement windows, which leads me to the point of who benefits from it. So certainly the prime brokers have less risk, but if you think of the proprietary trading firms or the high-frequency fraternity, they can reuse their capital over and over. And then the big hedge funds or the long onlys, they need to post less collateral, and so again earn positive carry by holding that in corporate treasury. So big step forward.
Nice. And the Ripple deal. Do you want to? I mean, in the context of securities online and on-chain and all that stuff. But I mean, I used to report on who's going to be the main crypto PB, and there was lots of companies jostling for that position. Who's going to, in that? But tell me about what Ripple's going to bring to you guys, and also what you're going to bring to them.
Sure. Yeah, I think it's definitely both sides. But I think it's important to take a step back, right? Prime brokerage, clearing, and margin financing has really been a facilitation business built into banks over the last 30 years. Since 2008, that's a sub 5% return on invested capital. And so you can see this in a number of areas. The number of FCM, GCMs on a CME in 2008 was 153. There's 61 left in the world. Citibank, the largest FX PB, kind of puked out that business. And there's a number of these themes. And so Hidden Road was set up to be a multi-asset, non-bank prime, and there was 3 pillars to do that. The first was rewrite the technology. Banks are organized very vertical, right? So you have a clearing system for equities, a clearing system for foreign exchange, a different clearing system for listed derivatives, and certainly nothing in the crypto space. And so we wrote a single horizontal clearing infrastructure using modern technologies, and that's important. It allows us to manage risk, cross-asset, cross-process, real-time, 24/7. The second was get the entity regulated by market regulators. And so we've done that. And the third piece is to the point of Ripple is, well, how do you fund that business? Banks have been predicated on rehypothecating client collateral to fund prime businesses, which is part of the reason they have punitive capital charges under the likes of Basel III. And so we looked at public markets versus private markets and said, right, we'll fund it with private credit, which has been funding businesses. We took about $500 million and deployed that. We ended up with a supply-demand problem. And so late last year, we said, right, time to solve that supply-demand problem. Let's go look for capital. It coincided with the change of administration in the US, which had a positive tone in digital assets into our business. And so the conversation with Ripple was very organic. They were a user on the platform. And when we looked at it, having access to that balance sheet and that treasury would allow us to really deploy material capital in traditional assets. And in the crypto space, that infrastructure has not really existed. And so solving that gap to put real balance sheet in the digital asset space will allow real, true institutional adoption. So that's on the Hidden Road side. There's two knock-on benefits. One is we'll be able to lend a little bit more XRP, and two is Ripple's stablecoin made its debut end of last year. And so being able to use that as good collateral and accept that on a 24/7 basis is a major step forward. Looking at it the other way, Ripple's an L1. And so, getting more assets on chain is a big important piece. Hidden Road runs a very large traditional market business. So cross-border payments and foreign exchange, we do about 30 billion a day. And then our fixed income business, starting with repo, being able to move that on chain are things that we're looking at collectively. But exciting development with Ripple.
Sorry, did you say XRP is going to be used as collateral?
Well, we already accept digital collateral as good collateral. And I'll give you a really good example. Today, there's many firms trading basis, right? So they'll trade Bitcoin spot against CME front month futures. None of the bank FCMs or even non-bank FCMs can take Bitcoin as good collateral and finance span margining on the CME. Go back to XRP, you have ETFs that are there, you have CME futures coming online, and so taking XRP spot as good collateral and providing finance against it is certainly part of the playbook, and I think all the trading firms out there will benefit from that.
Great partners. Ryan, I used to write a lot about enterprise sort of blockchain, old in the crypto space, and there's always the idea of public versus private, and the banks are more comfortable on sort of very private blockchain, some of them. But this seems to be changing. Do you want to talk about where we are now with the public versus private debate?
Yeah, it's definitely been a journey. I think back to 10 years ago at R3, and when we initially started our journey in that space, we were looking at Ethereum and different public chains, but due to the compliance, KYC, AML sanctions that large enterprises have to abide by, we couldn't be on the public chain. So hence why at R3, we built Corda, and you've seen other kind of private permission versions of platforms kind of evolve since then. We are on a private permission version of Ethereum because, that was all that was compliant for us. Like, Citi is not going to operate in the gray area unless there's clear legislation and rules and regulation about being on public. Like, large enterprises like Citi can't do that. So I think that the technology has definitely matured a lot in the last 10 years, but we still do see vulnerabilities and like bridges and the whole interoperability between different public chains. So I think that it still needs to evolve. But in the meantime, we are on a permission version of Ethereum with the aspirations of, depending where regulation goes, to make sure that we provide the best services for our clients. So I think it has developed a lot. And I think more to come kind of out of TC in the next, hopefully, couple of months.
Really great. And talking about the kind of cash leg tokenized, we used to report on JPM coin a lot. I know that JPM have changed. They've rebranded it. Nobody wants to be a bank coin, it's not. And actually, going way back, I actually did a story about Citicoin because there was a kind of proof of concept, let's just say, because I remember I did that story in 2015, and I know that you don't do a Citicoin, it's a Citi token services. But the question is interoperability between banks. You talk to the JPM guys. I know you work with them, Project Guardian and stuff. Where are you with interoperability?
I mean, we already started. We started with the network play before we actually had Citi token service. So we were working with the Fed on the regulated liability network way before we even had a Citi token. And we've made some very different design decisions. When I was at IBM, I advised a bunch of different banks in this space. And, you don't need a blockchain if it's just going to be an internal token. We've always had aspirations of connecting externally. And the thesis statement that our clients want is they want multi-bank, multi-border, multi-currency, always on liquidity and payment. Like, why does money not match the speed of the internet, right? So like, how are we going to get to that evolution? And it is going to be multi-bank. It is, and we're part of several initiatives that are working on this and trying to drive that forward. But, I also believe success breeds success. So, right now, being able to be live and adding value to our large multinationals that operate on a 24/7 basis to be able to move their cash across our 90 plus branches actually adds a lot of value to them. It adds a lot of transparency and value, and like they don't have to, forecast money to the different regions across the globe, that they can just do it instantaneously. So yeah, I think interoperability is important. We're actively involved in several initiatives around this space about, and I joke with the team, if I had $1 for every network that approached me to join, I could retire. So it's definitely been on the forefront of our mind.
I bring it up because sometimes I got the feeling that JPM were not quite so into interoperating with other. I mean, someone said to me that interoperability and capitalism don't mix, which is a sort of interesting. Anyway, going back to on-chain securities, BlackRock, Biddle, that fund, Mike, that's been a huge success. Tip of the iceberg?
Completely a huge success. I think, don't quote me exactly on this, but I think in the first 2 months it amassed an AUM of about 500 million. I think we're closer to about 2 billion. But it's the play on, or piggyback on what Ryan was just saying, right? It's the ability to move collateral 24/7. But one of the key components of this is moving collateral that pays positive carry, right? Like gold is a non-carry asset. So if you look at investment portfolios, gold is a small portion of it, right? It doesn't pay interest. Large shareholders of gold are actually are the central banks, similar to Bitcoin. So we'll see if that unplays. But going back to BlackRock's 2A7 funds tokenizing this collateral, I think it makes a lot of sense. You can meet collateral calls, around the weekend. You'll see, the Templetons and the Vanguards and the rest of these funds start doing it. Their infrastructure really allows them to do it. So certainly tip of the iceberg. And again, it improves the ability to cure collateral around 24/7, and that ultimately will improve cost and for counterparties. So yeah, early on, but very exciting.
And beyond tokenized money market funds, which obviously there's a lot of people involved in that world. Ryan, I mean, I did a story recently about Citi, and they're doing pre-IPO shares. And interestingly, going back to R3 and the R3 guys, who are great, by the way, they work with SDX, the Swiss exchange. So where are you guys at the bank looking beyond money market, other things, credit, stuff like that?
Yeah, so our issuer service business, as you mentioned, recently formed the partnership with SDX on later this year having the access to pre-IPO shares. I think it's to our strategy, and like similar to you, it's build by a partner. We're not going to build every solution out there that our clients want. We are building Citi Token Service. I think it's foundational to be able to move cash around instantaneously instead of having to go back to TradFi rails for our clients, but also partnering, and right here, our clients want access, transparency to, pre-IPO shares. So being able to partner with an organization like SDX to do that, and I think that's going to continue in this space, these partnerships with large enterprises, as well as, our venture cap team has a big book within this space also that we're going to invest in these companies also, because we're not going to build every solution out there. And I think that's important for the future.
Really good. And Mike, where do we draw the line? You're going to tokenize everything that's got any kind of value.
Yeah, I think it's simple. I think you look to tokenize, at least today in this world, before we move to a 24/7 market, which is going to happen, and then things should virtually all tokenize. But today you look at, does it make it more accessible? Does it improve liquidity? Does it improve transparency and operational efficiencies? And so we've started with the money market funds. You have stable coins. I think private credit is important because you'll have better tracking of IRR. Repo, I briefly mentioned, Ryan already mentioned, that's a big space, right? That will improve capital efficiencies, liquidity for intraday liquidity, not 24-hour periods. I think that's where we start from. But I think if we think, fast forward, if markets move 24/7, then having collateral that, is recognized as good collateral and to be able to move that around in line with those markets, I think is hugely important. So we're at the very early start of this.
I mean, I hear real people talking about tokenized real estate. It's been around for ages, like an apartment block somewhere. But Ryan, you guys actually did you did some proofs of concepts, explorations, land registries and stuff.
Yeah, when I was at R3, we were working with, at the time, state of Illinois on a land registry, because the way they explained it, some of these land registries that they have within the state, if a tornado touched down, literally the whole entire land registry would be wiped out. There was no digital copy of that. And, why do people have to do, title insurance and the whole title effort? So being able to digitize this whole entire process, working with, the state on that. But one thing I'll say overall about tokenization of different assets is a lot of what I've seen is if there's a shadow ledger or a shadow, like a regular, the system's not going to be the system of record and you have to go back to the TradFi rails, it's not going to work. Like it's created like conflicts, and I have seen some solutions, but a lot of them haven't scaled when they have to go back to the traditional rails. You're just kind of creating, two shadow systems. So I'd say, natively issued assets onto the ledger, onto the blockchain are much more efficient, and I've seen like scale better.
Really good. And last sort of thing, I guess, regulation is coming. US, Europe, slightly different. But I mean, I'll start with you, Ryan. What's your view on where we're going with under Donald Trump?
I mean, I have to say I'm very optimistic about this new administration. The last EO that was issued under Biden, I was working for IBM, and I got to go down to the White House and speak. And, they were much more reluctant on the technology, believing that it was going to be, kind of critical infrastructure for the future. Where now I'm down there and, advocating and working with our bank reg team about, equal legislation for equal risk, equal activity. And they really are open to these conversations. And, I'm very optimistic by the speed that these stable and genius bills, even though we had a little stumble, last week, that they're moving, that, I want to make sure that, large enterprises like Citi have ability to have a seat at the table if our clients want it.
And Mike, last thing, is there a significant risk maybe from having everything on chain, everything whiz bang on a blockchain? I don't know, sometimes wonder that maybe we could be stumbling into a black swan event or something down the line.
Just to comment quickly back on the regulatory side, I'm pro that, but my fear is that we try to shoehorn this new asset class into existing TradFi regs when that may not be the opportunity to create something new and unique. But the Stable Act, the Genius Act are really important on the stablecoin markets to get that certainty. I mean, if you look at that market cap today, it's less than 250 billion. Like I think those stablecoin issuers will become very large holders of U.S. Treasuries, and the U.S. government likes that. And to be able to export dollars around is really important. But I think the approach we should take is probably like one where we did in the early stages of the internet, right? It's a pro innovation, light touch regulation. I think that is key. But yes, I mean, there is real risk of putting everything on chain. You've seen lots of hacks in this space. We're getting much better at those things. But yeah, I'll pause there.
Yeah, I think we're almost at time. Do you see? Are we heading towards another black swan event in crypto?
It was actually interesting. Right before this panel, I was having a conversation with a law firm that is actually, litigating for one of these big hacks. And it is completely different environment. The speed, the transparency, within minutes, the whole entire market knew what happened. And typically they are able to, not release the information to media right away. It's completely changed. So I think the whole dynamic of the market and the speed and transparency that this adds is changing the way financial services can be done.
Listen, Bybit was a perfect example of that, right? The hack was immediately known.
Yeah.
Like if you think about, 2008 and Lehman Brothers, you didn't know what was happening for days. We knew pretty quickly. Ben was out there and solved that, right? That's hugely important. So I think there's more positives to this than drawbacks.
Yeah, the Bybit hack and OKX on hand to launder the funds. Anyway, both great sports. Thank you so much, both of you. Really appreciate it.
Thank you.
We're coming to you live from CoinDesk Studio at Concensus 2025, sponsored by MoonPay, the global leader in crypto payments. GM, good morning. Welcome to the Milk Road Show on CoinDesk Live at Concensus. As I said, we got Kyle in the house. We're going to be talking all about what is happening in markets, what's happening in macro, and where we see the opportunity for crypto investors for the rest of this year. Now, if you are a CoinDesk follower, you might not know myself and Kyle. We're the co-owners of Milk Road, a media company that produces content for crypto investors. We have a daily newsletter, podcast. If you do know us, thanks for showing up again. Great to see you. Always good to be back. Today, we're going to discuss a few things. Should you be buying? Should you be selling? Or should you be holding right now? What are you doing with your crypto assets? Macro. What's going on in macro? Trump, China making some deals. Is all the macro noise over? Can we move on from that and forget about it? And then two big gainers in the past week. Ethereum catching a bid, absolutely rocketing right now. And then Coinbase over on the equity side, up 20% this week. What's happening in Ethereum? What's happening with Coinbase? We're going to touch on that and so much more. Before we jump in, if you are not subscribed to the Milk Road newsletter, I highly recommend you do. Why? 5 minutes every day in your inbox. You get a laugh and you get some great crypto investment advice. Check it out. Hit the link and subscribe today. Also, today's episode is brought to you by Ledin. Get cash without selling your Bitcoin. It's also brought to you by CoinShift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. With that, Kyle, what's up? That was a long intro with you just saying. It's not usually like this where you're sitting beside me.
Hey, you know what? It's fun. I'm glad to be with you. We're in Toronto, which is a city that Jay and I both lived in. It's actually the city Jay and I both met. We met here in this city. And you know what? I got to say it. It's all about the Leafs today. It's all about the Leafs. Go Leafs, go. I know our fans, a lot of them from the U.S., so you probably don't care about hockey, but we do. And we're actually going to the Leafs game tonight, so I'm excited. Game 5 against Florida. It's going to be a big thing. So that's actually what's on my mind. Screw markets. I don't care.
Screw markets. Screw crypto. Let's go Leafs. Okay, but I know you're not here to listen to us talk about the Leafs or sports. So let's talk about crypto. Kai, this has been a bit of a messy cycle and a bit of a confusing cycle for crypto investors. A lot of hope and a lot of belief coming in to Trump's inauguration. Hey, we're all going to the moon. Markets are going to go higher. Everything's going to go higher. It's easy street, right? Well, you know what? It's not easy street. So where are we in the current market cycle in your view right now? Give us just sort of help us understand where we are so we can understand where we're going.
Yeah, so at Milk Road, for those, I know there's a lot of new people listening today, but we talk a lot about, and what we believe in for our investment framework is the business cycle, the liquidity cycle. So when he's saying cycle, I believe that's what you're referring to here. I know a lot of people talk about the crypto cycle, this 4-year thing. We don't necessarily abide by that. Although the 4-year thing has happened, I think, because of the business cycle, because of the liquidity cycle. And so when we look at markets, that's where we tend to focus our thinking on. If I take us back to when Trump was inaugurated, around that time, we actually started to see financial conditions tighten, right? The dollar went really high, oil was going high. And so in that world, financial conditions tightened, liquidity was actually going down. We saw a pullback in new global liquidity I'm talking about here. And in that world, we actually started to get a bit bearish. I know everyone was euphoric and excited in December, and it was a great time because we were like, hey, finally the shackles are off and crypto can flourish. And we probably got a little bit too excited. But I think what really happened was financial conditions tightened. The business cycle actually ended up pulling back a little bit. And so we figured, and we said in December, we put a thing out to our members, our pro members at Milk Road that, hey, we actually think we're probably going to see a pullback here, which we got over January, February, kind of March. Then things got even worse than we expected them to. We thought maybe a 20, 30% pullback overall in the market. And I mean, we did get about 30, 33% or something in Bitcoin. I think was the final thing, something like that. But obviously everything else got completely decimated over that time. And what we sort of saw in that moment was, you know what, financial conditions actually started loosening around March and April. So we were actually getting quite excited. Global liquidity started to pick back up. And what we believe is that crypto sort of follows that, but there's generally about a delay, like 3 or so months, right? Now it's not perfect to that, but something around that time frame. And so around March, April, we actually started to get a little bit more bullish. And then of course, Liberation Day came and that ruined everything, right? And everyone was kind of caught off guard. And that was fine though. What we believed in that moment was this wasn't really anything crazy in the macro because we figured that these tariffs weren't going to stick around. It wasn't going to be as bad as it seems. We're not the doomsday type people that you heard a lot of. And we were kind of right on that, right? Like a lot of this stuff's kind of gotten solved. It's not gone away, but it's gotten a lot better than what it was on April 2nd or whatever it was. And so basically what we said is, hey, once this tariff stuff gets kind of figured out, we start to go back up again. Because again, financial conditions have loosened. The dollar is way lower than it was from back in December. Oil is like below 60, right? So the things that we needed to see on the macro side actually got cleared up, but we had that tariff scare. And so that sort of brought sentiment to its lows, right? Everyone sold off. And so to us, we were kind of like, you know what, we're oversold here. This doesn't make any sense. April 8th, we put out a call. We said, hey, we're going all in and we're buying a bunch. We did. That ended up being an amazing, incredible move. And I think what's happened a little bit here is sentiment just gone back to normal. So we kind of just like a mean reversion, right? Reversion back to the mean. Plus, financial conditions have loosened. The dollar is much lower. Liquidity has continued to improve. And so I think we're actually on a path here where, you know, we're not just back to where we were after Liberation Day, at least in Bitcoin and a lot of alts. We're actually much past that. And I think there's probably still some room to go in that. And so I think we're due for a really good year here, in my opinion. Again, this assumes that what we're hearing right now in markets in terms of Trump making deals with China, making deal with, you know, Japan, with India, UK, those actually go through. I don't think we go back to zero tariff world. I think we don't stick with whatever it was, 250% or whatever it was with China. I think we probably find some middle ground, and it's probably somewhere around 10% on select goods. And I think overall that's probably a good thing for the US, a good thing for the economy. And I think we'll go back to kind of where things were. And I think the business cycle will start to pick back up. So overall, I feel like things are looking really good, but I've been saying that since early April when things were not so good, which to be honest, so that's the time you want to be saying that. Now I'm not as excited. We were telling our people, hey, you want to be buying early April when everyone was scared, right? Now we're not really in, so it was consensus that the world was ending 4 weeks ago, whatever it was. That's the time you want to be buying. That's the time you want to be allocating capital. Today, it's not that anymore. Now we're sort of like maybe 50-50. There's still your doomsday people. We're going to recession, like Trump's an idiot, like all that kind of stuff. And then you have the other 50% that's like, hey, we're back and we're good and we're so back. And so in those moments, I'm not necessarily like flooding into markets at this point. I don't think anyone really should. We've obviously had a huge run over the last couple of weeks. But I think, you know, over time, over the next 6 months or so, things do look pretty good. And I think there's a lot more room to run here in crypto and equities.
I love the bullishness. The only thing Kyle's more bullish on the crypto is the Leafs right now. Everybody the past few months has turned into a macro expert. Like every group chat I'm in, everybody's just all of a sudden, all we're talking about is tariffs and macro and central banks and what's the Fed going to do and trying to predict things that are quite honestly very, very difficult to predict, next to impossible. Are we at the point now where we can stop being macro experts? Like, is it over? And when I say is it over, the show goes on, obviously, and the politics will continue and these deals will continue to be made and we'll be watching. But can we sort of pay less attention to that in our investment strategies?
If you're in crypto, I would say somewhat, because crypto's not really impacted by tariffs. If you are investing in equities, then you need to pay attention, because depending on what tariffs stick around, which ones don't, are going to impact certain industries and certain companies, depending on where they are and where they get their products from and where they manufacture, et cetera. So it's a more difficult outlook and world for US equities. In crypto, not so much. That said, I think macro always matters. I think this is what happens is people forget about the macro during good times, and that's what all of a sudden they get caught off guard, right? They get caught offside. I think that's what happened back in 2021, right? Everyone was so euphoric, so excited. And then it was like, hey, we're raising rates, we're doing QT. And everyone's like, bull market continues. And it was like, well, obviously not, right? Like liquidity is about to leave everything. And so I think, look, it's not going to be as front and center as it was the last few weeks, because you don't have Trump holding up a big sign and taxing the world, tariffing the world. I think that's kind of where we're getting, that's alleviated. But I think it matters, because if you want to know where things are going next, then I think it really is all about macro. Crypto is a macro asset. And so if you want to understand if we're going, you know, Bitcoin's going to do well or altcoin's going to do well, you got to understand the business cycle. You got to understand liquidity. And so, look, as I said, I think there's room to run here. And so maybe you don't need to pay attention to it every day. But I think if you want to try to figure out when we're going to get our next pullback or our next longer sort of bear market, then I think the macro is going to be the thing that tells you that. So I do think, as a crypto investor, you do really want to understand macro.
Right. It's a key part of your toolkit
100%.
In order to be a seasoned investor that has a good, well-rounded perspective. And as you said, I think a lot of people got caught in December, in early year, thinking, not paying attention to the macro side, not looking at the financial conditions globally, and then getting caught offside.
100%. No matter what you're in, crypto, you're in equities, you're in gold, you just want to buy real estate, you got to understand macro, right? It just is an integral part of our world and economies. And so it's what moves assets, right? And so I think it's just an important thing to keep an eye on and try to wrap your head around. I know it's not easy. Macro is a very difficult, complex subject, but I mean, Milk Road will help you. We're launching actually Milk Road Macro in the coming weeks. And so there's our simple version to help you guys keep an eye on macro. So keep an eye on that. That'll be coming out soon.
I wasn't even trying to plug us, but thanks.
No, I got you.
Thanks for plugging that.
That's what I'm here for.
Okay, let's talk about ETH. We got to talk about ETH for a sec. As we record, almost at $2,600. Okay. It's up 60% in the last 30 days, 50% in the last 14. Just catching a bid right now. What's your take?
For me, I think this is a mean reversion. It was so oversold, right? And there was so much hate. You see it on Twitter, you see it everywhere. Just everyone hates it. And it doesn't really make sense, the hate for it, right? It's still the place where all the biggest companies in the world decide to build on, right? It still has the most developers. There's still the most activity and things going on. I know, of course, Solana's doing well, and there's Sui, and there's all these others that are coming up as well. So like, I'm not saying it's the only show in town, but it's still the biggest, longest standing, has the most liquidity. It's the largest by a long shot. And so like all the FUD, all the doomsday stuff doesn't really make sense. And so to me, it was kind of obvious that whenever markets decide to turn, that it was going to catch a bid. Did I think it was going to be that fast, that quick? No, absolutely not. So like, I think it made sense there. Am I super bullish on it going into the rest of the year? Like, I think it does well, but will it outperform Solana? Will it outperform Bitcoin? Like, I don't know. I don't really know yet. Typically what I see is when the ISM, so this is sort of your business cycle, when the ISM picks up about 50, that's when we typically have our alt season. In that world, ETH will do really well, right? Obviously, other things will outperform it that are much smaller. But I think in that world, it will do really well. We're actually not there yet. We've had this kind of delay in the business cycle because of tariffs, because of what Trump has done. And so I think we're at 48.7 or something like that. We were above it. And so in that moment in November, December, we were above it. And it looked like altcoin season, things were going to go crazy. And so we're back below. So we'll see what happens here with all this resolution and tariffs. I think it's probably going to pick back up pretty quickly. And I think in that world, ETH will do well. Will it outperform Solana? Will it outperform a lot of other things? Like, I don't know. I think it's probably tough, mainly because it's a $250 billion asset. It's freaking huge, right? Most of these other crypto assets are 50 billion or 20 billion or 10 billion or 1 billion, right? They're much, much, much smaller. And so it's a lot harder to move a $250 billion asset. Now, I know Bitcoin has had an incredible run over the last few years, and it's a trillion or 1.5 or whatever it's at, maybe close to 2 trillion. But it's got people like Michael Saylor who will throw billions at it on a weekly basis, right? ETH isn't getting that right now. And I don't know if it ever will, right? Like at some point it will, I'm sure, but not today. And so I think it's just going to take a lot. Overall, I'm bullish on ETH. I think what Ethereum is doing is the right thing. I think Ethereum is building for the future, and it has the right kind of like scalability path. So I am very bullish on what they're doing. Obviously, Coinbase using them and Kraken using them, et cetera. So I'm excited for what Ethereum is doing. But is it the thing I'm most bullish on? Probably not. But I don't think it's a bad investment.
Let's look at one of the things that I know you are most bullish on, which is Coinbase. We were just on stage with John D'Agostino, head of strategy of Coinbase, talking, not talking so much about Coinbase, but I want to get your takes on Coinbase also having a great run, as joined the S&P 500 this week. What's your take on Coinbase and that as an investment going forward?
Yeah, look, I think Coinbase is one of the best companies that are run in crypto. They've been around the longest, pretty much, in crypto. They've been through it all. And what really excites me about them is they're diversifying their sort of revenue streams and their products, right? And not only are they an exchange and doing a lot of the like centralized stuff, they really are building at the forefront of the decentralized stuff, right? In the on-chain world. And I think that's really exciting to have a company that's that big, has that much capital, to be building both the centralized things. I mean, they just acquired Deribit, right? Another massive global centralized company for options. But then they're also really pushing the limits with Base, with Coinbase Wallet. They're doing some really cool things there. And I think they're going to do a lot to bring things on chain, right? Bring companies on chain, bring people, bring capital, and I think bring assets on chain. And so I think that really, really excites me. It reminds me of the sort of like early days of like, let's say Apple or Amazon or Google, right? Where they're very crypto native, right? And Apple and all them, they were very internet native. And so, you know, Amazon was able to pass Walmart and do a better job of Walmart in selling, different commerce, like whatever it was, because they went all in on the internet, right? And they were able to kind of leapfrog Walmart. Walmart took, I don't know, 10, 15 years after Amazon to get online and build their online store. And so I think, yes, banks are about to start custodying assets, crypto assets and all that. But I think when you have a crypto native company that's doing it, that's really pushing the movement to kind of bringing the financial system on chain, when you have a company like Coinbase doing that, I just think that's super bullish long term. Obviously, they've had an incredible run here over the last week or so. I think they're up maybe 30%, both because of the acquisition of Deribit, two, because, just crypto has done well. So obviously, it's kind of a caveat of that. And then also, joining the S&P, which I think is massive. It's starting to start to get some passive inflows into it. I think that's a really big deal. The other thing to remember about Coinbase, they still have $9 billion in cash or something like that. Maybe it's even more than that today. They didn't have to put a lot of cash into Deribit. I think they acquired them for 2.7, 2.8, but it was only 700 million in cash, right? The rest was in equity. We just talked about the size of Ethereum, which is a $250 billion asset. Coinbase is today 65 billion, right? So it's still fairly small. And so I think Coinbase, this, if you want to call it cycle or whatever, this next year is going to do extremely well, even though we're about to have a bunch of IPOs from other companies, which might sort of eat into it. But as John was saying just on stage before we came in, he's like, I'm not worried about that because what we're doing here is growing the pie, right? And I think Kraken IPOing, Circle IPOing, and the list of others IPOing is only going to grow the pie of crypto. It's going to grow its legitimacy. It's going to grow kind of the education awareness around crypto. And so I think ultimately that feeds into and benefits Coinbase, right? So short term, I think Coinbase is going to do very well here for the rest of this sort of bull market that we have. And I think long term, I think Coinbase is, again, it's like these Make 7 companies where you can just buy this thing and buy it over the next 20 years. It's just going to continue to do well. Now, that's assuming they continue to innovate, assuming they continue to execute at a high level, which they have been doing. They have an incredible team. And so I'm extremely bullish Coinbase and absolutely love to see what they're doing.
Yeah, you put out a report a few weeks ago saying that you believe Coinbase could be $1 trillion company someday, right? Currently,
many years from now.
We're a bold call though, a bold call for sure. When you look at Coinbase, any predictions you can give for us around market cap or price or what you think might happen in the next year?
Oh, in the next year, I don't know. I don't like to do predictions in the short term. I forget what it even is at right now. Maybe 250, 260.
He's about 260, yeah.
Yeah, 260. I think it's going to be one of the best performing stocks and that's not even just in crypto. I think in general of the year. And so I think it's going to do multiples over the next year, which it's done also the last couple of years. But I think it's got a lot of room to run here. I think there's a lot of capital that is ready to flow into crypto. And I think a lot of that capital, which is the institutional level, right, the kind of TradFi level, a lot of them aren't going to come into these $500 million, $1 billion liquid tokens, right? I think that's just not the norm for them. They don't really understand that. What they do understand is revenues, business models, right? They understand Coinbase's business, or at least they can wrap their heads around it if they put in a little bit of effort. A lot harder to wrap their heads around something like Solana or Sui or whatever DeFi protocol. And so I think with that, the large amount of capital that's coming in, obviously that's going some to the ETFs, but I think they're going to want to go into assets outside of just Bitcoin. And I think Coinbase is going to be the #1 option for them. And so I think it's going to do really, really well here over the next little while.
It brings up a very interesting question for investors right now, which is, what is the better trade for the rest of this cycle, however long this cycle might be, I think, and you can tell us what rough timing, but I'm guessing you're going to say somewhere in the 6 months to 18 months is how much longer we have in this cycle. What's the better trade? Is the better trade a crypto stock like a Coinbase or a Robinhood, if you would consider Robinhood a crypto stock because of how much crypto activity it does? Or is it a major altcoin like an Ethereum or a Solana? I just asked you this question on stage, but I want to ask it again because I think it's a very interesting question right now.
I think where you need to be paying attention to right now is revenues. Who is actually driving revenues in crypto, which there's not a lot of companies doing it, okay? Not a lot of protocols that are doing it, but who's bringing revenues and who's using that to buy back their tokens or their equity, right? Coinbase is actually doing that. They have a ton of revenue. Obviously, I think they had close to $2 billion in last quarter. And they're using that to buy back their shares of their company, which is fantastic, or to buy other companies. And so it's very obvious what's going on there. They're generating a ton of revenues. That's growing over time. And so I think that's huge. So I think there is again, as institutional capital comes in, they're going to look for revenues. And so again, that's why I'm so bullish Coinbase, actually also very bullish Robinhood. But I think on the liquid token side as well, yes, I know there's meme coins that have been going crazy, and there's a lot of things that are going on there. But I think, again, as institutions do come down that risk curve and they want to come into liquid tokens, they're going to be looking for which things generate revenue. And honestly, there's not a lot in the space. The other thing to think about is there's a lot of companies in crypto that their tokens are being used as incentives. They're being used for airdrops, being used for grants. And so that's a lot of sell pressure. And so you got to remember that tokens don't work the same as equity does, right? It's very different than investing in a stock where, you actually have ownership of the company. Tokens, you basically, for a lot of them, you have nothing. You might have some governance, but like ultimately, does that really matter for value? Not so much. And so you got to really be careful. There's even companies out there that do have revenues, but they're not doing anything, like Uniswap, for example. And I'm a big fan of Uniswap, don't get me wrong. I just want to throw them out look, they're a great company. They've been, one of the longest standing in the space. They have tons of users, tons of volumes, et cetera. But their token is essentially useless today. Now, one day it could have something, but it doesn't currently. And actually, the value that Uniswap creates goes to Uniswap Labs, to the equity, right? To the private equity, not to the token itself. So I think I assume institutions will start to understand that and learn that. And what you want to look for, and a lot of this right now is in DeFi, because it's been around the longest, is these guys are generating real revenue. They have real products, product market fit, real users, and they're generating, tens of millions to hundreds of millions a year. And they're using that, some of them today, to buy back their own tokens. And I think that is very, very powerful. If you look at an example for one is Sky, right? It used to be called MakerDAO. They turned on their buyback program, I think it was in February, and it's been up and up and up. They didn't have any pullback during this whole tariff craziness because it didn't matter that there weren't humans buying it. This protocol was just buying it on automation. It didn't matter, right? And so we saw it really do well. Aave has also done quite well because it's another one of those tokens that's buying back, companies that's buying back its own tokens. And so, look, we haven't had a lot of companies that have done this because of the SEC. They haven't really allowed it, but that's changing. That's changing pretty quickly here. And so I think we're going to start to see a lot of protocols change what they're doing and start to buy back. And I think that's an exciting time. So I want to be looking at who has revenues today, who can potentially have revenues based on where things are going in the space, and then who is buying back their token or who potentially could be buying back their own token. It's kind of like a boost, a cheat code, if you will. And again, there's not a lot of them in crypto. So as institutions come in and they want to allocate capital, that's what they're going to be looking for. And so if you can find those today, I think those are still fairly undervalued, although they've had a good run over the last few weeks. I would say they're still overvalued versus a lot of the rest of the market.
Mm-hmm. And you're right. You're probably talking about 10 to 20 protocols, right? Like if that. It's not, and you're really you're talking DeFi mostly, right?
For now, yeah.
For now, and you're really talking Solana DeFi and Ethereum DeFi, and then we'll put stable coins. I think would fit within DeFi, which is you bring up Sky. Yeah. Obviously, we're very bullish on stable coins. A ton happening there.
Hold on, I want to talk about the L1s for a second because you asked, your question was really about Ethereum and Solana. Look, I think all these are going to do well. Obviously, more activity is about to come on chain than ever before because you've got Coinbase and Kraken and all these companies building. You got Robinhood starting to bring, and looks like they're going to launch maybe their own chain. It sounds like they might be launching with Arbitrum or maybe Solana, and they're going to bring tokenized stocks on chain, right? A lot of the traditional assets are all moving on chain. I think that's going to be the next big thing over the next year or two, is bringing stocks and equities on chain, bringing private credit, bringing dollars on chain, obviously with stable coins. And so that's going to create a lot more activity. And so I think, of course, that means good things for things like Ethereum and Solana. But one thing to understand, the big trend that I'm seeing right now is that apps are beginning to launch their own chains, right? And I think that's the trend we're going to see. And even apps like Coinbase, what did they do? They didn't just go and build on Ethereum. They launched their own chain on Ethereum. And Robinhood is about to do the same thing. Kraken is doing the same thing. Uniswap, the most used app in all of crypto, what do? They launched Unichain, right? Athena, one of the most used stablecoin providers in crypto, they're launching Athena Chain. And so I think this is the trend moving forward, is companies, apps, they're all going to be launching their own chains like they used to launch their own smart contracts. And I think, I don't know yet what that means for the L1s, but I think the L1s have had their moment for the last, 6, 7, 8 years. And there's so many of them now and so many new ones that have came on the market over the last year. That trade worries me now. And I think what you want to find is apps who generate revenue, buy back their own tokens, and own their own block space. Because if you own your own block space, it's another revenue stream for these apps, right? And so like ultimately that's net accretive to Ethereum because many of them are launching as L2s, but it's a smaller amount. And so I think again, Ethereum Solana will do well long term. They'll probably do well because I think we'll have another hype cycle like we always do, right? Anytime prices go up, you get retail that comes in and they buy everyone's bags at all-time highs. And so like everything will do well. Not everything, but things that have good activity and good adoption. But the L1 trade, I think, is very different this time around than it was back in 2021 and even 2017 when we had that big bull market too.
Let's talk a little bit about are we going to have an altcoin season? And let me preface this by saying the term altcoin is a terrible term.
Yeah.
You're literally trying to basket everything but Bitcoin, which is at this point, I don't know, 10 million, 20 million, 30 million tokens with all the meme coin. I don't even know how many anymore, right? So are we going to, maybe you could enter us into this by talking about Bitcoin dominance. And do you expect Bitcoin dominance to drop? Do you think that Bitcoin dominance has peaked? And then let's talk about, are we going to see an altcoin season? And is it going to be like in the past where everything goes up? Or is it more going to be just the certain sectors within crypto and we need to think differently than we have in past altcoin seasons?
So I've got Bitcoin dominance wrong the last 2 years, so I have no idea if it's top, to be honest. It's currently sitting, I think, around, depending on which metric you look at, but around 65%. Those that don't know, Bitcoin dominance is just taking Bitcoin's market cap, comparing it to everything else in the space, right? And so typically what happens is kind of usually about 3/4 through the bull market, Bitcoin dominance tops. It doesn't mean that Bitcoin doesn't go up anymore. It still does, but you have ETH and all the others that start to outperform. And so Bitcoin's still going up, but its dominance or its like ratio versus the rest of the market cap starts to go down. And I think it's gone down usually around to about 40 or maybe a little bit below. I think at some point that happens. Generally that happens when the business cycle picks up and sustains above 50, which I talked about earlier on the macro side of things. The reason for that, this also happens in kind of TradFi markets, is the Meg 7 or like the bigger companies lead us in bull markets in the beginning stages. And then as liquidity picks up, generally rates also tend to go down, but not always. They didn't in 2017. But generally as financial conditions, let's call it, loosen, and that can happen in many different ways, people get a little bit more risky and they go down the risk curve. And so that's when you start to see the smaller stocks, the riskier stocks do well. Same with crypto, right? There's that like last bit of a bull market where the tail end, the riskiest stuff starts to do really, really well. That was the 2021 that we saw last cycle when NFTs were crazy, the most risky of them all. And the small little tokens started to do really, really well. We saw the same thing happen in 2017, right? And so the question everyone's looking for and waiting for is, will that happen again? We've had these like moments of altcoin season over the last 2 years. And each time, interestingly, if you look at the ISM, it's gone above 50. And when that goes above 50, we've had these like crazy moments, but then the ISMs peak back down, right? So we've had these kind of fake outs. And so I'm assuming in the next, let's say 2 to 3 months, that ISM is going to pick back up and sort of like economic activity is going to pick back up again. If you think about what that means, economic activity picking up, that's people buying things, people consuming all around the world again, right? And when people consume, businesses do well. So what do? They hire a lot of people. Unemployment goes lower, not higher, right? Companies take out loans, they start acquiring, they start to fund research and development. And so like, it's a really good time to be alive, you could say, during those moments, right? But it also means, because everyone has jobs, companies are doing a lot, people have extra capital. And so they want to go and allocate it down that risk curve. And so I think we'll get that at some point, probably the second half of this year. Maybe it's already started today. I don't know. Like we've obviously had a lot of moves from altcoins. So I don't know exactly when that starts, but I think we'll have it. Will everything go up like we had in 2021? I don't think so. The reason is last cycle and in 2017 as well, it was, you could close your eyes and just like look at CoinGecko and pick any token you wanted, throw 10 darts, all of them will do well. All of them outperform, you know, the NASDAQ and the S&P 500. It was ridiculous, right? Now, obviously that doesn't happen over a long period of time, but you had a 6-month window or whatever where you could do that and you could make multiples. It was crazy. I don't know that we'll have that again. We'll definitely have certain assets that will do really well and they'll go up multiples and it'll be crazy. But we now have millions of tokens, right? Millions of them. Now, most of them are just meme coins. They're not even a project tied to it. So like certain of those will do well. Meme coins, I don't think those have gone away. We've already seen it. If you look at the metrics, those have come back like crazy. Pumped Up Fun is generating a ton again. And so like, we'll see that do well. I think Fartcoin is back above $1 billion. And so like the degens will always degen. That casino thing, that's not going away. And if anything, we're only getting more and more of that.
Plus, we haven't had retail come in yet, really, in this cycle.
I mean, we did in December.
A little bit,
right? November, December. We did maybe early 2024 as well when the ETFs came in. But again, it was just these like short bursts because then all of a sudden we had the end carry trade unwind in 2024, so everyone left. And then this one, we had the tariff thing, so everyone left again. So like now we're going to have to wait until probably Bitcoin gets above all-time highs again. That's when all of a sudden headlines come out, media starts talking about it, and you get retail come back in. And that's when we go into this sort of more altcoin season craziness. But again, I think revenue generating apps will do well because even if retail, it takes them a while to come back, institutional capital is coming in today. There's no doubt in my mind. And so I think things like Coinbase, things like Sky are probably going to do well regardless. And then I think, you'll have your random meme coins and things, some that will do well. Many of them will do absolutely nothing. And so you got to be careful over there. But if you find good apps, good revenue generating things that are actually producing, fundamentally strong things, I think those are going to do well this cycle. Because both they'll get a bid from institutions and probably from retail as well.
Mm-hmm.
So
one thing that we talk a lot about at Milk Road is not round tripping a cycle. We've had that a lot in past cycles where people have come into crypto. They've had these, big goals and big dreams. I'm going to get rich, right? This is my path to making generational wealth. And they do make quite a bit on paper, but then they don't sell.
Yeah.
And they round trip and it comes back around. As we go into what
we've all done it, by the way.
Yeah,
we've all done it.
Guilty. As we go into this next part of the cycle, which I think what I'm hearing from you, and I feel the same way, and I know a lot of the guests that I have on the show feel the same way, is we are likely going to see Q3, Q4, we could see financial conditions ease, business cycle picks up, and things look good. We go into that bullish period. How do you manage that as an investor? What are the tips and tricks you have in order to make sure that you don't round trip it, in order to make sure that you don't make the mistakes that are common for a lot of crypto investors?
Yeah, I mean, first, it's going to happen to everyone, especially if you're new. If it's your first cycle, it's almost
but it's just going to happen.
It's almost a guarantee you're going to happen. You kind of have to go through that. One thing I would say is it's not even that bad to round trip. Like if you have been holding Bitcoin since last cycle, as long as you don't sell it during the bear market, then you did all right. You've actually done completely fine, right? And so I don't think it's the worst thing, again, if you're in the majors, if you're in something like Bitcoin. If you're in anything else, you're basically, you're getting wrecked. And so again, hold a lot of your assets in the majors. And maybe ETH and Solana will become a major, like a real major.
What
this
are
time.
the majors when you say the majors?
I mean, for now, Bitcoin is the thing. And even Bitcoin goes down a lot. Like it went down 70% at the end of the last bull market. But again, it came back pretty strong, and we're at 100 and whatever we're at today, right? So even if you bought the top back in 2021 and you did round trip it, I mean, you're fine. You're up almost double. So it's really not that big of a deal. Now, not the same story for all the alts, right? Most of these alts, they're not producing any value. There's nothing really there. You were just exit liquidity. And so really what you need to focus on is getting out of those. If you are going down the risk curve, you've got to get out of those. Bitcoin, you can hold it long term. That's actually fine. Now, what do you do here? One thing to understand is that in these markets, this happens all of the time. Think about what happened in December and November when Trump won. That wasn't even like some crazy 2021 level bull market, but it was still craziness. And think about how euphoric everyone gets. You've got to figure out how to manage sentiment, right? Fear and greed is the biggest thing in markets, and you've got to learn how to control your emotions. And so in those moments in December, the reason we actually said we were bearish or getting bearish was not actually fully because of financial conditions. Before we noticed financial conditions was tightening, we were just like, people are too euphoric. This doesn't make any sense. And so that's generally the time where you want to go against consensus, right? I talked about it earlier where earlier in April, everyone was bearish. Everyone was saying that the world was ending. That's your time to buy. Today, it's half and half. You don't need to buy. You don't need to sell. You can chill. But in a few months from now, or however long it takes, when we get back to that point, when everyone is excited about crypto, even your mom, that is the time that you sell, or at least you start to take profits. Again, I never get out of crypto fully. I feel naked if I do that, right? Like I don't want to do that. But anytime anyone's super excited about anything, this is not even just crypto, that's the time where you want to start to take something off the table. The other thing you have to do is just pay attention to the data, but not the data of crypto, okay? Don't look at new active users. Don't look at volumes, things like that. That's only going to go up during a bull market. And it even continues to go up when the bear market comes in, right? Because most people don't realize that we're going into a bear market. This brings you back to the beginning of our conversation. It's all about the macro. It's all about financial conditions, the business cycle. When that stuff starts to top, and not when it's already topped and it's already gone down, when it looks like it's starting to slow down, right? That's when you want to start to, again, begin to get out of the markets. And during that time, when that happens, that's when everyone will be the most bullish. So it actually is
the hardest time to do
it is the hardest time, right? It's like trying to, we told our audience to buy on April, I think it was 8th. We bought a bunch of Robinhood, a bunch of Coinbase, and a few other things. And we said, guys, I know this is like the hardest thing to do right now, but this is the best opportunity you get. We've seen this happen over many years of being in this space. The hardest times to buy, like my biggest opportunity was when I bought back when the COVID crash. We went down 50% in one day. And I was like, what just happened? Literally, it felt like the world was ending. And I was like, I think this is the time for me to buy. And I just I loaded up and it was the best decision I ever made. And again, in April so far, like who knows, maybe things change quick, but generally that is the best time. But on the other side, it's very, very hard because everyone's asking about crypto. Everyone's so excited and everyone's talking about how much money they're making. The moment you hear that stuff, just take something off the table no matter what. And also understand you're not going to get the exact top and your goal isn't to get the exact top. What I like to do is, as I see that people are getting super bullish and I start to feel that euphoric part, if you get in a cab and your cab driver asks you about whatever token, immediately you just start selling month over month. You just dollar cost average out. Again, you won't hit the perfect top. You'll start selling as prices go down, and that's completely fine, right? The key is you just don't want to hold 100% as we go into another bear market. Now, one other thing I would say is I don't think we get as bad of a bear market as we've had in the past. I think at least in the majors, things like Bitcoin, like ETH, some of the equities, et cetera. And the reason I say that is, I mean, Coinbase now is in the S&P 500. So like it's got kind of its floor is sort of rising as we go here. And Bitcoin has ETFs that are now in, pension funds, et cetera. And so they always have this kind of constant buying. And so will Bitcoin go down 70% this time? No, but will it go down 50 or 40? Like maybe. I mean, like you saw Amazon go down 50% in 2022, right? And a lot of the Make 7 actually did. So like, I don't think we're out of this crazy volatility. It's just kind of the world we live in today. So understand that, but I don't think it's going to be as bad as previous cycles. Now, if you're in meme coins and you're in these like high risk stuff that don't generate revenue and don't buy back your own tokens, expect 99%, like a down going 99%. Right?
Which is where if you are going down the risk curve, you have to very consciously decide how much time you are going to allocate to these investments, because as you go down the risk curve, if you do not keep your eye on the pulse and pay attention, the risk is too great. And I think that's where a lot of people make mistakes as investors.
And the thing that most investors make mistakes on is just managing risk, right? So it's okay to go down the risk curve and buy virtuals or buy, whatever, these things that don't actually have anything fundamental to it, or fart coin or whatever. Just make sure it's a very small percent. We've made mistakes in our portfolio. We're not perfect. We get a lot of assets that we invest in and we tell our audience to invest in or our members to invest in. We get them wrong. But if they're very risky, we put 1%, 2%. But what I always hear from our members anyway is like, we say, hey, we think this one could catch a bid. Here's why. We're allocating 1%. They go and they put 25% of their entire net worth into this thing. And I'm like, dude, that's insane. This is like $100 million asset. Like the thing could literally go to zero tomorrow and you're putting 25% of your net worth in. And it's funny. There's just a lot of, not even just retail. Honestly, I talk to TradFi people all the time and they do the same thing, right? It is the reason why crypto blew up in 2022, because TradFi people, not retail, literally got too excited, too euphoric in that moment, as I was talking about, and they were overexposed to stupid things like Terra Luna, right? And so it's not just retail who does this, it's actual finance people where it's their jobs to do this stuff. They still make those mistakes. And again, that happens during these euphoric times.
Play out the rest of this cycle for us. I've brought up timing a few times. Actually, before I forget, I want to mention that none of this is financial advice. I need to do that disclaimer because we've been saying buy and sell quite a bit throughout this.
I'm just saying what I do. I'm not saying what anyone should do.
Entertainment, everybody, not financial advice. Investing is risky. Do your own research, blah, 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 all of that. Disclaimer. The rest of this cycle, what I'm hearing from you is short term, a little bit unclear. We're still on, maybe we're not on solid footing yet, right? No. Could see a pump, maybe could see another dip or another drawback. Unsure right now.
I mean, like short term on the daily, whoever knows, especially with Trump, although Trump has been tweeting to buy right now. So generally that means
stocks are going up.
It's a good time to buy, right? I don't know. You just listen to him. It's the best indicator you can get at the moment. I think financial conditions eased a lot, right? And so generally we lag that by about 3 months. And so there's still a few more months left of that. So I actually think we're in a good position until, let's say, midsummer. Then I don't know what's going to happen from there. We'll have to kind of see what happens again with these tariff deals, the trade deals, what happens with economic activity, what happens with liquidity? What happens with the Fed? The Fed right now is not playing ball, but they don't necessarily have to. Again, 2017, the Fed was raising rates, and we had one of the craziest bull markets we've ever seen. And so, like, I don't think they need to participate fully, but things do need to change there a little bit, right? And we also can see what's China going to do. Are they going to keep printing a bunch of money, which so far it looks like they are? So we'll have to kind of see and play it by ear right now. In a few months from now, we'll be able to look and see what's going on in the macro. My guess is the U.S. or Trump and the administration, they have their midterms coming up, right, next year. Generally, what they want is a good market structure during that time, right, at least up until then or close to. And so I got a feeling that what happened here is, if you asked me a year or 2 years ago, I was saying that probably sometime in the second half of 2025, we sort of go into a bit of a bear market. Liquidity stops. But what's crazy is the last few months, we kind of put everything on pause. Now, whether that was on purpose or not, I don't know. There's a lot of these like conspiracy theories that they're trying to do that. They're trying to force rates down. They're trying to extend the cycle to midterms. Like, I have no idea. Whatever they did, it did end up doing all that, right? Like, as I said, the ISM should be above 50 today, and it's not. So the business cycle has been put on pause for the last 4 months. So does that mean we have a short cycle? I don't think so, mainly because financial conditions have loosened. Does that mean we have a longer one? More likely. So maybe we move into 2026 Q1, Q2, I don't know. Again, this is one of those things where we don't really know what Trump and that administration is going to do yet. They're doing things very differently than we've seen in the past. So we kind of, it's hard to make predictions right now. And so we kind of just got to play it by ear and see, look at the data, right? But I imagine probably somewhere in the second half or in the first half of 2026 is where we go into more of a bear market vibe. But will that be a year-long one like we had in 2022? Probably not. But again, I don't know. We'll have to see what happens with inflation. Right now, inflation seems to be under control, so it's not so much of a concern. That was the big problem in 2022. We had to raise rates like crazy because inflation was at like, 8% or something like that. We don't have that problem today, at least not yet. Again, tariffs could cause that, at least in the short term. But I think I'm not as concerned about inflation as a lot of other people. So I don't know. We'll have to see where things go.
Amazing. Kai, fantastic sitting down with you and having a chat. Doing it in person. Usually we're on the screen in different houses. So doing it in person is so much fun. Thanks to everybody for tuning in. I hope you are having a great day wherever you are. Make sure you're at Concensus next year. Great conference.
Yeah.
So excited to be here.
It's been amazing.
Just
It's
incredible.
huge. I wish I could show you guys what we're looking at over here. It's actually massive this year. Some great speakers. It's a great time. And you know what? We're in Toronto and the Leafs are playing, and I don't know how many hours right now, but go Leafs, go.
We got some people in the crowd here.
Yes,
Go
let's
Leafs,
go. Look at
Thanks
everybody.
for tuning in, everybody. Have yourselves a wicked awesome day. We'll see you back tomorrow on the Milk Road Show, or we'll see you also on CoinDesk Live. I think I'll be back on the show Friday. Yeah, have a good one. Thanks, everybody.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Welcome back. You're watching CoinDesk Live. I'm CoinDesk Senior Anchor Christine Lee with my co-host Jesse Hamilton. We're coming to you live from the CoinDesk studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. All right, Jesse, it's been quite a first day. The lines are long. People are just charging to get in. We've got a lot of amazing programming talking about the latest crypto bull run. What's caught your eye?
It's it's been a whirlwind, as these things always are. It's incredible to see all this come together, to see how much content you can get into one event. It's very difficult, especially. So I'm most interested in regulatory issues, policy issues, especially in the U.S. and Washington, where I work out of. So we've had a ton of panels that have directly addressed these things. We had news this morning that on stage announced that CFTC Commissioner Summer Mersinger, who's been on our show before, has taken the job as CEO of Blockchain Association.
Oh.
So that was pretty big news to come out this morning. We have sort of later today, just after this, we have French Hill is giving us some remarks, and he is of course the chairman of the House Financial Services Committee. So he'll be addressing what's going on with legislation.
He's always been a big supporter of crypto legislation. Innovation,
and he's the tip of the spear right now for U.S. policy making in that direction. And then of course at the end of the day, I'll be moderating a discussion with Bo Hines, who is he's the White House's sort of chief liaison for crypto issues. So that should be pretty interesting as well.
And it's certainly a different mood when it comes to regulation. I mean, just a year ago, there were folks just leaving the United States. And I mean, that's one of the reasons why we're here in Toronto in Canada, because folks didn't want to necessarily go into the United States. They were a little afraid of the enforcement environment
understandably
happening under Gary Gensler, the former chair of the SEC. And now,
what a difference a year makes, right?
Exactly.
Just at our event last year, the tone was markedly different. People were, sort of hopeful that something might happen, but nobody had any idea what was on the horizon. And of course, and Donald Trump won the election and changed the course of sort of the crypto policy progress in Washington. And of course, you talk about the president. He's been both an asset and a liability for the industry as far as what's going on in Congress right now. He's sort of, he was the starting gun for much of the work that's been going on, but his own involvement in crypto has been the chief objection of, for instance, Senate Democrats who've sort of gotten in the way of the stablecoin legislation very recently. So they've raised points about their issues with his personal stake in crypto as a potential conflict of interest.
All right. Well, I'm excited to hear more from Eric Trump and the rest of Brandon Lutnick as well to see those developments. And you're also involved in some panel talks? You mentioned with Bo Hines.
Bo Hines is definitely.
And you've talked to him before.
I've spoken with him before, so I think this will be an interesting discussion. He's really at the heart of sort of what's going on today, and hopefully we'll get into it later today. But he's as a representative of the White House in dealing with the members of Congress who are trying to get this legislation through. Specifically, we're talking first about stablecoins, and then about a bill that will follow along that will theoretically regulate the structure of the U.S. markets, commonly known as the market structure bill, which was known as FIT 21 in the previous session, but that's been built on in this session, and there's a discussion draft out in the House. So he'll have a lot to Bo Hines will have a lot to talk about, but also, we'll ask about the the White House's own sort of role in being sort of the cause of some of the objections raised by Democrats.
Right, and that is something that has been in the news recently. I mean, stablecoin legislation has been. I've heard from Trump saying that he hopes that it'll be passed by the summer, but now Democrats are coming into the fold, very unhappy with President Trump's involvement with crypto and with allegations of self-enrichment using his public office to have foreigners potentially fund him and have influence on the president's office. And so is this becoming a bipartisan issue? And
So,
will that derail stablecoin legislation?
It is. This is a very unsatisfying answer, but it's difficult to say because yes, it is a serious objection and rooted in some pretty harsh claims about potential corruption that this represents. And so Democrats in the Senate, and the Senate is the place to watch. The Senate is really, it's the sort of the bottleneck of congressional progress, and it was the problem in the last session. The Senate was why crypto legislation didn't move forward, and so now, move a session forward, move a year forward, and we saw a lot of progress in the stablecoin bill. We saw it move out of committee, meaning its approval in the Senate Banking Committee, with a very strong Democratic support, a bipartisan vote. 18-6 in that committee, which suggested that it was on an easy path, or relatively easy path to make it through the Senate. And then, of course, this erupted very recently, where the senators on the Democratic side of the aisle seemed to get together, including some of those who already approved it in committee, and decided what Trump is up to. In the crypto field, and that includes his meme coin, the dinner that he's hosting,
the VIP
soon,
dinner,
and stablecoin, World Liberty Financial's sort of relationship with stablecoins.
Who will be here at Concensus, by the way.
Yeah, so these things came to a head for some reason for Senate Democrats who sort of rose up and objected, and very recently sort of refused to let that bill advance on the Senate floor in a procedural vote. So it doesn't mean the bill is derailed. It basically just means that they have work to do in negotiation. But it is to your point, it's hard. It can be difficult to see how Democrats will be satisfied if their main objection is Trump's involvement in crypto, because there's certainly no sign that Trump is going to back out of these business arrangements. So we're just going to have to see how that gets resolved in negotiation.
And one more follow-up on Bo Hines, because from what I understand, the president's working group that he's part of, they have 180 days or so to come up with a plan or a revision of crypto policy in the U.S. Do you know?
I'm not even. I'm not even sure where we are.
Okay.
Admitting it, I'd have to look at the calendar, but there are deadlines for which President Trump's policymakers on this issue. That also includes crypto czar David Sachs.
Right.
And of course, his appointees to Treasury and the other agencies who are working on this are supposed to come back to the White House with definitive plans.
I'm interested to hear more. What comes of that?
I don't know where I do that.
Okay.
I don't know where that is, but it's one thing though to have a plan. In Washington. It's another thing to execute it, and to some degree, it's out of the administration's hands. Whether a new law emerges out of Congress. Right? Congress has to pass the law before President Trump can sign it.
All right, well, I'm looking forward to that Bo Hines interview. All right, Jesse, we're going to take a quick break. We'll be right back with an interview with Andrei Polyakov to talk about crypto lending, which is making a resurgence in Canada.
Over there, right?
Amid rising demand for crypto-backed loans, Canadian crypto lender APX Lending offers decentralized lending solutions, connecting borrowers and lenders on blockchain networks. The platform recently hit a milestone by facilitating 50 million in loans, showcasing DeFi's potential. Joining us now to discuss is Andrei Polyakov. He's the CEO of APX Lending. Andrei, thanks for joining us.
Thanks for having me.
You also have some news. You have a license and basically a monopoly on the crypto lending market in Canada.
Yeah, so a bit of a, I guess, just a bit of a correction. So Apex Lending is actually a centralized lending platform, not a DeFi platform. And you're absolutely right. Earlier this year in April, we received the first exemptive relief in Canada and are now authorized to service Canadians with Bitcoin and Ethereum-backed loans within a fully regulated, compliant framework.
Okay, so when I think of crypto-backed loans, I think of BlockFi, Celsius, Voyager, which had a untimely end in the collapse of, of the bear market in 2022. So what have you learned from those, and what are you doing differently?
Yeah, that's a great question. So, I mean, look, one of the main pillars of our business is our regulatory compliance. So we put in place a framework that really differentiates us and really builds on the lessons learned from failures of other players in the industry of the past. So one thing is we do not ever rehypothecate or reinvest the collateral that our borrowers put up for their loan. So that collateral sits with a licensed insured custodian in segregated cold storage for the duration of the loan. It doesn't move from that wallet, and it's visible to both the borrower on both our platform and on the blockchain for the duration of the loan. So that's one really key differentiation factor. The other factor is that we...
Can this be, well, okay, because I would say that in Celsius's cases, they would have said, no, we don't hypothecate loans.
Right.
So how do you make sure this time that you really aren't
Well,
doing
I mean,
it?
so what happened with Celsius and other platforms is they would commingle the collateral, right? So they would claim that, but then they would rely on, potentially like annual audits to say, oh yeah, at this point in time, everything was there. But then what happens the next day? You never know. With us, it's very different. Your collateral is parked in a segregated, non-commingled cold storage wallet for the duration of the loan. So you can see it on chain. So you don't have to even trust me or believe me. It sits parked in that wallet and it's visible to you as the borrower for the duration of the loan. And that's very, very important. That's one of the key, I mean, look, I've used platforms, lending platforms in the past, and that was one of my biggest concerns almost, is how do I ensure that my collateral is safe, secure, and is not being played around with? So that's how we sort of attack that problem at the root level, from a business design perspective, and that's really phenomenal. Our borrowers love that feature of our platform for obvious reasons.
Yeah, I think that's the reason why people gravitated to crypto innovation in the first place, that you can verify on your own what's going on chain. And so in terms of getting the license, how did you convince Canadian regulators that, you should give crypto lending another go?
Yeah, I mean, look, I've been in this industry for almost a decade at this point in time. I used to run one of the first licensed crypto trading platforms in the country called Coinbase. And so I took that business through the whole, regulatory process. And so when I approached the regulators with Apex, that was coming from a place of already having had, built up a great rapport with them. But fundamentally, I mean, look, the regulators look for companies and teams that want to build with a risk-first approach, that want to build, with investor protection in mind. And so when you come to them with a good business model that addresses, client risk, that addresses collateral risk, and you come to them with a framework that is compliant, then they listen. Like they're not, at the end of the day, look, it wasn't an easy process. Yeah. I don't want to make it sound like it's like a walk in the park.
One
Canada
right now.
It took almost a year and a half, probably a little bit longer even, and a lot of back and forth, a lot of education and discussion and with regulators. But yeah, very, very proud to say that earlier this year in April, we received the first exemptive relief from the Canadian Securities Administrators, and are actively deploying and servicing our Canadian clients at the moment.
And in terms of demand, tell me about it. And I mean, why are people wanting crypto loans? And what are they using them for?
Yeah, so I mean, look, there's a number of reasons why people borrow versus sell their crypto. There's two main ones. One is they don't want to lose the upside on their Bitcoin. So if they have Bitcoin, they don't want to lose upside if it rises in value. The second is when you sell a Bitcoin, that's a taxable event. So you have to pay cap gains taxes if you're in the money, right? If you borrow against your Bitcoin, in most cases, that's not a taxable event. I'm not giving tax advice here, so make sure you talk to your accountant. But in most cases, that's not a taxable event. So you're able to unlock the value and the liquidity in your Bitcoin and get cash while keeping the Bitcoin. And if it appreciates in value, that's amazing. You keep that obviously upside. And then what you use that cash for, I mean, there's a number of reasons people borrow from us. And those reasons range from, reinvestment in digital assets, real estate purchases, buying a house, buying a car, things of that nature. So, I mean, there's a lot of reasons why people would want to borrow and unlock liquidity. But with us, they can do it in a fully compliant manner, secure, transparent, safe, and fundamentally they can rest, at night knowing that their collateral is safe and secure.
And how much in loans have you given out so far? Where do you see the trajectory for this?
Yeah, we've had phenomenal demand since we started deploying in Canada. Like, we've millions deployed to date. We are also very excited to have signed a facility, a $20 million facility that allows us to actually deploy loans with a fund that's been a great partner to us. And so we have the facility in place, the capital to deploy the loans, we have the license, we have phenomenal technology. And it's just a perfect storm at this point in time. And there's a lot of demand, I can tell you, in Canada for a compliant, safe, and secure platform.
What's the potential for this market?
Yeah, I mean, look, I think at this point in time, we're looking at, I think there was a report that came out by A16Z last year that said 90% of crypto is being held in wallets that are not being actively traded. So that's just crypto that's just sitting there. If our theory is that if we were to bring a compliant global leading lending business to these users, there's a lot of capital that's waiting to be unlocked and a lot of liquidity. So the industry is projected to grow to 45 billion by 2030. The Bitcoin-backed lending industry specifically. And so, in Canada, we're looking at around $1 billion in terms of the size of the industry over the next 5 years. So there's a lot of room to grow, and we're very, very excited.
Okay, very fascinating. And how are you finding the climate in Canada for crypto right now? We've been talking to folks all day, and we've heard from entrepreneurs saying it has been difficult with the regulatory clarity and such. And with the election of Mark Carney, where do you see it all headed?
That's a nice question. I mean, look, I think with the current government, we don't expect in Canada, we don't expect any, we expect things to just continue as they are, kind of status quo. I think potentially a different government would have been more conducive to, more positive change. I think at this point in time, we're just expecting things to stay as they are. We'll continue working with our regulators and advancing things and pushing the industry forward. And so I think Canada has a great regulatory brand worldwide. I think we're in the top 10 countries as it pertains to financial markets and the regulators and the stability of our markets. So there's a lot of potential in Canada, even though it is a smaller market. But our regulators are very forward-thinking if you come to them with the right idea and the right risk mitigation factors in place, right? That being said, I think what's happening south of the border right now is very, very positive for this industry as a whole. So undoubtedly, things are going to be moving faster in Canada, just taking into account how fast things are moving down south, which is great for us as well. So I'm looking forward to very optimistic with the future of crypto lending and crypto in Canada.
And I guess my last question before we wrap is there any vetting involved with the people that you loan money out to?
Is there any vetting?
Yeah.
Well, I mean, absolutely. So our platform is fully compliant with FinTrack, KYC rules in Canada and FinCEN rules in the US, fully compliant with CSA client suitability and onboarding. So when you borrow from Apex Lending, you're borrowing from a regulated and authorized lender. And so there's full regulatory compliance involved. And of course, we don't lend to individuals that are on sanctions lists and things of that nature.
And is APX making, in terms of your business model, making money off of holding, custodying this collateral?
No, so we make money by charging our clients an interest rate on the loans that we deploy to them. And we source that interest for a lower rate from our institutional lenders. Okay. So it's a very straightforward model. There's no origination fees, there's no hidden fees. it's a very straight and simple model. You pay for what you borrow, and hopefully have an amazing service.
Well, Andre, thank you so much, and very good luck to you and in this new business.
Thanks for having me.
All right, that was APX Lending CEO Andre Polyakov. More after a quick break. Our next guest is a leading authority on the digital age, penning 16 books, including the bestseller Blockchain Revolution. His new book, U to the Power of Two, Redefining Human Potential in the Age of Identic AI, will be released this fall. But we're getting a world premiere early preview right here at Concensus, so please welcome Blockchain Research Institute CEO Don Tapscott. Don, thanks so much for joining us. You know, I've got to credit you and your book, Blockchain Revolution, for really helping me have that aha moment on why Bitcoin, cryptocurrencies are the digital transformation of our financial system. So thank you.
You know, I wish I had $100 for everybody who's told me that. It's almost a decade.
Yeah, you were early on.
And sometimes you get lucky with a book.
And now you're on to artificial intelligence. So already onto the next trend. And you're arguing that personal agents or identic AI will be very key to the next wave of technology. So tell folks, what is identic AI? What are these personal agents?
Well, the new book, as you mentioned, U to the Power of Two, is about redefining human potential. And identic AI, by the way, my co-author is Joseph Bradley, who's the CEO of Autonomous. And Christine, there are all kinds of agents. There are agents in call centers, financial systems, supply chains. And this so-called agentic AI is the future of AI. But the one that really matters and will have the biggest impact is digital Christine. No, it's
my digital clone.
Yeah, well, it's more than a clone because it's infinitely more capable than you.
Oh,
and it will enhance your capability dramatically.
Yes.
So it'll be your personal doctor. Very capable because it's gone to every medical school in the world, read every text, and knows about every procedure that's ever been performed. It'll be your personal tutor. It's literally a know-it-all because it knows everything. It is all-knowing, all recorded knowledge. And it will help you manage that. It's your vice president. Actually, it is an infinite number of vice presidents. One's out negotiating problems with customers. The other is addressing a big opportunity in a new market. Another is attending a dozen conferences that you can't go to figure out which one would have been the good one. Another one's helping you manage your personal life. So there are a dozen different parts of our lives, all to which our digital identities are not just made of data, but they're becoming brilliant and smart. And if we do this right, This will expand human capability infinitely. If we do it wrong, it'll lead to the extinction of civilization.
Oh my.
Stakes are
That-
not
that's
very
quite a
high.
spectrum.
Yes.
So how are they being used today? Do you have a digital twin or a
Well, no,
personal agent?
right now we have agents. So we have an assistant like Microsoft Copilot. But this is happening very quickly. Over the next few years, all these different agents will come together, and AI will not be a tool that we will use. Like you probably use ChatGPT or something like that to help you plan an interview. It will become part of our basic experience. And it'll be with us in all kinds of ways, initially on a phone, through the ambient world, like through Alexa or something like that, on your TV, in your car, but ultimately a hologram on your desk, ultimately a robot. Robotics are happening very, very quickly as well.
How soon is this happening? How soon is this happening?
Well, we're saying this decade. I'm guessing the book will be published in the fall. Within 3 years, most people of means and professional people, that raises an issue, will have a digital self that will be their companion, working with them on all parts of their lives.
Right. You mentioned it could unlock all this potential in productivity and helping our daily lives, or it could lead to the destruction of human civilization as we know it. So how do we make sure we do not have the latter case happen and we do maintain the utopian vision of what AI can do?
Yeah. Well, they say there's a fine line between vision and hallucination, but I think with this book, it's the first book about the most important thing happening in the world. So, and that's happened to me a few times in my life where I got lucky. Blockchain revolution was another one. But people talk about lots of problems, but fundamentally there are two big ones that we address. One is who's going to own the digital Christine? Mark Zuckerberg?
Yeah.
Google?
They own a lot of my data already.
Yeah, they're digital conglomerates, a new species of business, unlike we've never seen before. And they own your digital identity, which, thank you, today is made of data. And that data, I mean, they know a lot more about you than you do, because you don't know exactly where a year ago, what medication you took, what diagnosis you had, what transactions you did, what you said, who you interviewed, and so on. So you create the data, they capture it. You can't monetize it, you can't use it to plan your life, and your privacy is being undermined. And people say to me, well, Don, privacy's dead, get over it. This is silliness, because privacy is the foundation of freedom. So right now, the digital Christine is data. You need to get that data back so you can manage it responsibly for yourself. But over the next 2 years, see change. That digital Christine is not just data, it has an IQ. And it's going to be a lot bigger than your IQ, and you're very smart.
So the key is to, I suppose, gravitate toward decentralized AI solutions.
Yeah, well, to actually answer your question, we need to get control over our digital selves.
Own your data. Yeah.
And the way to do that is by modest little undertaking. It's called reinventing the AI stack. And we show how that can be done in the book. We need decentralized physical infrastructure, decentralized data fabric, a decentralized set of AI models, decentralized AI logic, and decentralized applications. And this is not a pipe dream. This is a feasible thing. It's technically feasible, and it can be done.
Another question I had was, are you legally liable for what your digital clone does? How do you manage that?
Well,
what if your AI personal agent that looks like you, digital Don, does something that I don't know, that may be illegal, and who's liable for that?
Welcome to the new world where every single thing that we know about law, human interaction, and governance is going to get challenged and questioned. And that kind of leads to that second issue that, I mean, digital Christine becomes godlike. If you think about it, you with your agent have an IQ that's almost infinite. You're all knowing. You remember everything. You have a view of the world that is indistinguishable from magic. You know that song, What If God Were One of Us?
Sheryl Crow, great
God,
singer.
yeah. God will be us. Now, what happens if the digital companion decides that it doesn't need you? Or worse, that it doesn't like you? So this is creating a deity that's not divine, but is potentially demonic.
Wow.
And so, and that digital God has unlimited power. Think about once it's super intelligence, it can hack every financial system. It can hack the robotic version of you, which has physical strength. It could hack the nuclear codes. So the way we're going to solve that is not through technology. We need a new social contract in society, a new understanding between government, business, and civil society. And this has been my big mission over the last few years. How do we forge a new understanding in humanity about how we're going to try and make sure that this smaller world that our grandchildren inherit and the smarter world is actually a better one?
Wow. That is very mind-blowing. A lot of legal, ethical questions to consider in AI. Looking forward to the new book, Don. Thank you so much for giving us a preview.
Yeah, the new book is available for pre-order.
All right, Don, thanks so much. That was Blockchain Research Institute CEO Don Tapscott. Let's take you now over to the action at one of Consensus's dynamic stages. Stay with us on CoinDesk Live.
New players to hold the asset, to worry about custody, and they can still get that exposure. As far as staking goes, I really think staking addresses a target market that's already somewhat long crypto. Sure, you can get staking yield and hedge and not really have exposure to the underlying, but most institutions, whether they're TradFi or crypto native, that are interested in staking are already interested in crypto, are already somewhat long crypto. So I think the bigger question is, how do we get new entrants? How do we get new money into the space? And part of that is going to be regulation, which there's reasons to be bullish on and there's reasons to be bearish on. Reasons to be bullish on, we obviously have the most pro-crypto Congress and administration that we've ever had in the United States. We've had the DeFi broker rule overruled earlier this year. That was one of the most bipartisan votes that we've seen in a long time, where basically if that wasn't overruled, it would have squashed DeFi, but it was. So now DeFi has a chance for another day. But we're seeing hangups on the stablecoin bill. We're seeing delays. So all that's to say, you see headlines every day about this company, that company doing this in crypto or some transaction on the blockchain. But to unlock significant new capital, I do think we need to see some actual new regulation pass, which then will allow these numbers not just to be tripled, but 10x'd.
You're right on the money, because the next slide talks about the people who didn't want to go into DeFi. The main reason, as you can see, is policy. So how do you change someone's mind who is, even in this day and age, or this 2025 right now, today, is on that 57% percentile that said, oh, I'm not touching it. I will let anyone answer that one.
One thing, I just realized we have the slides right there. So
Oh, great. Yeah, the slides are right there. Yeah. Although it's hard to see, it's better to.
Oh, okay.
But anyway.
So just one point on that is that I think the regs tailwinds are coming. I mean, there's never been a better time. We all know that. We're just really waiting for the legislation around stable coins to really show up and get passed. I often say stable coins are the new meme coins in some sense, because everybody is issuing a stable coin these days, right? So and there was a report from Citibank as well recently, Citigroup, where they said they spoke about stable coins, a market cap from 200 billion as it is today, or 300 billion, whatever the number is, to 3.5 trillion or something like that over the coming 4 or 5 years. And it is just not going to be stable coins being thrown into blockchains. It's going to be stable coins that's also offering liquidity to RWAs. So it's going to be a growth of stable coins, which reflects fiat liquidity on chain, but also that is really providing the liquidity backstop needed for the bonds, the repos, the stocks that's going to go on chain. So it is actually, I mean, it's never been a better time for TradFi and DeFi to work together in this industry.
I just want to clarify one thing. You said stable coins are the
new meme coins.
You heard it here first, folks. Stable coins are the new meme coins. At Consensus 2025 Toronto. All right. Blue, what do you think about the regulations part of it?
So what I think is really interesting is that regulatory and compliance are like neck and neck. I think that regulatory is, we've been waiting a long time for regulatory clarity as an organization, as an institution. One of the things I really hope that we all take a moment to appreciate is the SECs, the amount of technical understanding and knowledge that they have brought to the past several months in terms of what they're doing, the questions that Hester Peirce put out, the roundtables. Like, there is a level of technological understanding focused on providing clarity that hasn't existed before and can be a barrier. Like, this is not easy stuff, as we all know. So I think that is a huge plus. And I think the other one is it is a steep compliance learning curve when you talk about DeFi, right? So it's very difficult to retool and sort of bring an entire compliance department up to speed, up the curve, when everything they normally focus on works on traditional rails, and then you kind of have to introduce this entirely different way of operating. And I think that it's something that we have to put time and energy into helping people understand, but I think that they can get there.
Right. I want to talk about two things. And David, I'm going to come to you because I know you're very excited about this. AML and KYC. Those were the main barrier for institutional investors to come into DeFi. What are your thoughts on that?
Yeah, if that's the one takeaway, I am very excited about AML and KYC. What's not to love about it, right?
Exactly.
But it's an unlock to a new target market to have permission DeFi, permission pools that are composable with the broader DeFi universe. So individual institutions can choose their risk tolerance for what type of pools they want to get into, but still have the on-ramps to play in sort of the arena to begin with. So, that is kind of one of the critical elements. It's going to be one of the challenges, honestly, of the market structure bill, right? Sort of the stablecoin bill, they're going to work through that. They're going to figure that out. The market structure bill, the CeFi stuff, they're going to be able to figure that out. The DeFi element of how you have market structure and how you have KYC and AML regimes that allow for DeFi to thrive, but also allow for compliance to exist. There's just going to have to be some creative collaboration and solutions around that. And Wintermute, we're pretty interested in a solution that's going to allow CeFi and DeFi to thrive, right? We're very active in CeFi. We're very active in DeFi. We believe there's an opportunity for both. And I think, as Blue mentioned, we are fortunate to have regulators now that are very knowledgeable, and not just knowledgeable, that are interested in engaging with the industry to get feedback on what type of creative solutions can be put forward to address those real concerns that will unlock a bigger market for all of us.
Gotcha. Makes sense. I want to address one more thing before I told you about the scenario that I'm going to give you all at the end. Let's talk about the public and private blockchain. Is public blockchain or private blockchain, which one is more attractive for someone who is institutional? An institutional investor, they don't want their transaction to be public, right? We've seen it in TradFi. So how does that work? I don't know. Whoever wants to take that one.
So I think that I feel like 2 years ago, there was like an endless set of panels and working groups, and the question was always public versus private blockchain. And I think that we weren't that vocal about it, but I think if you look at the behavior and the actions of most of the large buy-side firms, we've consistently opted for public blockchains.
Why is that?
So I think that we get Web3 economics, right? So we get the concept of participating in the economics. Two is that we understand that the decentralization actually as counterintuitive as it sounds, is actually a key pillar of the security of the network. And the third one is if you have a ring-fenced island and something, if I buy a tokenized bond and I can only ever sell it back to the people who were the book runners on the same blockchain that they sold it to me, I'm basically on a liquidity island, and that is a real market structure risk.
Right.
At some point, there will be a day that the market pukes and that system breaks down.
Liquidity,
And we get that.
Yeah, liquidity. There wouldn't be liquidity where you're trying to sell it, but you can because you're on a private blockchain. Fair. David, did you have anything on that one?
Yeah, no, I just agree that the future really needs to be built out on public blockchains. Obviously, private blockchains have their use case and have their role, but to unlock the value prop of crypto, of digital assets, the composability is critical to have a public blockchain, and to have sort of the efficiency, the speed, the scale has to be public, and the transparency too.
Transparency. Arun, I want to ask you about the same question, but a little differently. What about the security, like the hacks and all that stuff? How does that impact, institutional investors' mindset in investing in public or private blockchain?
Yeah, so when a lot of these institutions started experimenting with blockchain, they started with the private blockchains. Understandably, they were very conservative in their approach. As of yesterday or the last 24 hours, JP Morgan has successfully executed the first transaction on a public blockchain, which is great. And that's where the world is going. I personally think private blockchains are obsolete. Even there was an event in Switzerland last week, 0.0 Forum, and R3 basically announced that they were looking to launch their own public blockchain.
Right.
So that's a statement. It's big for that transition. So institutions are looking at public blockchain. Now, what is the fundamental thing that they need on public blockchains that will allow them to actually create this regulated, controlled space, financial services, while also being able to tap into the liquidity and composability and the app ecosystem? It's really token standards. So if you're looking at Ethereum, you have ERC-3643, and if you're looking at Solana, we have Token 22 standards. And what you do with those standards is you embed all these regulatory controls like KYC and AML into the token itself. You don't need to build protocols around it. The token itself has these standards. So if you're going to send this token to someone, they need to be whitelisted and have their wallet needs to be really kind of the right place where these assets can reside. So without that, you won't be even able to facilitate the transaction. I think those are already live. Those standards are there at the moment. So the rails are there. Now it's about making sure that assets can come at scale. They can basically make sure. And when assets come at scale, it's not necessarily the regulatory risk once the token standards are taken into consideration. I think it's more around liquidity risk. How do we make sure that these assets don't depeg from their real world price? And cyber risk, of course. That's probably the biggest.
Welcome back. I'm CoinDesk executive producer and senior anchor Jennifer Sanasi, and this is my co-host for the day, Leah Callum Butler. I said day, but you're actually going to be here for only an hour. We got to lose Leah because she is so busy. We are coming to you live from the CoinDesk studio at Concensus 2025, sponsored by MoonPay, the global leader in crypto payments. MoonPay recently acquired Iron, which now enables multi-currency treasury management for enterprises and marketplaces that plan to hold or enable crypto payments. Leah, I said you're a busy gal. You've been all around the conference today. I think you might have even been on a bus. So tell me what you've been up to.
We have been doing some interviews in the Midnight Bus. I just spoke to Fahmi and Charles from Midnight, which is the new privacy-focused blockchain, they have a bus which is going all around Toronto, and I think if people even want to go between side events and things like that, they can jump on it. But that has been fantastic. Other than that, I've got to be honest, I haven't even had a chance to see any of the talks yet because I've just been, doing a lot of things. But Concensus always feels like a reunion for me.
It really
Yeah,
does,
like-
right?
So like on the scenes, I've seen like all of my favorite people who have been around, you know, in the space since like 2017, 2018 or earlier. And I just love, this is why we come all the way to Toronto for these things, right? Like rather than just watching online, I love coming all the way because, you know, the magic really happens on the sidelines.
I hope that I'm one of your favorite people that you've got to see.
I'm not meant to
IRL.
have favorites, but obviously you're the fave.
I know. I made Leah say that on camera, so it's just.
I'm going to be in trouble now. You made me admit it.
All right. We are going to take a quick break. When we come back, we'll have Eric Chen from Injective Labs joining us at the desk. Welcome back to the show. Injective, a Cosmos-based blockchain, develops a decentralized exchange protocol that enables a fast, secure trading of derivatives and smart markets on a fully open blockchain. It claims to be the fastest layer one and has pioneered cross-chain trading with recent partnerships expanding its ecosystem to include Ethereum and Solana bridges. Joining us now to discuss is Eric Chen, co-founder of Injective. Hello.
Thanks so much for having me. Really excited to be here.
Of course, thanks for being here. I didn't mention in the chat that we just had with Leah that I have a Concensus moose here, and I would just like to showcase him because he's so cute.
He's so cute.
I know. All right, we're going to talk about serious things, but Leah and I were just talking about what's going on here at Concensus, how nice it is to see everyone IRL. Even you and I have spoken over video call. Talk to us about your highlight of Concensus so far, or maybe what you're looking forward to.
I think one of the coolest thing about Concensus is that it's a perfect platform and venue for me to meet old friends and new. I'm really excited to talk about kind of like the merging of DeFi and TradFi at the panel earlier today. And of course, you know, this is just my first day at Concensus. I think there's going to be a lot more exciting things I'm going to be talking about and discussing with folks here.
Well, let's talk about Injective. So maybe you can tell us a little bit about it, but also I know that recently you've had some integrations with Solana and Ethereum. I was wondering how that's actually impacted, say, things like trading volume, the users.
Yeah, certainly. I think recently one of the most exciting initiatives that we've been working on is a multi-VM layer, which allows for different types of Solana dApps and also, more importantly, Ethereum dApps currently to deploy on top of Injective and to really synergize with the existing ecosystem within all the Injective dApps. This means that in our upcoming testnet for the EVM layer, we kind of unlock this plethora of Ethereum developers, bringing billions and billions of dollars of TVL activity and millions of users onto the Injective platform, and unlock, you know, the true synergy for the very first time between the enshrined Injective DeFi layer and also the plug and play modules, and also with the Ethereum dApp ecosystem. And of course, like even today, I think Upshift has launched a vault targeting institutional yield that allows for Ethereum USDT deposit for trading on top of Injective to generate a target 30% yield. And of course, that coupled with iAsset has just been absolutely tear for the Injective ecosystem for the past month.
You mentioned the convergence of TradFi and DeFi, and I have to say, I know Concensus is just getting started, but that really has been the common theme in a lot of the conversations that I've been having here at this desk. What do you think it is about where we are right now in the space that is making it possible for TradFi and DeFi to come together to enable this mainstream adoption that we've been talking about for so long?
I mean, times are very much changing. Basically, what we're seeing right now is a complete floodgate of institutional capital, of regulatory clarity, and also a collaboration between industry leaders and also policymakers for the very first time in the history of this industry. And this means that, you know, not only in the US, but also for the entire global audience, everywhere is taking a very serious step towards recognizing and also adopting crypto and truly, onboarding into the on-chain world. And this is the very first time that we, as a DeFi-focused chain, started to really interfacing and really kind of accepting and onboarding different types of financial giants of the TradFi world to really kind of showcase the advantages and the importance of DeFi and the on-chain world, and really bring them, true value for DeFi users and TradFi users alike.
All right, and Eric, if you look at your roadmap ahead for the rest of 2025, any one piece, one moment that you are really looking forward to?
I think it's our multi-VM launch. First, we're going to start off with EVM, and later on, we're going to be expanding to other smart contract environments. And this not only unearths all of the developer base, but also all the institutions that are coming from all walks of life that are familiar with like any type of like a smart contract or on-chain environment to be able to co-locate and deploy and synergize at the same place. And of course, there's been a lot of very exciting asset issuances that are going to be happening on top of Injective beyond iAsset, which has been primarily consumer-friendly product, and we're really much looking forward to that.
Eric, thanks so much for joining us at the desk. We hope you enjoy the rest of the event.
Thank you so much.
Great. That was Injective co-founder Eric Chen. All right, we are at Concensus 2025. As you know, we are coming to you live from the CoinDesk studio. So let's take a look at what's going on social media now. All right, we have EZA on X, a mega workshop being delivered by Ninja Code on our EZA Consensus 2025 hackathon main stage right now. The hackathon is going on right now, Leah, and this is the largest blockchain hackathon in North America. And just seeing, I know that's a video, we can't really see the video now, but that's a lot of people.
That's a lot. Yeah, I actually got to judge the EZA hackathon in Hong Kong, the last Consensus event, and some of the ideas that came out of there were absolutely fabulous. I was so impressed with the quality of the teams.
I love that. We're going to check out the hackathon in just a little bit. Let's take a look at what else we got going on social media. I loved this when I saw it on X earlier today. We have Michael Stewart who said, time to find out which building holds the most whales. And Michael is photographed in front of Ripley's Aquarium, which is right here in Toronto, and also in front of the conference center. So which holds the most whales, do you think? The aquarium or the conference center where Consensus 2025 is right now? Someone in the audience is saying here. I think the most whales are here.
My money's on Consensus, yeah.
All right, and this one I cannot read, but I do see Charles Hoskinson there. You said that you're on the booth with Midnight. I didn't have my glasses, so people who are watching this are going to have to read that tweet. It's very long, and this is my own doing because I chose that tweet to go there. But I think that this tweet really encapsulates the fact that you can come to Consensus, you can meet the people who you idolize, the people who are building the projects that you really love. You can also meet the people who think like you and who envision the same type of future, which I think is awesome.
Yeah, it's such a community spirit, and I love that people who have been around for so long and have these like larger than life personalities, they're all completely accessible here, just hanging out, chat to the fans. Love it.
Love it. All right. If you're at Consensus with us in Toronto, or if you're following along from home, share your favorite moments with us and tag Consensus 2025. Also tag us at Consensus 2025 or on CoinDesk, and maybe we'll share your post on this broadcast. Okay, let's get to our next interview now. Arculus, named after the Roman god of safes and strong boxes, is a cold storage wallet offering secure digital asset storage. The company recently partnered with MoneyGram to enable users to easily convert cash into USDC. Joining us now to discuss is Adam Lowe, Chief Product and Innovation Officer at Arculus. Adam, how's it going?
Great. Happy to be here. Always happy to be at Consensus.
Okay, we got to talk about this MoneyGram partnership because that's huge. Talk to us about what it entails.
Absolutely. So we already partner with some of the largest banks around the world, some of the largest fintechs, enabling payment and blockchain all in one. And we really wanted to go beyond that, right? The unbanked, underbanked, people who need remittances. So we make it super easy anywhere in the world to essentially on-ramp via MoneyGram, cash in, and then cash out globally. So that's all done in partnership with Stellar and the Stellar Development Foundation. So all of those assets ride around the rails. And then when you want to cash out, you can get fiat anywhere. And it works on the Arculus platform. We're the first hardware wallet to integrate. So when you do have those funds on USDC on Stellar, they stay safe with your keys in your pocket and your Arculus card.
How does this align with your long-term strategy?
Yeah, so I liken it sort of to the 1890s and the railroad, right? Everybody was building rails on different gauges and they had to interact. So we've done traditional payments for a long time, and Arculus is that intersection. So whether you're doing payments on Visa, MasterCard, MoneyGram, etc., sort of Web 2 payments going into the Web 3 world, we can do all of them. So we help people easily, without all the complexity of blockchain, on-ramp their assets on-chain, be able to spend globally, right? So like my corporate card is my hardware wallet, it's my passkey, and it spends at every Visa terminal around the world. So I can spend natively on chain, I can spend on Visa and remit stables, and we make all those trains and rails interact.
Amazing. Okay, so I know we're not allowed to keep you too long because I think up next you're actually on the summit stage
I am on the
doing
summit
a
stage.
talk. It is titled Are Your Funds SAFU?
Yes.
So I want to ask you, in terms of keeping our funds safe, what do you think people are not talking about enough?
So I think what people aren't talking about enough is everybody's trying to on-ramp quick and get people on platform, right? So a lot of times you log in with social. Well, if someone hacks your Gmail account, they instantly have access to your funds. So I think sometimes we conflate security with friction or being hard. You know, the Arculus card and the Arculus platform passes the Adams mom test, which means I can give it to my mom, give her no instructions, and she can use it. So security can be safe and easy to use. So if you can tap a card to a payment terminal, you can tap our card to a phone, you can keep your keys safe, and if it's a centralized platform, you can tap and securely log in with a passkey. So what people aren't talking about is, you know, it's easy to hack an email address. I go to Black Hat every year, I go to DEF CON every year. It's a problem. So don't keep your assets safe simply behind an email address.
What do you think needs to happen to help increase adoption of hardware wallets, and I guess also help people understand that security is not hard and it's also necessary in the world that we are heading towards?
Maybe more people need to hire their mum as head of QA.
Yeah,
exactly. You know, I think it's challenging. I think it's just an education piece, and like people have busy lives, they don't have time to do due diligence and everything. You know, that's where you're trying to get the word out on platforms like Arculus, and trusted by the largest banks in the world, trusted by federal governments to make federal IDs. It's the same chip as the US passport. You know, whether you use us or use someone else, use something to help keep your funds safe. And I think that, you know, people kind of, like I said, think either security is hard and on like a little USB widget thing, or just easy mode with an email. And I think we found the best of both worlds, and it's just that continuing education. So we recently did the MetaMask card with MetaMask, and I think, you know, that our tech white label on platforms like that is going to onboard the next X million because it is easy to use and it is in a form factor people understand.
Adam, thanks so much for joining us at the desk. It was an absolute pleasure, and good luck on your panel.
Thank you.
All right, that was Arculus Chief Product and Innovation Officer Adam Lowe. Coming up, Ava Labs President John Wu on the latest developments in the Avalanche ecosystem. Our next guest is the president of Ava Labs, the team behind the Avalanche blockchain. Avalanche has shown its versatility across industries, bridging gaming, DeFi, and now TradFi on chain. John Wu, welcome to the show.
Jen, it's great to see you. Hi, Leah. How are you?
Of course, great to see you. I mean, the last time I saw you, I think we were in Buenos Aires, where CoinDesk is going to be with the rest of the Avalanche folks in London after this. Talk to us a little bit about how the year's been for the Avalanche ecosystem.
Oh, the year's been fantastic, and we can't wait to have you in London. The summit's in about a week, so I encourage a lot of people to go there. The year's fantastic. It's becoming known that Avalanche is the tested and trusted chain for institutional clients. We've done many projects with Apollo, JP Morgan, Wells Fargo, Wellington, you name it. All the major banks and alternative asset managers have been working with us. On top of that, we still have a huge presence and a dominant presence into, call it, crypto native world, because it's the only way where the place where the scalability happens in a way that allows developers to have their own blockchain on the Avalanche network of networks.
What gives you that competitive edge, do you think? What is making the Avalanche ecosystem so appealing to institutions that I am sure have multiple more levels of scrutiny that they have to go through when choosing an ecosystem to work with?
It's a network of networks. So if you are an institution, you need certain requirements that a crypto native application may not need. You need privacy, you need the privacy from the transaction to possibly other things. You need regulatory compliance. So the security and the network happens at many layers. It's not just a whitelist for who can come in to do KYC, AML, or accreditation, but it's also at the network level, and you can run your own, call it proof of authority blockchain that has the optionality to connect it to all the other proof of stake blockchains that are in this network of networks.
So I think subnets, can we talk about subnets for a sec? Because I think that's been a really big part of your scaling story. What are some of perhaps the most creative or surprising use cases you've seen so far?
So subnets used to be a term. We're calling them L1s now.
Got it.
Because subnet gives the wrong impression, because these are all your own blockchain, and you can customize it for the specs you need for whatever you want. Again, the institution, they may need privacy, they need regulatory compliance, they need to control who comes in and out, and that's one type. Another type, you just need lots of throughput and transactions. So one of the areas that are super exciting is gaming.
I knew you were going to say that. Congratulations on all the success with Off the Grid. We've been very
We're
much
talking AAA games. We're not talking, the old school games, which those are fine too. We love those too. But like, there's a company called Nexon, a publicly traded company in Asia.
Largest gaming company in Korea, I think.
Largest gaming company in Korea. It actually trades publicly in the Tokyo exchanges, but they have a game called Maple Story. Maple Story's been around for 15, 20 years. They have over 250 million users, and they are creating an instance on an Avalanche L1, artist formerly known as Subnet. And so far, in just like this early launch, they are creating 10 million plus transactions a day. It is massive right now. And that's just one example. We're hoping a lot of that 250 million people will now come, and those consumers will be using the Avalanche blockchain as a whole. We also see a company called Gunzilla. Gunzilla has this game. They spent $100 million in traditional funding to create an unbelievable game called Off the Grid. And they're creating a marketplace for all the in-game items, again, on Avalanche. And so they need a different customization than, call it, Apollo, large alternative asset manager would need. And the Avalanche infrastructure allows you to have your own blockchain customized for whatever you need.
I guess is the mark of success for Avalanche not being talked about, like fading into the background and powering use cases for, like Godzilla games and Maple Story, and not having the users know that they're even in the Avalanche ecosystem? How are you thinking about that?
Well, listen, I think right now you have to be out there and basically give the world an understanding what the benefits of blockchain is, especially open permissionless blockchains and Avalanche, because there's different value propositions. But all the people in this conference right now, if they were really deeply honest with themselves, the hope is in 5-10 years, the functionality, the efficiency, and the productivities all done without anyone mentioning blockchain at all. That is the future, and that is the hope.
It seems like these days when you talk about blockchain, you have to talk about AI. I'm noticing it here at Concensus. I know that Avalanche has the InfraBuild AI program, and that is really to attract interesting AI use cases into the ecosystem. Talk to me about what you hope to achieve with that program and how it's going.
So the longer version is this. I just wrote an AI and blockchain and how they work together, and it was just published today in the American Banker Association, the ABA. So I think that's a very TradFi magazine, but if anyone here is in TradFi and wants to read what I wrote, they can go there and read my article. But pragmatically, I think you have two transformative technologies converging in the next few years. AI, obviously, especially the AI agentic world, is going to make all of our lives better. There's going to be your agent, Jen, your agent, my agent, and our agents are going to interact with each other.
We won't even need to be here. We can have our agents just do the show.
My agent will talk to your agent.
Yeah.
Possibly. But all those agents are going to be, the data is going to be created like crazy. Agents going to be all over the place. There needs to be some provenance and some understanding of the history of what these agents, as well as the underlying LLM models, are doing. So the blockchain being a great place for a ledger for provenance and for all that will serve this crazy world of AI, especially in the agentic world. On top of that, I think there's going to be a thing called micropayments. Visa cannot do things under $1, at least efficiently. And when these micropayments happen, if people want to go to CoinDesk Live, imagine a world where like you don't have to pay a subscription for the premium subscription. You just want like one or two things, and that data or that information, you don't want to pay $20 for a month or something. You just want to get bytes and pieces of it. So maybe you want to pay, call it milliseconds of the data, like cents for that. These things can happen in an automatic way, and they can just talk to each other that way. You're going to need the stable coins and then the blockchain rails to do that.
So on this, still on AI agents, I read that in the program there is something called Alfred, and Alfred has been optimized to have VC-like traits. So can you talk to us about that? What's Alfred actually doing? Like, does he assist with the evaluation process for VCs? Is that how it works?
Alpha is something, so it's very cool, actually.
Okay.
And there are others also doing similar things. If you look at a lot of the funds that exist who invest in not just our space and other spaces as well, they are now, for better, and banks as well, for better or for worse, the lower entry level analysts, if you will, they are somewhat getting replaced, or a lot of the functionality is getting replaced by these AI agents. So when a VC firm goes and decides on what their portfolio is, and they do due diligence on, whether this company is good or not, what they do is you collect a lot of data, you analyze it, you come up with insights, and then you go to a committee to make decisions. Alfred is a way that you don't need as many of the analysts from the early days, so it becomes a more efficient firm, and you can go to committee much faster as well. So it is, think of it as an assistant or a junior analyst.
Has Alfred presented any challenges?
Well, I am part of Ava Labs. This is an Avalanche Foundation thing.
Got it.
I think it's helped and not presented challenges. I think any challenges you do see will be the same challenges anyone else is seeing in terms of how well the information and the insights are coming back.
Now, the last thing you want to ask you is about the Concensus conference itself. It is in Toronto for the very first time. Talk to us a little bit about what you're looking forward to over the next few days, but also about maybe the significance of having a crypto conference of this scale in Canada.
I think it's really cool. I mean, obviously, Toronto has been very deep into tech and in the crypto world for a long time. There's some great founders who came out of Toronto. I think it's about time that the city is able to host the premier event of the space.
Amazing. Well, thank you for joining us here at the desk. Thanks for being with us at Concensus. And I know that we will see you in London next week.
Look forward to it.
That was Ava Labs President John Wu. Thank you. Welcome back to CoinDesk live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. I'm Jen Snazzy, here with Leah Callum Butler and Christine Lee. Hello.
Hi. It's ladies' day at
It's
Consensus.
ladies' hour, but it's only 3 minutes. So
The best 3 minutes of the whole day.
it is the best 3 minutes of the whole day. I mean, Christine, I know you took a little break there. What did you get up to?
I mean, there's so many interesting sponsors, booths. I am wearing the chipped NFC nails. They have a booth here.
Did you get them put on there?
I put them on myself.
Oh, okay.
But they had 100 at the conference, sold out within an hour.
Oh, wow.
But they're NFC chipped nails, and you can, I guess I could go to your phone. You'll get my contact information.
Okay, let's try. So how does it work?
Oh my God.
Let's do
I
it.
don't know about doing this.
Okay, no, we're not going to do it on live television because whenever I've tried that, it never works. But what are you? So you tap your nails on the phone and then
give it.
We're going to give it a go. We're going to give it a go.
We're going to try. Okay. Here. Is it?
It's not working, but maybe if I unlock. Okay.
Okay.
They definitely work, but live television is not conducive to these kinds of demonstrations.
Didn't quite nail it.
That was a good one. All right, NFT nails. I have Consensus Moose.
Oh.
For Canada. It's kind of cute.
A noble animal.
A noble animal.
Why don't I have
Of
one
the
of
north.
these? And how do I get one?
I'm not sure. I stole it. So.
Okay.
Yeah.
Steal it. Good advice.
All right, let's take a look at our prediction markets. The question that we've been asking all day here at this desk is, will Drizzy Drake make an appearance at Consensus? We are in his hometown, so the chances are higher than if we weren't. We're taking a look at the poll right now. It looks like most people think he is not going
I'm
to
rooting
be
for
here.
the 12%.
I'm rooting for the 12% too. I mean, maybe
So
Drake
very.
is
Come
going to
on,
be
Drake.
here, and yeah, you'll have to wait and see. There are still 3 days for Drake to show up at Consensus. You can go over to myriad.markets to take part in that prediction market. There are 3 other prediction markets that are on Myriad Markets right now. 3 of the 4 are just for fun. They are, will Drake show up in person at Consensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman tweet more than 20 exclamation points during Consensus? There's one market that you can bet USDC against, and that is, will Bitcoin hit 110,000 during Consensus? Join in on the fun, like I said, on myriad.markets.
Wow.
We're going to take a quick break. We'll be right back. One of the most powerful people in America shaping U.S. President Donald Trump's crypto policy is a 29-year-old former college football player turned mega loyalist and congressional candidate. He is a key liaison between the White House and crypto companies seeking to be heard in Washington, D.C. Please welcome Bo Hines, Executive Director of the President's Council of Advisors for Digital Assets at the White House, to the show. Bo, welcome.
Thank you. It's a pleasure to be here. Exciting event.
It is an exciting event. I know you spoke to Christine recently, but I just want to hear from you. You know, obviously you are helping to shape policy over in the United States, around Consensus. In Canada, what does it mean for you to be here and be at this conference in your neighbor to the north?
Well, you know, it's a pleasure to be here. It's actually my first time in Canada, so it's an honor to step foot on Canadian soil. The city is beautiful. And obviously you guys have put together just an extremely exciting event here. So, we're excited about what's to come for the rest of the day and the rest of the week.
All right, last time we spoke, you said that the U.S. is going to try to get as much Bitcoin as you could possibly get. Any updates on those efforts? If you had bought during that time, it would be at a significant discount to where Bitcoin is right now, which is just under $104,000.
Well, look, going back to the SBR and the executive order there, I want to say first and foremost, a big thank you to President Trump, because he lived up to the campaign promise that he made at Bitcoin, the Bitcoin conference in Nashville on the campaign trail. And, we view Bitcoin as being unique. It's a commodity, not a security. It has intrinsic stored value, as our AI and crypto czar likes to say. It has the immaculate conception, and there's a finite number of it. We want to harness this asset for the American people, and we're leading the globe in a sense of taking these monumental steps to recognize this asset class. With the SBR and this executive order, it kicks a lot of these responsibilities over to Treasury, one for housing and setting up the strategic Bitcoin reserve, and then two, with Treasury and Commerce, Secretary Lutnick, Secretary Bessent, they have the ability to offer new and innovative ideas for us to garner as much as we can possibly accumulate in budget neutral ways that don't cost the taxpayer a dime. And, we have a limitless number of ideas. So we're going to move on the ones that we can enact expeditiously, and we'll go from there.
Well, you've named some, which is the gold deposit and getting the surplus on that if they were updated. Any more creative ideas that you're looking at?
Well, I don't want to poison the well, because we're still fleshing a lot of these ideas out amongst the working group, and there are certainly passionate feelings about which ideas are best, and we'll sort through all of that together. But we have an absolutely stellar team of folks with this working group. With the SEC, with Hester and what she's doing there, obviously with Paul Atkins being the chair, with Brian coming at the CFTC, with Secretary Lutnick, Secretary Bessent. This truly is a dream team to create the crypto capital of the world and a clear regulatory framework that we need. And they're going to have countless ideas in ways in which we can accumulate. So we're excited to get to work on those.
What does the president seem most curious about or interested in when it comes to crypto?
He loves it all. Isn't that pretty evident at this point? It's a sea change from the prior administration. I think the speed in which we've been able to move has been shocking to a lot of people. And we've been able to provide a lot of the clarity that the industry's been looking for, but there's still a lot of work to do. And that's a huge credit to our interagency actors that have been working so hard, with Hester offering guidance at the SEC, with the rescissions of the lawfare and overregulation that existed. And, we look at this thing really in three phases. We have the demolition phase, removing a lot of this red tape, or blue tape, as I like to call it, that put up barriers for digital asset firms to interact with traditional financial players. We'll move on to the construction phase and the legislative process that's currently underway on Capitol Hill. And then we'll have the implementation phase. How do we integrate these technologies and revolutionize the way in which people engage with their financial lives?
Christine and I had Anthony Scaramucci at the desk earlier today, and he voiced concern over the president's crypto involvement, pointing to this conflict of interest narrative that I know the House Democrats have also voiced in the latest stablecoin legislation vote. How would you respond to folks who think that way about the president's involvement in crypto?
Well, first of all, I'd say bluntly that no conflict exists. The president is the president of the United States of America. He's working on delivering for the American people every day and living up to the campaign promises that he's made. In the first, 100 some odd days, he's delivered on a lot of those. And I think that's really exciting for our country. And for really, moreover, the globe. We are once again establishing ourselves as a leader in digital asset technological innovations. And look, his sons have the right to engage in capital markets as private business people like anyone else does in the U.S. And I don't see any conflict in doing so. And by the way, it should be exciting that they're engaging in this space. If you're a good business person, you should be looking at digital assets and saying, how can I get involved? Because this is the next generation of finance.
Just want to follow up with that. The New York Times came out with an article the other day that there is a company with links to China, makes no revenue on TikTok, which is their e-commerce business that they have there. And they've said that they're going to invest $300 million in Bitcoin and in Trump's meme coin. And this has sparked concerns that they're buying access to the president, because there will be a May 22nd dinner, I believe, for the top holders of the Trump meme coin. What are your thoughts on this emerging story?
I'll say very firmly, the president of the United States can't be bought. This is a very successful business person in his own right before he stepped into this leadership role, one that he takes extremely seriously, as evidenced by his behavior. No conflicts of interest exist in any way, shape, or form there. And, his companies and their private enterprise United States of America can do what they will and engage in business like anyone else in the United States, and that includes his sons that are not government officials.
You know, Christine and I were talking to folks at the desk earlier today, and a lot of people here at the conference are very optimistic about stablecoin legislation, hoping that that can get passed before August recess. With the Democrats' latest objection, I'm curious to hear your thoughts on the progress of legislation in the United States.
You know, I'm still extremely optimistic about where things are. I think we're going to deliver on the president's wishes to get both stablecoin legislation and market structure legislation on his desk before August recess. You know, our colleagues on Capitol Hill are working extremely hard. Senator Haggerty, Senator Lummis, and across the aisle, Senator Gillibrand, who wants to see this thing get home. You know, I would say that they're negotiating in good faith. In good faith, they're making a ton of progress as it relates to this bill. I think it's going to find its way onto the president's desk here in short order, and we're going to continue to usher that along.
There was also a story about a lobbyist that allegedly had a lot of influence on the White House, and one of their employees convinced the president to tweet about a crypto reserve. Any comments on that, and you know, the latest also?
Well, look, I mean, the president enlisted his advisors to develop the best strategy for digital assets and the strategic Bitcoin reserve more generally, and we've done that through executive orders. So we see what the president's position is. He's signed it into law. You know, we recognize Bitcoin for its uniqueness and set it aside. Obviously, ensuring that we're not going to sell any more Bitcoin as the United States of America and work on ways to accumulate more. And then we also have the Digital Assets National Stockpile, which recognizes a lot of the development that's happening in other ecosystems, which are still extremely exciting. We want to encourage that innovation, but Bitcoin stands alone. And, you know, we certainly got to the right place there. I think most in the industry recognize that and have complimented the president for his leadership.
Is there a I guess, desire to acquire other cryptocurrencies besides Bitcoin?
We'll see. I mean, I think that when you start talking about the reserve, you have to think about the aspects that make Bitcoin unique that we've already outlined, and you have to have those same standards be met across the board, which in their current state, there's not another asset class that's there. That's not to say that they can't get there. And these are the same questions that we talk about when you start getting into market structure legislation more generally and developing this regulatory framework. When you start talking about what is control, what's the origination line of where is the security when it starts, and you know, where does it become a non-security, right? And these are questions that we'll flesh out with the folks that have the pen on Capitol Hill and our legislators up there to provide this clear and robust framework that gives folks really the clarity they need to innovate and thrive here in the United States, because that's the ultimate goal, is to make the U.S. the crypto capital of the world, to usher in the golden age for digital asset financial technology in the United States. I think we're well on our way of achieving that. You know, one thing I'll go back to just on stablecoin legislation is the point I'd like to make here is that this should be a nonpartisan issue. This is something that's as nonpartisan as it gets. We're talking about creating more transparency. We're talking about updating archaic payment rails that exist in the current financial systems. We're talking about instant settlement times, and we're talking about ensuring that Americans have updated ways and means to send and receive funds. Not to mention, stablecoins provides U.S. dollar global dominance for decades to come. You start talking about the money that will be injected into U.S. treasuries. It also acts as the foundation for what we can build upon in the digital asset space with new payment rails and tokenization of public securities. Start talking about the ways in which markets can move after that. You know, I just say that I say all that really as a point to make to our Democratic colleagues that it's time to get this done, and we should move forward to get genius on the president's desk.
All right, Bo, thanks so much for joining us at the desk. We hope you enjoy the rest of your time at Concensus.
Thanks for having me.
That was the Executive Director of the President's Council of Advisors for Digital Assets, Bo Hines. Hello and welcome back to CoinDesk Live from Consensus 2025. We are playing a little bit of musical chairs here. I'm Jen Sanasi, here with Sam Ewan, Christine Lee, and Debbie Soon. What's going on, guys?
We are here. We are out here. Look at this. Consensus is popping right now. I was just by the open money stage. It is standing room only. So there's a lot going on right now.
There is a lot
The
going on.
lines are long outside. That's what I'm hearing. That
There
the
are some
security,
long lines.
the lines for the badge, but a lot of people are just very excited to get in and get on the floor and see what's new in Web3.
The lines are also really long at the food hall, I must say. Everyone is enjoying the food here at the conference center. Our audience hasn't seen Debbie Soon yet, so I just want to introduce Debbie. Debbie is the author of Digital Mavericks. Her book is with you there in front of you, but you've also been hosting some segments around the Consensus 2025 conference floor that we're going to see later on in our programming. Talk to us about what you've been seeing.
Oh my gosh, I think the excitement here has been so great. It's been so fun to see all the different activations. I love the Blockbuster Revive store with all of these vintage DVDs, videotapes, oh gosh, and there's like a nail salon. Just feels like there's so many things to do and so many things to see.
We've been seeing a lot of that, these older brands being repurposed for Web3 and just rejuvenated with the digital age.
One of those brands is Enron, and Sam, I know that you had Enron on your Gen Z show.
Mhm.
They have an egg in their booth. What's going on there?
The egg, I believe, is an at-home nuclear reactor.
Okay.
From what I've heard, they are trying to reinvent energy. Now, I'm not positive it is a legitimate
parody.
device. Exactly.
I'm hoping it's not a legitimate device.
I mean,
but I like the idea.
We are in an
Only one
energy
way to find
crisis.
out.
Yes, we might need one of these in our home, but they have it in their booth, along with some other fun mannequins, and people just love the Enron brand. I think because they were so chaotic back in the day and like one of the biggest financial scandals in history. So now that they're back, and the Enron team is the team behind Birds Aren't Real, which is a meme that's been around for years and landed them content deals, and they really understand viral media more than almost anybody. So now they're trying to reinvent that with creating a new energy company.
Yeah. I know DeLorean is here, Christine, and you're going to be featuring them, I believe, in our programming tomorrow. Another little blast from the past. What's going on with them?
The Back to the Future car is on the conference floor. We've got a lot of observers taking a look at that with the mementos from the Back to the Future movie. But this is a very interesting story in the sense that the folks at DeLorean Labs had a chat with the DeLorean family and really wanted to revive the brand and convince them that they were the ones that would be able to do it. John DeLorean, of course, a very controversial character in American history. He created incredible cars, which look to me a lot like the Teslas we're seeing on the roads these days, getting back into fashion. But they were doing it way before, decades ago. And unfortunately, John DeLorean got into some trouble with the law and had to go to jail and just had a very roller coaster ride of a life and history. But he had an energy, a pioneering spirit of, I'm going to do the impossible. And I think that is something that many folks in the crypto industry can relate to. And so they are repackaging that and recreating it for the Web3 era.
That's awesome. Now, so many of these people here are digital mavericks. Debbie, you have your book, Digital Mavericks, and in front of you. Tell us a little bit about the book. What kind of stories are in there?
Yeah, oh my gosh, the most incredible stories. I call it a 50% guide to how does one enter, but more importantly, navigate this crazy world of crypto and stay sane through the ups and downs. I'm sure we've all lived through it. And the other half is really just inspirational stories of how people even entered the space and for the first time, like my co-founder Randy Zuckerberg and Jesse Pollock, who's the creator of Basic Coinbase, and a lot of artists and collectors as well. And I find that their stories are so relatable, and it's just so fascinating how everybody took their own different path, but yet somehow we have all chosen to be here, and we have all chosen to build in this wonderful world of crypto.
It's kind of a representative of all four of us
Oh,
here.
yeah, exactly.
Are NFTs coming back?
I would like to say that I think we had actually a really big day in the digital art space yesterday. We had Rafiq Anadol like selling $5 million worth of NFTs. We had the CryptoPunks NFTs being bought over by a nonprofit. So yeah, it's maybe a little bit early to say that we're so back, but there's some little spots that I like to look to.
You tweeted that we're so back this morning.
I did because I saw this blockchain video booth, and I thought there was nothing more back than VHS tape.
Did you get the card? You can get a card.
I have not yet.
Yeah, you got to get your blockchain video card. You're going to load it up with some cryptocurrency, and you can buy a vintage poster.
We will be doing all of that. It's the acronym booth, right? I'm not really sure what acronym does. I'm hoping that we at some point cover them and we'll figure out more. But
we're talking to them later on.
There we go. We'll have them on later. I would say though that here we are in Canada. For the three of us, we were in Hong Kong earlier this year. We were in Austin last year. What feels different about being up north? You guys are natives. So other than just being able to get some home cooked meals, what are the things that makes this show feel particularly Canadian right now?
Well, I think we're seeing different brands, and so it speaks to the nostalgia I had growing up and seeing the DeLorean, the Enron, and the blockchain video or blockbuster video. So I guess it speaks to our audience in North America, but Hong Kong also was incredibly buzzy. It also just had a lot of energy to it. So, I mean, I'd say it really is global. That's what I love about crypto. It's that wherever you go, you can find a home. And it's exactly the way you envisioned it in terms of having imagination, being innovative, and having an accepting crypto community that wants to hear your ideas.
I got into blockchain when I was doing my MBA at the University of Toronto. And so my journey started in Canada. It started at school. It started at a place where innovation is like rife. And so coming back here and seeing the Canadian companies that are featured on the floor and talking to Canadians who are thinking creatively and innovatively about the space is very refreshing. I really feel like I'm home. We talk so much about what's happening in the United States. When we're in Hong Kong, of course, we talk about what's going on the ground there. And I just love that I get to come back to my roots and talk to my people about the topics that I love. So that's me.
Do you speak in Canadian when you talk to them?
Oh yeah, eh?
Right.
Okay.
It's about time.
All right, that's enough. The Canadian stuff. Maybe later we're all gonna go try some poutine. But like I said, Debbie Soon has been out on the floor checking out what's going on beyond this desk. Let's see what she got up to this morning.
Hi, my name is Debbie Soon, and I'm the author of Digital Mavericks, A Guide to Web3 and Becoming the Main Character of the Next Internet Revolution. We are about to speak to former professional, hostage negotiator, speaker, and author, Paul Nadeau. Thank you so much for joining us at Concensus 2025. So what are some of the things that you can translate from your learnings to this audience?
We have to focus on what we can control and not what we can't. When a person comes to any type of business or even personal matter, and they're focused on the other person, what is it that I can help you with? How can I help you? My intent is focused on getting you to where you want to be. It is asking those questions. It's being involved. It's being engaged in understanding what the market is, understanding, hey, here's where we were, here's where we are right now, and here's where we're going. How can I help you? Those 4 words, my God. How can I help you are the gateway to connection and to rapport, because people will deal with you when they know you, like you, and trust you. I'm going to have a talk with, someone, a very difficult talk. I got to plan how I'm going to approach. I've got to listen. I don't tell the hostage taker, this is what I want, and this is what you're going to do. I'm going to say, how can I help? What is it that I can do? Planning, the intent, the engagement. So we've asked those questions. We've shown that genuine interest in the person and getting them to where they want to be.
Yeah.
That equals the R, which is a relationship.
Right.
This is what we want. with any client or customer, a relationship. The important thing in determining lies or deception or discomfort is watching the facial expressions, the micro expressions, and trying to determine what we call a homeostasis. What's the norm? In any negotiation, whenever possible, take a few minutes to talk to the people about, hey, what do you think of the conference? Isn't this great?
Yeah.
What do you think of the weather?
Yeah.
Like, did you travel here? So we get to know each other.
But establish a baseline. Yeah.
That's it.
Yeah.
You got it. You've got it. So that's exactly what you want to do, so that when I get into that content,
Yeah.
the important conversation, I'm going to be taking snapshots of you and seeing where is it that the change has come.
Yeah.
It's so important to evaluate always, identify emotions, everything.
All right, we just saw some tips from a hostage negotiator. Anything can happen on the Concensus floor. BitGo has positioned itself as one of the leaders in institutional digital asset custody and recently became the largest staking platform in the world by total value locked, with $48 billion in assets staked. Joining the show now is BitGo's Chief Revenue Officer, Chen Feng. Chen, welcome.
Thanks for having me.
Thanks for being here. We were just talking about how 5e Consensus is, how great the conversations are that we're all having. Before we get into the nitty gritty of our chat here, what have you been up to? What's the highlight been so far? What are you looking forward to?
Look, it's a very well-produced conference, one of the best, in my opinion. I was just on stage with Justin Sun, some other folks as well. The production quality is next level. It's really awesome. In terms of the vibes, yeah, like it's packed here in Toronto. You guys had a successful event over in Hong Kong. Great second conference of 2025.
I asked that question so people can give us compliments.
It works. I'm also going to give a compliment. BitGo is one of our partners here. They spoke to the main stage, so we get to see you guys everywhere. Not the first time you've been involved with us, so thank you for also your partnership. I'm wondering, you guys are the biggest stakers in the world right now. We have some questions, but I want to ask this question first,
sure.
Which is the idea that does the average retail investor understand staking? Because it seems to me once you unlock that, then you start to see how your money can really work for you.
I would say most retail folks that's in crypto through various educational campaigns that our lovely exchange partners here in the US and overseas have done, most people get the basic concept, right? It's a way of securing the various networks that you're staking towards. At the same time, you get a bit of kickback, right? Via these staking rewards that's being generated and sent back to your account. So I would say yes.
From an institutional side, talk to me a little bit about the opportunities and challenges. Like, what are institutions saying when it comes to staking, especially when it comes to the varying different regulations that we're seeing around the world?
Yeah, so there are a lot of various takes on staking. I would say the vast majority of regulators around the world do not have specific frameworks in place for staking. It's definitely more in the gray area. However, if you look at what you're able to do with the coins that are currently in custody with you, if you're not participating in staking, you're effectively losing money, if you think about it, right? The rest of the total value on the chain is being inflated and your number of set coins is staying static. So because of this, every large holder of these stakeable coins is knocking on our door asking for set services. Even our friends who love Bitcoin, BTC Vegas is coming up. Those guys are also interested in yield, interested in ways that it's possible to make additional Bitcoin from Bitcoin. So even the Bitcoin crowd, right, Bitcoin itself does not have native staking capabilities. They're also looking to quote unquote stake Bitcoin in one way, shape, or form.
I mean, look, we all grew up with savings accounts. We know the idea of keeping money in an institution and getting paid back for committing that.
Yep.
We know the institutions understand that. I think about the ETFs and
right.
how there still seems to be a gray area what's happening. But to your point, Bitcoin is the biggest ETF pool out there right now, and those guys are knocking on your door. They're constantly looking at, why does ETH get this? Why does USDC get this? Like, what do you think has been the problem in the past?
It goes back to the fundamental nature of Bitcoin, right? Like the reason why Bitcoin has been around for so long and will be around for hopefully hundreds, if not thousands of years, is because like the core like fundamentals of Bitcoin, frankly, has remained unchanged. You're buying into Bitcoin for that consistency. And I don't foresee Bitcoin Core or the Bitcoin Core devs introducing that type of functionality into Bitcoin anytime soon. However, there are other companies like CoreDAO, like Babylon, that's entering the space with their unique way of introducing the concept of yield on Bitcoin in a safe or relatively safe way. For the other chains that are built with staking from the fundamentals, these are staking capable blockchains. Obviously, everybody that's investing in those coins that have large asset holdings in those coins need this service. I think the best example of this is Janover is a publicly traded company. There's a couple other companies in that bucket. They're looking across the river at the Bitcoin crowd, at Michael Saylor and MicroStrategy, at Similar Scientific, right? These other publicly traded companies that have basically turned into BTC treasury publicly traded companies. The folks over on Solana side of the river are trying to do the same thing. And a lot of these companies, including Janover, they're using BitGo for the fundamentals, right? We're helping them obviously custody the Solana and stake the Solana as well.
When it comes to staking, is there something you think that folks are not talking about enough on programs like this and in rooms like this?
Look, I think getting additional regulatory clarity is something that is a lot of work in progress. I think 3IQ here in Canada, like this is the first North American ETP that's going to push through a ETP for a stakeable asset. Over in Europe, it is something that has already been done, and of course, the final frontier is the United States. And I'm sure the friends over at BlackRock, et cetera, they're working very closely with the SEC task force, crypto task force, to get this thing across the line.
3IQ was on stage with us this morning.
Yes.
So, all the big players in the room with us here. All right, Chen, thank you so much for joining us on our program. We hope you enjoy the rest of the conference.
Thank you.
Thanks, Chen.
That was Stellar sees $3 billion of real-world assets coming on chain in 2025. In addition to existing partnerships with Franklin Templeton and Wisdom Tree, Stellar is working with a new round of tokenization specialists such as Paxos, Ondo, Etherfuse, and SG Forge. Joining us now to discuss is Tomer Weller, Chief Product Officer at the Stellar Development Foundation. Welcome to the show.
Glad to be here. How's it going?
It's going fantastic. We are both enjoying all of the things that Concensus have to offer. How's it going for you?
It's awesome. Yeah, we have a little builder house going on. It's great to see all the developers as well as all the fine business development people and marketing around here.
Please.
We're talking about the Stellar Development Foundation. Talk to us about where you were last year compared to where we are this year.
Sure. So 2024, we had our biggest upgrade to the Stellar protocol. We brought smart contracts to the Stellar network. And so with that, we can really say that now the Stellar protocol is feature complete, already seeing great product market fit. But Stellar's been around since 2014, strong product market fit in RWA, strong product market fit with on and off ramps globally around the world, disbursements. And so now we're feature complete. 2025 is all about accelerating that growth.
I've spent a lot of time over the last 3 or 4 years with Stellar. We've been at Davos together, multiple Meridians, and this is that moment, I said this to Danelle in October at Meridian, where it just felt like all the pieces were clicking between all the aid assist stuff that you guys were doing, remittances, like no one really gets payments the way that Stellar does. What do you think was necessary for you to keep focus on that when there was so much other stuff happening in the world of crypto that you could have probably said, oh, we can make an easy buck here, but we want to really focus on this? How did it feel to stick to your guns and now get to the place where you are?
Yeah, I think you touched on the crux of it. Like at the end of the day, Stellar has been laser focused from day one on real world utility. Started out across border payments. Today we're expanding that to more everyday financial services via our smart contracts platform. But at the end of the day, this idea of equitable access has been with us all the time. This mission has been like close to us. And, like you said, there's a lot of narratives going on. Narratives come and go. We've seen a lot of these, but really have been focused on the equitable access piece. And I think it's great to see a lot of people and a lot of blockchains, a lot of ecosystem kind of like coming to terms and understanding that this is really where the great value of blockchain is. And so it's just amazing to see all the infrastructure that we've built throughout the years is finally paying off.
You talk about narrative, and one of the emerging themes this year and even here at the conference is tokenization of real world assets. You talk about that accessibility that really is at the core of Stellar. How does tokenization of real world assets, which I feel is kind of being dominated right now by the institutional conversation, not really the accessibility conversation, fit into that narrative for you?
Yeah, so I think, Stellar has really been built for tokenization. So tokens are a first-class primitive of the Stellar protocol. Always has been. Compliance and accessibility have really kind of like been baked into the protocol from the ground up. We have more than 400,000 on and off ramps around the world that allow you to move from cash today to DeFi on Stellar. And so RWAs were really always kind of like part of the picture. We're really glad to see institutions coming on board. We have players like Franklin Templeton, like Wisdom Tree, Ondor coming on chain. Right now, there is a lot of institutional capital, like you said. We're really excited about moving more to retail and having assets that play along well with the retail use case, with self-custody, with DeFi. A lot of the existing RWAs, and it's amazing stuff. We have more than $500 million worth of RWAs on Stellar right now. A lot of these assets are very limited in functionality. And in order to really unlock this idea of equitable access, we want to see retail access. You mentioned Etherfuse before. Etherfuse are a company. We're really excited about tokenizing government debt. They already have a Mexican debt asset on Stellar, CETES, similar ones in Brazil and launching in other areas too. And I think these assets really unlock the full capabilities of RWAs. And not just that, I also think they're doing a good job in diversifying the type of assets that we have. We talked a lot about real world assets. Most of what we see right now are mostly kind of like money market denominated, like T-bills, US dollar denominated tokens, and we want to see more variety. Working with Société Générale in France, for example, we want to see more international players come on board.
Do you think that, tokenization starting in sort of TradFi makes sense, but, real estate and loans and debt, I think, are great examples of the idea that anything can be updated. And the traditional finance system is filled with friction. And really, Stellar, like many of the chains out here, are trying to just quick, easy access to removing that friction. Is that sort of the way that you're also pitching this to your partners?
Yeah, I think sometimes it's about friction. Sometimes it's just things that are not doable in some regions, right? You look at examples like the Decaf wallet, the non-custodial wallet, very big in Latin America. And they're serving communities that historically have just not have had access to the same financial instruments that you and I have, whether it's in the States, Western Europe, or other places. So they're actually getting access to these financial services. And like you said, we started out with stable coins and payments. I like to think about these as kind of like the infrastructure layer, if you want, the checking account of this on-chain economy. And now that we're already there and we have this infrastructure, we can move on to things like, for example, like savings account equivalents with these type of like bonds and more kind of like conservative yield-bearing instruments. And then we can actually also introduce the more adventurous DeFi primitives, frame them as like your investments account, and basically build effectively like neobanks without in places that historically just haven't had that infrastructure.
Do you feel so? When I got into the space, there was a lot of talk about accessibility, right? Like that's what all of this technology does. It gives people who previously didn't have access to these systems that have created monopolies all over the world access, right?
Yeah.
Tell me what you think. Have we as an industry moved a little bit away from that narrative?
I would say that we're oscillating around it.
Okay.
So I think, every year there's like a new narrative. Every year something like big is happening. A lot of times it's negative, I think, on the more kind of like adventurous, super speculative use cases. And I think a lot of times they're positive with like RWAs and institutions. But at the end of the day, I do think that, a lot of times on the institutional side, we make things better on the margin. But for the retail and especially people in these kind of like less included regions, we can actually make a much more significant impact. And you look at the network of on and off ramps that we have, MoneyGram is the biggest one with more than 400,000 agents around the world. Like these agents are located in locations where you just don't have access to traditional finance. Banks are not active. We see war zones, for example, in Ukraine, in which we're working with the UNHCR on dispersing aid. Like a lot of these financial institutions are not there anymore, but MoneyGram are still on the ground and we're doing disbursements using them. So the retail inclusion story has always been there. It still is. Unfortunately, the narrative, sometimes it goes back and forth.
Tomer, thanks so much for joining the broadcast today. We hope you enjoyed the rest of Concensus.
Thank you. Have a great day.
Thanks, Tomer.
That was Stellar Development Foundation Chief Product Officer Tomer Weller. Canadian musician Rain made us championing the fan-artist relationship through his latest venture, FanDrop, a platform that lets artists take ownership over the communities they've worked so hard to build and foster. The Our Lady Peace frontman joins us now. Rain, welcome to the show.
Hey, pleasure to be here.
Pleasure to have you here. We're talking about the fan-artist relationship, right? Something that I think that you are deeply in tune with. Yes. Talk us through, I guess, the evolution of that from your career.
I mean, the genesis really is, I've been playing out live for 25 plus years. It's really biblical for like 2.5 hours on stage every night, having this intense relationship with the fans, whether you're in a club or an arena. But then the lights go up, they all walk out and they're anonymous to me. Promoter, tickets, social media, everyone kind of knows who these people are, but now I have to go pay to reach them. So the idea was understanding this pain point for artists not having ownership of that audience. It's not working anymore, So the idea is with FanDrop, it's like they're there to see you. Don't let them walk out anonymous. And so we just developed this technology, geo-based, location-based marketing, basically. But it's to reward fans, but also get them invested in that direct to, not D2C, direct to fan relationship.
Rain, I think about the old days, and I'm on the older side, right? But I remember sending in a self-addressed envelope to the Beastie Boys fan club, and
I did that.
You get a letter, you get a pin, and I never thought about it through that lens of they were building a database of people they could go direct to.
Yeah.
And with Spotify, with Apple Music, that's gone. right?
Yeah.
So it sounds like what you're trying to do with Fan Drop is about trying to reconnect the idea that an artist can have a one-to-one relationship. And how much do you think fans are willing to go that extra mile, especially when the convenience of a Spotify just makes it easy?
Well, I think fans are actually they want that connection, and they feel like it's not we haven't been duped. Like I get Instagram and TikTok and stuff, and the unfiltered look that you get on that, and fans feel like they are connecting with you, but they really aren't, because now that they're starting to understand, hey, if I connect directly with this artist, we're actually removing that gatekeeper. Now you can sell stuff to fans there. I really based everything on this book I read, Kevin Kelly, 1,000 True Fans. Building these kind of these communities where it's like if you can get your fans to buy or invest $200 in you every year at 1,000 people, now it's kind of it may be a cottage industry, but sustainable business. Get that to 5,000, 10,000, and now you're making up for the lost revenue that the music business has suffered on the streaming side, right? But you're also building this lifetime value with your fans, and the connection it's authentic. And yeah, you don't want to spam them. I'm in Radiohead's Wasteland fan club. I get maybe 4 things a year, but it's enough for me to feel like there's this authentic connection, and that's what we're trying to build at Fan Drop.
Talk us through the experience on Fan Drop for both the artist and the fan.
The fan journey is super simple. We built a native app. We were minting assets on Polygon at the beginning, but we've had to move away from that as, the talk around NFTs and music fans is not great at the moment. Typical dip in a new technology. But the idea is you walk into a place like Concensus, you type in fandrop.com. As soon as our geo picks you up that you're at the venue, it's been geo-fenced, obviously, you just see all these rewards, kind of like a scroll on TikTok. Once you want to engage with something, it's a simple prompt. You just check a box, email, takes 1.2 seconds, and now you're participating in all these different, rewards, kind of unlockables, anything you can really think of.
I've interviewed Avenged Sevenfold.
Yep.
We interviewed the team that was with Jack Harlow. There's been a lot of great experiments. It sounds like artists really want to create this. Do you think you're going to get pushback from the music industry, from those folks, or even the social media platforms who are saying, "Hold on, this is how we make money," or are they saying, "Hey, why don't we work together and let us build some of your tools into our systems?" Like, what do you think is the way this works?
I think any great technology has to be slightly disruptive. So I kind of welcome the fact that they start hating on us a bit, because we are removing their gatekeeping abilities, and that's how they make money, obviously. So taking that power back to the artists is really our mission.
I want to jump. Well, go deeper 1 second, which is, you mentioned that you started by minting NFTs.
Mm-hmm.
We've started to see a lot of really interesting projects that are kind of pushing the crypto side to the background.
Yeah.
Right. And so Blackbird's one in the US that's getting a lot of attention. But we're seeing more and more of those types of experiences. Like, I remember when the Discord community in gaming hated on NFTs, and they really revolted about it.
Yep.
Do you think that talking about Web3 technologies is the way in, or is it, no, this is just a better connective tissue?
Yeah, I think, being able to offer utility, it's put in a simple kind of context of a music fan. Our latest piece has this, special exclusive vinyl, 250 pieces only. And you want to know, I got number 66, and 10 years from now, you want to be able to prove that, right? So obviously, if it's on the chain, it's really easy to authenticate. I think there's great use case examples for all this stuff, but I do think, to your point, it's like, if I buy a car, I don't want to have to open up the hood, tinker. I just want to put the key in and drive it, right? So I think once we get there, when you're talking about Web3, then all this stuff, everything else goes, consumer's not going to care as much, and I think that's really going to help move it forward quickly.
Sam mentioned Avenged Sevenfold. The last time I talked to the guys at Avenged Sevenfold, they told me that they had 4 full-time engineers working on their NFT project, the Death Bats Club, I think it's called,
yep.
Death Bats. And so I'm curious to hear your perspective here. Musicians used to get a lot of support from the label. Then the music industry shifted. Musicians really had to become these entrepreneurs and foster their communities on social channels,
Yep.
right? And now the music industry is shifting again. Do you think that artists have enough support and the capacity to take on all of these things and also do what they love at the same time?
That's a great question, and I don't think they do, unfortunately. I think think of someone like Dylan. all he had to do was write songs and play live. And that was, that was his job. That was a craft that you nurtured and got better at. Now an artist is forced to wear like 10 hats. And so now you bring in the idea, like I've stopped talking about data to artists because it just, and manners, it's like their eyes glaze over. They have so little bandwidth. So the unfortunate answer to your question is no. Like to take on this part of the industry is there's only a few artists that maybe have the bandwidth to do that.
So it sounds like something like a fan drop allows for them to plug in.
Yeah.
So when we think of, let's look at Our Lady Peace fans. It's probably a couple million people who love your music. They're distributed around the world, so very decentralized.
Not probably, definitely. We are in Canada.
Well, I know we got a big group of them here, but the fact is, I'm sure you've toured the world. You see your fans in places you don't expect.
Yep.
I love this idea that culture has gone from sort of nation states to network states, and that the Our Lady Peace Nation can be distributed all around. They can connect with each other. We're levering into a world, especially with AI, where we can all communicate with each other in our native languages. We can all exchange, merch and sort of social currency with each other, the music in ways. Do you think that the future of the artist is really built on understanding that the way we connect globally is the way that we can create mutual success in both our fandoms, because they get more access to things they love, and us as artists because we get this amazing passionate community that really anywhere on the globe we go we can connect with?
Yeah, I mean, I think that's it exactly. The tools to connect are they're out there now. Fan drop is one of them. We consider fan drop to be that top funnel. We're not trying to manage a community afterwards. Like I said, the radio thing, like Radiohead thing. It's like there are CRMs that do that. There's other platforms that take on that challenge and do it really well. But I think to your point, the initial friction or pain point is actually getting that fan in. Because like I said, we're so accustomed to thinking, okay, I'm on Instagram, I'm following this person there, or maybe they're not understanding that, and I hate to say this, but the future of music, because there's a crisis in the middle class of music. It's being eroded. Like the margins are incredibly small now and I say middle class, like 90% down. So building that community that's directly connected to you, being able to monetize it, that's the only way to have a sustainable career this year, or in the future of what I see as a middle class of music. So yeah, it's almost like this more existential question we have to offer our fans to help understand that if we don't do this, music will suffer.
I know you said NFTs were involved before, but like you said, it's a new technology. Not everyone understands it. There's a lot of discourse out there. But you look at crypto and NFTs, and you look at some of the conversations and like-minded people that you're encountering here at Concensus. Does it solve this problem?
It's funny, my being in it for the last 5 or 6 years, kind of my hindsight on everything was we lost trust. NFTs, all the rugging going on, the speculative nature of it was not great for my fans. I had to go on Discord, and we released one of our albums as an NFT, hugely successful, but shortly after, everything started to fall apart. And I had to go on Discord and literally walk fans off a ledge saying, hey, this is fine. Thank you for being on this journey with us, but we're not going to push this on you if you don't want it. But the reality is, what I learned is the pillars of Web 3 can apply to Web 2, or what fan drop is like Web 2.5. Portability of a fan base. That's something that Instagram does not offer me. As an artist, I've built this community. If I disagree with their TOS or something and I want to move that community, impossible, right? So portability, transparency. I work with, I advise a company called Hio. They're on Solana. It's this end-to-end solution for artists. With Hio, I can see who streams my music. Again, Spotify won't let me do that, So there are so many important facets of Web3 and blockchain that can apply even without having to mint stuff. And so, even though I'm on pause with it, with Our Lady Peace and with Fan Drop, we still adhere to some of those principles and those pillars, which I think is really important.
We got to wrap up in just a second, but I got to ask you, how do you think about moving fans from these massive platforms that we're talking about to places like Fan Drop, to places where they get this connection when they're already there, they've been accustomed to opening their phone up and going to the apps that they already check every day? How do you think about that?
it's a challenge, but I will tell you this. It's again, it's almost a communication of it, because when fans understand that, hey, you're at our concert. We just did an arena tour across Canada in March. Onboarded 38,000 fans with Fan Drop into the Our Lady Peace community. I stood on stage and I tell them every night, it's like, hey, this connect, like, all you have to do is do a scratch and win, and 10 people are going to win a pass on stage for the encore. So huge value, democratize an arena space. But the end game is that we are now connected directly, and we're gonna build this lifetime value with you. We're gonna nurture this relationship. They want that. They'll still stay on Instagram, and I'm not saying abandon Instagram or TikTok for creators, but use it to your advantage. Use it for what it is. Understand that the future's not there for you.
Great. Thank you so much for joining us at the desk
Yeah.
here. We hope you enjoy the rest of the event.
Thank you.
Awesome.
Thanks, Red.
That was Our Lady Peace frontman and FanDrop CEO, Rain Maida. All right, we are coming to you live from the CoinDesk studio at Concensus 2025, brought to you by MoonPay, the global leader in crypto payments. Let's now take a look at social media and see what you all are saying about Concensus 2025. Sam, are you able to read this tweet for us?
I will. All right. Matt Mena says, incredible panel at Concensus, two of crypto's sharpest macro thinkers, Dan Pantera from Pantera Capital and Dan Tapiero of 10T Holdings. He says, crypto OGs talk macro from global liquidity trends to sovereign adoption and the long-term thesis for show more. So there's more to this tweet than we're showing. But we do have some of the best OGs in crypto on stage with us. Anyone can register for a virtual pass and watch the sessions. Recommend you do that. Yonks says, what's your favorite Deepin project? Because we have a Beyond the Hype, what's next for Deepin project. There's some great conversations. You can read the thread there. We've got over 50 students also at Concensus from Waterloo Blockchain. I love the fact that there's so many students here, so many hackers, so many developers. We are having a great time here at Concensus.
I love socials. It's so much fun. It gives me a glimpse into what's going on the floor since I'm chained to the desk. If you are at Concensus with us in Toronto, if you're following along at home, share your favorite moments with the hashtag Concensus 2025 and tag us Concensus 2025 or CoinDesk on X, and we might share your post on this live broadcast. Coinbase is one of the largest crypto exchanges in the world and recently expanded its institutional offerings, serving as a custodian to BlackRock's Bitcoin ETF, the largest crypto asset fund in the world. Joining us now to discuss is John D'Agostino, head of strategy at Coinbase. Welcome to the show, John.
Thank you so much for having me, Jen. Good to see you, Sam.
You as well.
All right, what's going on? What have you been doing here at Concensus?
At Concensus?
Yeah.
They got me working.
are.
I got 4 interviews and 3 panels. So your team is very efficient about getting the most out of their visitors.
Jen, I'm going to tell you, John and I met because I just finished reading the book about John that Ben Messick wrote. Keith Grossman puts us in the chat. And then, of course, I'm like, I got to ask about 50 questions. anyone wants to read an amazing story, read about John's life from Ben Mesrick. The book's called Rigged. And then John, you're head of strategy at Coinbase.
Institutional, Coinbase Institutional. Yes.
Coinbase Institutional. I think it was just this week it was announced Coinbase is joining the S&P 500. What an amazing run. I mean, I did some research looking at this. 1976 is when the first tech company comes on, which was IBM. 1982 was Apple. Meta, then Facebook, the first social company, 2012 into the S&P. You guys are the first crypto company, and there's like no better class to be in than being in the S&P 500. What does that feel like for you?
So thank you very much. It's momentous. I mean, look, first the obvious, right? Everyone will own a bit of crypto now. Every pension fund, indexes are marvelous things, right? We launched the Coin 50 index because kind of recognize the power of these. They're barometers for the health of an industry. So we want our index to be the barometer of health for crypto. The S&P 500 is not just the barometer of health for the US stock market. I'd argue for many people in the world, they look to it as the barometer of health for the US and therefore the global economy. So to be a member of that in the short time that cryptos existed as a modern concept, and the very short time that Coinbase has existed as a public company, is something to be proud of.
Can I, just as a follow-up, when Meta came on as kind of the first social company, we wouldn't have thought that, fast forward and the top 50 is littered with internet companies and social companies. Do you think that if you go 10 years in the future, we're going to see a lot more crypto on the S&P 500?
I do. Yes. Look, I think there's a sort of clearing number at some point. I don't think it's going to dominate. I don't think any one sector is going to dominate. Yeah. But there's no question. I mean, without naming names, we know who's going public over the coming months, and there's some very high quality companies. Personally, I'll speak for the rest of Coinbase. I like the competition. I want to be in a room with the highest quality people. I want to compete against the best possible firms. I want them to be public. I want that transparency. I want that credit counterparty worthiness. It's good for the industry. So I'd be delusional if I didn't think that in a year or two we'd see more of those companies joining the S&P, and it's a wonderful thing that's happening.
We've been talking a lot about institutional adoption here at the desk today, and I want to get the brass tacks from you.
Sure.
When it comes to institutions operating in this space, what's the real story? Paint us the real picture versus maybe the PR story.
Sure. So I get asked this question all the time, and I'm always on panels that are entitled some version of when will the institutions join? So the institutions will join when I stop getting asked to do those panels. No, but seriously, they've already joined. They're already here. I think when you get asked that question in crypto, it's a code for when will all of the institutions join? And the reality is they won't, because not every, and with the institutions we mean like what I call asset owners. So individual groups that are trading pools of capital for themselves, prop shops, sovereign wealth funds, down to say hedge funds, which have limited partners or investors. So if I just lump all of those into sort of broad asset management, they don't own everything, but an increasingly large percentage, I'd say an extraordinary large percentage relative to how young this asset class is, own and are looking to own crypto. So quickly break it down to the three basic types of institutional investors. Hedge funds. Their job is to find alpha. So when you see polls saying 80% of hedge funds are looking at crypto, of course, because that's their job. And most of them are barely beating the S&P. So they're all going to look at it. A decent portion are going to say, this is really interesting. I like the vol. I like the way it trades. And they're going to trade it. Some won't. And that's okay. That's not their expertise. That next level is, say, sovereign wealth funds, pensions, insurance pools. They're going to take their time. They're going to take their time because that's how they think. They're going to take their time because they need massive, massive scale. It's really been only a couple of years where the liquidity levels and the compliant infrastructure has existed. So these large pools of capital can put hundreds, billions of dollars into this asset class. So it's as somebody who used to build markets at NYMEX, we are doing a great job. Like, I wish in less than 5 years, I could have made people comfortable with complex, esoteric commodity options when I was back at NYMEX. So be a little bit patient. We're doing great. The institutions are already here and more are coming.
John, I was talking to Maz El-Jundi from Revolut the other day, and they did $1 billion last year. They're crushing it in Europe on the retail side and with institutions. And I asked them, are the TradFi players scared? and of you guys, and he said they're not scared. They're partnering with all of us. And I feel Coinbase is in the same position where you guys are also kind of, you've done the work for so long that you know how to navigate these worlds. And I can imagine the BlackRocks and the JP Morgans are also saying, how do we get in bed with Coinbase in a way that you can also help them really navigate into the future? Is that correct?
Well, we know that BlackRock uses us for custody. We know that Coinbase won the vast majority of the custodial mandates. So yes, they're all in that business. And if you look at the success of the Bitcoin ETF, if I am in the business of distributing financial product to retail, and I don't consider the enormous success of that product, I'm not doing my job. So I would expect you're going to see a crush of new ETF offerings. We're going to see IPO access vehicles because there seems to be this insatiable retail appetite, both in the US and globally, for these products. Now, I think your question is kind of leading to what happens when the banks get into this business. Well, look, if Coinbase was just a custodian, I'd be a little more worried, but we're not. We're an exchange, we're a custodian, we're an asset manager. We do DeFi, we do wallet, we do payments. So the notion that like banks joining are going to crush all the incumbents is a little bit silly. I mean, banks are great, but they don't do everything well. I mean, look at Goldman Sachs and Marcus, right? It's difficult to break into that new sector. Crypto is very different. So there's a much higher probability they'll use our infrastructure, and that the thundering herd of brokers that they unleash upon retail in the US, all of that flow comes on chain. We and others get the benefit of that.
John, it's been such a pleasure having you at the desk. It's been a pleasure hearing from you. We hope you enjoy the rest of the event, and we'll see you around.
Thank you so much for having me.
Thanks, John.
Cheers.
That was Coinbase Institutional Head of Strategy, John D'Agostino. Coming up, Cardano Army, get ready. We're going to be talking to Cardano founder Charles Hoskinson in just a little bit. Scott Kinney, also known as DJ Ski, rose to notoriety as the first DJ to discover the megastars, the first DJ to discover and play megastars on the radio, including Kendrick Lamar, Lady Gaga, and Justin Bieber. Today, he's made a name for himself on that ability to identify trends in music, culture, and sports. His latest venture, The Realist, takes the dated process of authentication and brings it into the future. DJ Ski, welcome to the show.
Thanks for having me. I'm excited to be here.
Wait, Ski, you're in Toronto.
I'm in Toronto.
I mean, this is Drake's home turf. I know you got an allegiance towards Kendrick.
We're good with everybody.
How do you
We're good
feel
with
being
everybody.
here? Yeah, it's just like
It's amazing. I love Toronto. It's great, right? No, Canada, it's dangerous. Everybody's too nice in Canada. It's amazing. And Kendrick is coming on tour here too, and we will be authenticating for The Realist. So.
Well, I don't know if you know, but we have a prediction market going right now. And the question that we have on Mirrored Markets is, will Drake show up to Concensus? Folks are betting on it. Last I checked, I think 88% of folks think Drake is definitely not coming. What do you think?
I don't think he is, but if he does, we'll be here to authenticate stuff, so we're ready for it. So I hope so.
For all of us, we hope so too.
All right, we're talking about The Realist. We're talking about authentication. Just lay a foundation for the audience here. What is The Realist? What do you do?
So we basically sell physical IP, and we're kind of the opposite of a lot of what other Web3 companies that you see are. We go out and actually take real authentic items, things from the Super Bowl. You mentioned Kendrick Lamar. We authenticated his entire wardrobe, everything that he wore, all the set pieces. We represent the Philadelphia Eagles, so we took all the confetti, all the game used jerseys, everything from that. And we saw this massive issue in the memorabilia world of fraud. The FBI estimates up to 90% of items are fake. And when you look at certificates of authentication, paper COAs truly mean nothing. They're so easy to forge, but even if they're real, there's nothing that ties to it, to an item. And we leverage blockchain as just a technology many of our consumers don't even know exists, operating in the background, kind of leveraging the most secure infrastructure in the world for us to do what we do.
All right, I want to ask you a challenging question, which is the folks who collect, right? There's that famous story, I think in the New Yorker, about the wine industry and how much of the wine industry is not real, and that there are these, you know, masterminds mixing it in back rooms. But it also sort of intimated that collectors don't always want to know because they don't want to feel like they spent some money on something that may be fake. Sneaker industry is ripe with this as well, right? So you know this world better than almost anybody. Do you think that collectors are going to start to really value what it means for something to be authenticated? You know, Kendrick's jacket from the Super Bowl performance has real value. Why? Because Kendrick signs off that this was mine.
Absolutely, especially when you get into treating these items like alternative assets, right? True investable grade items. You can't invest in something if you don't know that it's 100% authentic. Would you buy, you've seen sports jerseys like Babe Ruth sell for $25 million in essence, right? Like, you better be absolutely sure when you're spending that much money, no different than the art world. And we think that in this era where we're getting into deep fakes and AI, being able to dictate what is real versus what is fake is going to be wildly valuable. And we think it is just so important, especially in establishing and expanding this industry. And that's one reason that we built this. There were actually investors that we talked to early on that were big collectors and we thought would be a no-brainer to get involved. And they were scared because they have so much memorabilia. We almost, by our success, devalue some of their things. So we're really disrupting the industry, but trying to do things the right way.
Have you ever bought something that you thought was authentic and found out it was fake?
Multiple times, unfortunately, and that's one reason, another reason that I launched this business. I was bidding on one of the biggest auction sites for a game used jersey from one of my favorite players with a COA from that team. I called the team and they said, this isn't even a good fake. And I called the auction site and they're like, prove that it's fake to us. Have them send a notarized letter. Like, I'm like, wait, you guys should be proving that it's real. And when you just see that compared with the stats, I was like, we have to do something to fix this world. And that's where we're able to like leverage all these modern technologies. We were born after, you know, crypto was developed. So we were able to leverage this from day one instead of trying to reverse engineer. And also, we're not out there building a tool that people are speculating and trading on. We're utilizing this meaningful, and 99% of our audience today probably has no idea what a blockchain is. They don't know how to look at Polygon and see that. But if they do, we have that transparent trust there that will stick forever.
And what I love when we spoke last is you guys don't talk about it. You're like, we don't need to talk about the blockchain with our audience because those collectors don't really care.
Yeah.
But for the folks that do, they can go down and get down to that tech level. So do you think at some point the collectors class is going to start saying, no, I want to prove it? Or are they going to trust people like the realists?
Absolutely. I think there's always going to be for physical items, right? And we saw even some of the challenges in the NFT markets when people realized they could avoid creator royalties and there was no incentive other than paying the creator. There was no real value. They will do that to save costs. With us, we've patented this process where we pair overt with covert markings on these items. So even if you buy something from us, if you ever want to validate it, you have to ship it back to us. And there has to be some center of trust, but we truly are transparent about how many items are out there. You can see the full history of every single thing. You see us we were in the locker room with Kendrick, like marking the items. We have all of that data and we keep that on record. So it exists even if we've, God forbid, went out of business or something, it is forever on chain in that. And I think long-term, going to the original point of your question, showcasing these items digitally as NFTs is going to be wildly valuable. The market for our audience is not ready for that. So we just utilize the technology as what it is. Almost every great technology has been introduced is just great technology where people don't know that Polygon is behind it and that they can see it on chain. But as time goes on, we think that will be really, really valuable. I know for me, because I have so much stuff, I can't wait so you can see and buy and transact and look at my wallet and see that. But I think we're still a few years off from mainstream of that happening.
Now, how do you think about the realist becoming the authentication platform? You mentioned folks who maybe are disincentivized for the realist to become that big because they have things that are worth money now that might not be worth money when the verification process is done. How do you think about breaking those barriers and becoming the authentication planet for all collectibles on the planet?
For us, it starts with working at the source, right? And doing the right thing for collectors. I built this business for me as a collector and trying to kind of flip this industry that's so riddled with fraud. And we go to partners who are not maximizing off this at all anyways. Most of these jerseys and these high-end sales that you see are often a third party that's selling it, that's obtained it through some gray market way. And we come in and work with partners, whether it's the Philadelphia Eagles. We're starting with the PGA this weekend at the PGA Championship, so we'll be on site for the first time ever at a golf match. They're utilizing this level of authentication. We started working at MLS games, so you'll see us at soccer matches across the country and much, much more. So we provide kind of these partners not only a revenue stream, but a real way to protect their fans, because that's far more important. You don't want your fans spending money on fake items, and that's where we think it begins and how we've found to build our business.
All right, Ski, I want to. So Jen, you might not know this. Ski's a celebrity, right?
How can I?
I'm not like Sam. Sam is the most famous person here, as you know. Right?
No.
I'm sitting in between two celebrities here.
Sam is not famous. Ski knows everybody. He's so connected. He's like DJing the Super Bowl. He's doing things, right? But what I also love about Ski is like you are authentic to the people you know. You've been really loyal to these folks. I am worried when like, I don't know if you all got this. The Selena Gomez pitching Le Creuset, like cookware kits on TikTok, right? Really bad AI, right? That sounded like the Selena Gomez selling pots, right? I think about all the folks that you know that you're advising, that you're doing these authentication for. We saw already the amount of times that people are getting like fake phone calls, fake Zoom calls from their CFO saying, "Wire me money." How do we use authentication in the future because of AI to authenticate just that you are who you are, that what you're selling is what you're selling? Because I feel like it's too easy to game these social networks right now. And is there a way in your technology to think about, I even have to authenticate the media that talks about the auction?
100%, right? And the technology is changing every day, and that's why we didn't stick to just one protocol. We covertly mark items, which not only do we have a sticker on them, but there's these invisible markings that the material changes, the placement changes. I don't even have access to that. We built a separate arm run by a team that built Major League Baseball's kind of system that was best in the industry in class for that. And we always aim to stay a step ahead and be transparent with that, because it's a huge issue, right? Like and that's why we believe that we have to be there. We have to document it. We have to upload it so we can't be hacked. We can't backdate it. It's just so easy to do. If I was not a moral person, I would go create memorabilia and sell it on all these auction sites. It's so easy to pass off, right? And that's what we want to avoid. And that's where, we think this Web3 technology like blockchain is so efficient. That's where you'll see us adding on more layers, uploading that media to it, putting in different watermarks and different identification tools that only our team knows how. We believe at the center there kind of has to be a trusted source. And that's why we work with the best in the business, and we're as transparent as everything as we can along the way.
All right, we got to wrap in just a second, but you're a trend spotter. Sam made sure I know that. What's the next hottest trend you think that people haven't caught on to yet?
Oh, it's interesting. Good one. I think soccer's having a moment. Like you see what's happening in the US, right? Like we're witnessing it from some of our partnerships, but with the FIFA Club World Cup coming over here, and obviously FIFA World Cup, I think, the globalization of this. And when we just look at sports items as an asset, and you look at the sports card world, which everybody references, you'll see sports cards selling for $4 million with a piece of a game-worn jersey, where the jersey itself is selling for $400,000, still a lot. I think that will flip and invert. So I think memorabilia is an incredible sector, especially if you can get stuff that is true and trusted and from the source. It's wildly undervalued. And I think for this generation, they would rather hang something that's important and represents whatever is meaningful to them on their wall versus, an old piece of art or buy stocks.
And I just want to make sure, the California fires, your vault is safe.
All
right?
good. We're all safe. We're all safe, luckily, right? And we're lucky we have facilities all across the country. So,
all right.
Lots to be thankful for there. DJ Ski, thank you so much for
Thank you,
joining us
guys.
at the desk, and we'll see you around the conference.
Of course. Thank you all.
That was the Realist founder, DJ Ski. All right, Sam, it's time to talk about your favorite topic, because you set them up, the prediction markets.
Oh, our prediction markets,
Prediction markets. Is Drake coming to Consensus? We know Kendrick is not, right? But Drake might.
Ski would have told us if Kendrick was coming.
He would have told us he has that alpha, but he said that he didn't give us any information. So Kendrick is not coming, but is Drake coming? You can make your bet on Myriad Markets right now. Let's take a look at what bettors think. Yeah, still not looking so good for Drake coming to Consensus. We can see there that the majority.
We were at 11.8. Now we're at 12.3. So a few more people think he might show
A
up.
few more people think that Drake will be here. Proof of Drake. I think we would all really love for Drake to be here. And so get on Myriad Markets, make your bet. We have 4 prediction markets set up, 3 of which are points markets, so they are just for fun. They are, will Drake show up in person at Consensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman tweet more than 20 exclamation points during Consensus?
He's already at 10.
I was going to say, I think he probably has surpassed that already. That's an easy one to check. There is one market that you can bet USDC against, and that is, will Bitcoin hit $110,000 during Consensus? Join in on the fun on myriad.markets. Now, Sam, before I welcome our next guest, do you think Bitcoin will hit $110,000 before the end of Consensus?
My bet was no, but that we're going to get closer. There's usually a consensus bump. We'll see what happens.
Consensus rally. Let's see what happens.
Yes.
All right, let's get to our next guest, who is best known for his bold ideas, deep technical vision, and outspoken takes on the future of finance. He is the CEO and founder of Input Output, the force behind Cardano, and a co-founder of Ethereum. Charles Hoskinson, welcome to the show.
It's great to be here. You guys having fun at Consensus?
We are having so much fun at Consensus. Are you having fun at Consensus?
It's a lovely event. You know, the weather is perfect. I remember when we did it in Austin, you know, it was really hot outside, but up here in Toronto, it's just perfect. It's not too cold, not too hot. Great attendance, a lot of wonderful people. I think I'm moderating a panel tomorrow with Eric Trump and the World Liberty guys, so that's going to be a lot of fun too.
What are you going to ask them?
I don't know. I think there's a prediction market, right? So don't tell me. I don't want any insider info.
Charles, I had the pleasure of hearing you speak before on something we're working on together. And you mentioned something to me which I thought, well, in the conversation about the idea of sort of these archaic middlemen in the finance world and how we need to change that relationship, especially with kind of the new folks who are coming into crypto, who need to respect privacy and money in a different way. And I would just love for you to give us your thoughts right now on the state of the market with crypto, because we are seeing, I think, so many more people come in. And you've just been there for so long. What should people know about spending time in crypto, and especially around their own sort of like privacy and self-sovereignty, ownership of their information?
Well, you know, there's an expectation of a boom, expectation of a bull, but we as an industry are trying to do everything in our power to get rid of the bull market. But it's coming whether we like it or not. You know, every 4 years we run into this. I remember the first one I experienced was 2013, and that was a wild year because, you know, we had the Cypriot crisis and Bitcoin went from $4 to $250, went all the way up to, then down to 80, and then all the way up to 1,200 during the Mt. Gox burn up. And then it was a dark, terrible time for years and years. Bitcoin sat at $250, and it was very deflated. Then in 2017, we had another bull market, followed by another one in 2021. So every 4 years, it seems to happen with the halving. And so this time around, too, the U.S. government is really pro-crypto, which is just still jarring because I remember the Gensler years and going through every exchange being sued and all the negative news. So having the U.S. government say, hey, we're going to have a strategic reserve, or hey, we're going to pass pro-crypto laws, or the U.S. government choose to procure crypto for its operations, that's a good thing. And it's opening up the conversation globally. So the Middle East is becoming a lot more friendly. They were already pretty good, but now more so. The same for Europe, kind of, hey, maybe MiCA doesn't need to be as restrictive as it needs to be, in Japan and so forth. So overall, the state of affairs is bullish. It's just, we're not quite where we need to be yet. There's probably 2-3 more months of heartburn from macroeconomics, like the tariff issues and these types of things, before we start seeing that cycle happen. And they usually last about 6 to 12 months.
You know, at this desk today, we've talked a lot about stablecoin legislation, and just because we're talking about the U.S. government having a more friendly outlook on crypto, I'd love to get your reaction to the Genius Act, the stablecoin legislation that everyone was so optimistic about failing that first Senate vote.
Yeah, well, we've been working pretty closely with certain key lawmakers. We work much more closely with the legislative branch than the executive, but we do talk to both sides. And there were some recommendations that we've put into the Genius Act, like getting NIST, for example, to work on international standardization. Because the thing is, like, it's not just stable coins in the United States. It's, well, how do those coins work with Europe? How do those coins work with the Middle East? How do they work with Japan and other places that just have so much money flowing through them? So that was a big component. But we expected that there would be some friction, especially given that politics are so violently partisan. But the reality is that when you look at the postmortem of the 2024 election, one of the contributing factors to Harris losing was being anti-crypto. 55 million Americans own crypto, use crypto, know about crypto, and the majority of them are young and left-leaning. So why would you, as a politician, go and burn down 10, 20 million people of your own base? It doesn't make any sense. So part of the postmortem that the Democrats did in December and beyond was, let's try to figure out a way not necessarily to be pro-crypto, but at least neutral to crypto. So one area of compromise that had been since 2022 under Senator Toomey, when he first proposed stablecoin legislation, was stablecoins seem to be an easy to regulate, easy to understand, and easy to handle subset of the cryptocurrency industry. There's $243 billion worth of stablecoins minted, mostly tokenized treasuries, and about 120 million transactions per month. So it's a huge sector. It's the very first real world assets, just tokenized treasuries floating around. And it's something where well understood regulated financial vehicles like banking or trusts or other things. So I think we'll get it done. Probably another month or two of squabbling. It'll get signed. The big one's going to be the market structure bill that'll come in the second half of the year. And that bill is the security commodity, that bill's the taxes, potentially memorialization of the reserve and law. And there's no clear, concise opinion on that. There's a very wide variety of things to discuss. And there's kind of a third initiative that we've been pushing for, which is we need to update and modernize our securities laws in general. See, everybody's scared of being a security because being a security kills all innovation, and securities are not global instruments that trade 24 hours a day, 7 days a week. They tend to be bounded to a jurisdiction, to an exchange, and that was the view we had in 1933, 92 years ago. But what if we had like lightweight securities where they can trade globally and it's okay to be one of them? Then that would open up the real world asset space. So tokenized real estate, changes to how we sell equities, fixed income securities. These things would be much better suited on token markets than traditional exchanges. So that's one conversation that the stablecoin debate has already sparked, because Coinbase, when they came in with the stablecoin debates, they said, hey, we want to, find a way to get interest-bearing stablecoins. And that was kind of dead in the water with that bill. But more broadly, what if we could open up securities regulation a little bit, and it's easy then to turn a stablecoin into an interest-bearing instrument and trade it globally without owner's registration regime.
So Charles, the project that we're doing together at Concensus is around privacy. When I look at stablecoins, I kind of look at this is the future of internet money, right? AI agents transferring little bits back and forth, and we're going to need some way to protect ourselves in that. How does Midnight specifically, which I know is a product that you're very proud of and put a lot of your own effort and money into, how does it help solve the challenge as we move into this new internet age, especially with AI?
So the big challenge with the crypto industry in general, I'd say there are three demons we have to slay for mainstream adoption. And the number one demon is this concept of privacy. So the issue is that we did a really great job as an industry building public ledgers. And that's awesome. And everything you put in it, it's immutable, it's time-stamped, it's irreversible. What Satoshi wanted, we got, and we overdid it. So the problem is there's all classes of assets and activities that you probably don't want the entire world knowing for the rest of time what you did. For example, would everybody want their Amazon transaction history being publicly known, or every Google search, or your medical records, or things like that? So it's kind of obvious, but look at the stablecoin space right now. All these Tether transactions, all these Circle transactions, that 120 million, they're all public and trackable. And that's basically a panopticon of financial surveillance. So you need to build a private side to the system in addition to having the public side. And the issue with that private side is then it invites all these second, third, fourth order conversations about, well, how do you regulate that? How do you build selective disclosure? How do you identify people? What level of proof is required to know that this is compliant? But it's a necessary thing for real world assets. So Midnight as a program has been going on for about 6 years at Input Output. And then we spun out the engineering side into a subsidiary called Shielded. And then just recently, the Midnight Foundation got started under Fahmy Syed, wonderful friend of mine. And it now allows us to kind of centralize a lot of the bootstrapping of the ecosystem in one place. But the goal here is to solve the second problem, in addition to the first, rational privacy, with what are called cooperative economics. So because it's not good enough just to have a privacy framework, and it's not good enough just to have identity, you also have to have a situation where you acknowledge that network effects are network effects. No matter how much money Microsoft spends, they don't seem to be able to break up that Google search monopoly. And similarly, if you look at all the dApps on Solana, Ethereum, if you look at the network effect of Bitcoin, it's very unlikely that a cryptocurrency, especially a new one's going to come along and in a few years' time be able to steal all those users, all that volume. And that's the wrong thinking. It's adversarial. Instead, what you got to do is say, well, how do we be cooperative? How do we enter a new realm of cooperative economics? So one of the hallmarks of Midnight is it works with most of the major smart contract systems. So it talks to Solana, it talks to Ethereum, it talks to Avalanche, talks to Cardano, talks to BNB, NXRP, and so forth. And the idea is that developers there could extend their infrastructure and pay transaction fees with their underlying currency. So if you're an Ether user, Ether holder, you're an Ether developer, you can spend Ether for that transaction. And the same for Solana with Sol and Bitcoin and so forth. And the magic of that is then people stop viewing this as separate stuff. They view it much more like a developer in the AI space would view OpenAI. Let's say you're building like Spellbook for lawyers and you want to build the ultimate thing for law firms to use to read contracts. Are you going to go and build your own large language model like Elon Musk and start a $100 billion data center and all this stuff? Probably not. What you're going to do is you're going to call OpenAI over an API. It's going to do all this intelligence stuff, and then you'll have whatever stuff makes your business model work on your side. Similarly, do you really want to create your own snark system and your own privacy layer and your own disclosure system? It's a lot of complicated mathematics. I'd rather, as a developer, just pay a transaction fee and call it through an API. And that's what we've been trying to do with Midnight, and I think we've made enormous progress there. And the last thing is, how do you do a distribution where you get rid of the Ponzonomics? I was at Ryan Selkis's conference, Masari's, years ago, and I coined that term while on stage with them. And they said, why don't people like Cardano? I said, because we don't have the Ponzonomics. We didn't do a VC raise or things, so that nobody had any ownership of it. So I said, you know what? Instead of doing an ICO or venture capitalism, I'll just spend my own money, build it, release it finished, and do an airdrop to these 8 different chains. So the distribution, 37 million people. And so the odds are people listening to this probably already hold it once the airdrop happens. So if you like it, great. If you don't like it, well, I put it in a bucket or something. I don't know. It's your decision. So, but I think those things solve the big problem: the rational privacy, this cooperative economics, getting rid of the Ponzonomics, and pulling those pieces together. It's going to change the industry because suddenly we can now have real-world assets. We can have supply chain. We can have secure voting systems. We can have healthcare record systems. We can have financial systems which are much more nuanced, where you, your accountant, your CFO, your organization gets to see one set of books, but then the world sees another. But you preserve everything that makes cryptocurrency special: the auditability, the verifiability, the provability of things. So once I give you the record, it's never been tampered with. It actually is real. It's timestamped. These types of things. So it's really exciting.
You mentioned a lot of different ecosystems there working together. I'm just curious to get into your head and hear about how you're thinking of the future of this industry. Do you imagine some sort of consolidation? Will all of these ecosystems that are featuring here, that we're talking about here at this desk, exist in 10 years from now?
Well, 1.4 million cryptocurrencies have been launched since I've joined the industry, and 94% of them are dead. So obviously, there is a Cambrian explosion and Cambrian extinction event that happens. But to be useful, you have to have good governance. To be useful, you have to be adaptable as like a complex adaptive system and resilient and grow. And ultimately, you have to have a community. You have to have people there. That's why Doge will never die, Bitcoin will never die, because there's an extremely strong community, and they're able to, generation by generation, keep that ethos going. So what we've thought a lot about is, how do you bring people together and give people strong incentives to work together? And how do you build communities that are self-replicating and self-reinforcing? Some people crack it like Ethereum did and Cardano did, and they have a durability and permanence that you just don't normally see with most projects that launch. And you can't astroturf it. You can't go and just open up your checkbook and pay people a lot of money and somehow they love you. That's a transactional relationship. They'll be there until they're not, and then they'll look for the next big thing. So really, community building is the core of it. The other is philosophy. You have to have something to believe in. People, when they talk about Cardano, they say, hey, we love the economic, political, and social systems of the world being subject to change. We love the idea we have a constitution, we have a vote, we have an on-chain governance system, we actually have a say, we have an on-chain treasury, and we get to decide year by year what the roadmap's going to be, what the budget's going to be. We love the fact that the people involved legitimately want to change the world and actually try to find every day businesses and governments to adopt that. It inspires people. It keeps them going around, especially in the bear market where everything's really sad and depressed, and it's like, oh, yeah, bad news, this guy got sued, this thing happened. bull market's easy to keep people excited because there's an economic incentive, but over the long run, you only survive if you have good philosophy and good community.
Charles, thanks so much for joining us at the desk. It was such a pleasure having you here, and we'll see you around.
Absolutely. Thank you so much.
Thank you, Charles.
That was Input Output CEO and founder Charles Hoskinson. You're watching CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. MoonPay made 2 historic 9-figure acquisitions this year, building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. I'm Jen Sanesi, here with my 2 co-hosts to close out the day, Sam Ewan and Renato Moriarty. Hello to you both.
Great to be here.
Sam and I have been at the desk all afternoon. So Renato, you really are the new face. What have you been up to today?
Well, I've been talking to leaders in this space, not only leaders in, let's say, the Blockchain Association, but people who are chief legal officers, CEOs of companies in this space, and really everyone is concerned about the future of crypto. We just had the stablecoin bill essentially put on hold. We weren't able to get cloture passed in the Senate. I think, I guess you just heard something about that a moment ago, but not everyone is optimistic. Some people are concerned. And of course, market structure is sitting out there. If it doesn't happen this year, I just had somebody tell me, if it doesn't happen this year, it'll never happen. And it's existential for our industry. That's what I was just told.
That's kind of wild. We've had a lot of people at this desk here today weigh in on if stablecoin legislation will be passed. One of them, Bo Hines, who we're going to hear from in, I think, 10 minutes from now, he's going to be on the main stage. He said that he is pretty confident that stablecoin legislation will pass, and likely before August recess. It seems a little bit contradictory to what you've been hearing on the floor.
Well, Charles Hoskinson, not moments ago, said the same. He said within a couple of months, he thought as well.
Yeah.
And so I'm wondering where they're getting their information versus what you're hearing, because you're hearing it from a very different side.
Yeah, I think people in this industry who are leaders of companies are very concerned. And part of the reason that they're concerned is if stablecoin is this contentious, which is something that we had people on both parties signing off on and co-sponsoring. And if you got I had somebody tell me this morning, you had their entire Democratic caucus come together, exit, and have their own counter programming and their own counter meeting about the president, really having this political fight there. What does that mean for market structure? What does that mean more broadly for crypto? And if we don't have market structure, where is that going to leave us? So I think there's some concern if potentially stablecoin may not get passed, but I think it's tied to also a concern about market structure, which is really, I would say, the main course. In many ways, stablecoin for a lot of people who are here today is the appetizer.
Well, Renato, you and I on our show have pre-gamed SEC roundtables a few times. We've talked about what's going on at SEC roundtables, how that's going to contribute to rulemaking from a regulator standpoint. So talk to me a little bit about what happens if stablecoin legislation doesn't get passed, if the market structure legislation doesn't get passed. Does that leave it to the SEC and the CFTC to make their own rules? And then what happens when we have new leadership at these agencies?
You know, I'll tell you, I was talking to a leader about this earlier today, who used the example of the tortoise and the hare, and said that Hester Peirce is like the tortoise, who is been working for years. We've had her on our program. We've talked to her a number of times. She is going forward, and she's doing her rulemaking, and she's doing her roundtables, and she's going on as if there's going to be no market structure bill. And you know, if you remember, after the first one, Jen, I was like, okay, they're talking as if there's going to be no market structure bill. The SEC's just off doing their own thing. And, you know, at the time that seemed perhaps foolish on their part, but actually there's a real genius to it. Because if we don't get this passed, we're going to end up having to rely entirely on what the SEC is doing. And really, I think part of the concern and the frustration by a lot of the folks here at Concensus is, well, that means the CFTC may get pushed out. Maybe they won't have a seat at the table. Maybe the SEC, who's doing so much and getting out there on all these roundtables, maybe they're going to end up having the leading role.
Renato, I'm wondering, you know, in startup culture, there's a sort of common thought process that says you are failing until you're successful, right? And I wonder if it's almost the same thing, which is we're just going to keep going. We're going to keep moving forward. We can look back at the last year and see all the incredible movement we've had, and there's been a tremendous amount. We're seeing a lot of the currencies near their high or at their high. So something is going right.
Yeah.
The question, I think, is how long is it going to take before people get what they want? Now, in crypto, the problem is they always want more. And that's really a challenge, as opposed to being able to say, we've gotten a lot recently.
I think also there's people trying to look a step ahead. You know, I was talking to somebody today that said that a lot of their deals have 5-year terms right now. And there's a reason why. There's a concern about what happens in the next presidential election. You know, everyone remembers the war in crypto. Everyone remembers, regulation by enforcement. Will that happen again? Will there be another Gary Gensler, that sort of thing? And I think given all of that, I think people are really just trying to game plan ahead. Like, we're not concerned about stable coins right now. We're not concerned necessarily about market structure for the short term. We're concerned about the long term, taking a longer term view. I also think, though, you know, you talked about wanting more. Part of what's really going on here, the reason the stablecoin bill is so important is there are a lot of TradFi businesses, particularly banks, that want to get in on this, want to bring all these new customers in, want to bring all this new money, this new energy. That's great, and we need to unlock that. And really, how high crypto can go is, I think, going to be dependent on what happens in the next year.
Can we go back to the war on crypto, though, with so many big institutions and so many big names now in the game? We've talked a lot about BlackRock's offering. We've talked a lot about how institutions are thinking about different crypto products. Like, is it really a reality for us to take that many steps back and have another Gary Gensler at the helm of the SEC when these big influential names are here?
Yeah, that's a great question, Jen. You know, we have like the DeLorean here at Concensus. So if we got in the DeLorean and we went ahead a few years, and let's just say hypothetically nothing got passed, and we had some rulemaking, and the Democrats got elected on a platform where they're like, look, the other party is too in with crypto, we're anti-crypto. I still think even then, I'm actually agreeing with you here. I think even in that circumstance, I don't think it would be quite the way it was before, where there's this knee-jerk reaction that crypto bad, non-crypto good sort of thing. That said, I think the industry has so much PTSD from that experience that there's a lot of concern, there's a lot of trepidation. It's one thing for somebody who's involved in politics to say, oh, this is likely going to happen. But if you thought there was, let's say, a 30% chance that a boulder was going to fall on your house, you'd care. And I think that's where a lot of people are here in Concensus. They're concerned about the future. They're concerned about what could happen.
Renato, I'm thinking, though, it's like, yes, we crack down on predatory lending, whether it's in home loans or it's in credit cards. Where we go might be even inching closer to that, to where we used to be. But it's not like the credit industry went away. So I don't think there's a place where crypto goes away. I don't think someone's pulling back all the ETFs and saying you can now no longer invest in them. I think the question for you is really, how should one position themselves to play a volatile game, right? As someone who's understands it from a legal perspective, I don't get. How do you sort of allow the framework to be change is there, and now we're going to plan for it?
That's a really smart question. I think it depends on who you are. If you're a very big player, if you've got a massive booth here at Concensus, you're going to want to be engaging with the SEC while at the same time doing everything you can to get legislation passed, and also having a plan for how you're going to be compliant in advance, because you're going to need to be ready to be compliant in 2-3 years' time. If you're somebody who's like on the sidelines just trying to make money off of this, one thing that really happened this last week, we had Coinbase acquired Deribit. That to me is a bet on derivatives. It's a bet on not only they're having their futures Coinbase derivatives product, but you also have the worldwide leader in options. You're starting to see institutional money coming in here, and I really think that a lot of the people who are going to be making money in crypto with a volatile marketplace are going to be people who are getting in and out and making bets on these derivative products where they have a lot of liquidity and they can come in and out and make bets maybe against some of the people in the spot market who are making trades and reacting a lot to the news of the day.
Well, Renata, you're going to be joining us at the desk here tomorrow, so I'm sure we'll talk about this a lot more with the guests that join us. We're going to take a look at the main stage now, where Bo Hines, the Executive Director of the President's Council of Advisors for Digital Assets at the White House, is doing a fireside chat with CoinDesk's Jesse Hamilton.
Our first day of Consensus. It's been a busy day so far. We've talked about stable coins a lot, and the role of the states in regulation, prosecution of software developers, how to head off truly bad actors, and we've now got a guy who's going to bring it all together for us, going to close it out for us. So we're honored and lucky to have a White House official cross into foreign territory today. Bo Hines, the Executive Director of the President's Council of Advisors on Digital Assets. Did I get that right?
You got it right. It's not the sexiest acronym, but it gets the job done. So
it's a heck of a title. It's a bit of a long one, but basically you're the I don't want to put words in your mouth, but you're the administration's sort of liaison for crypto, working beside crypto czar David Sachs, basically trying to move U.S. digital assets regulation forward. Am I getting that right?
That's right.
Okay.
Yeah.
So welcome, Bo. Thanks so much for joining us at Consensus. We appreciate it. So before we get started, by applause, if I could, I'm curious about this. Who here is from Canada? Canadians? Okay. And how about from the States?
It's a good mix.
Oh, kind of a mix there.
It is.
But
Yeah.
Anyway, there is a considerable constituency for you out, the U.S. people out there. Obviously, this is we're going to be a bit U.S. centric on this discussion for obvious reasons. So, and of course, U.S. policy will help steer the rest of the world's when we finally get around to it. Right.
That's our goal. Certainly.
So we have a short time to tap your knowledge here. I'd like to get an idea of sort of where you're coming from on crypto. Where did you first get interested, and people love this question. Had you personally invested anything in this space?
Yeah, I know it's a great question. And, I have a pretty fascinating story as it relates to this space. I was actually a college football player at North Carolina State University my freshman year in college. And I had the privilege to play in the St. Petersburg Bitcoin Bowl. And the marketing worked. Lo and behold, it sparked my interest in cryptocurrency and digital asset technology more generally. I became a pretty avid trader and retail investor from that point forward. And this was, back in the day when a lot of this technology and change was considered uncouth, right? But I had a good group of friends up at Yale, and we kind of banded together and started to sort through a lot of this. And, we came to the conclusion that this technology could certainly revolutionize the way our financial marketplace works. And, I ended up going to law school at Wake Forest back home in North Carolina upon graduating from Yale. And I had the privilege to study under Professor Renee Hawk, and that is an intentional shout out for her at Wake Forest University School of Law. She led courses in blockchain and internet law. And this also, with no clear regulatory environment, you might be asking, well, what were you studying? And we were studying the practical applications of what a clear regulatory regime would look like. And those courses certainly kept me in tune with what was going on in the space. I ended up becoming a general partner in a growth equity firm in Charlotte, but did not have a digital assets vertical inside of that firm. Stayed very involved just from the retail perspective. And when the transition rolled around, I knew a lot of the folks in the Trump orbit from the days when I ran for Congress in North Carolina's 13th district. Unfortunately, fell just about a point short in that race, but it's led me to where I am today, and I'm ever so thankful for that. But they had reached out and said, "Are you willing to come in and help us, shape what this regulatory regime would look like and help us deliver on the president's promises to make the United States the crypto capital of the world?" And I said, "Absolutely." Couldn't think of a better opportunity. And I ended up, we had a meeting of the minds between myself and our AI and crypto czar, David Sachs, who is a brilliant human being in his own right. I think his reputation precedes him with all of his success with his business ventures and so on. But we started mapping out what this would look like. And I think that, we're well on our way of achieving the president's goal, but there's still a lot of work to do.
So I described you as a sort of a liaison, White House liaison to crypto writ large, but how would you describe your day-to-day sort of broadly so they understand, folks understand what you do?
Yeah, so I view my office as basically being an administrator and or Sherpa between White House policy, industry, interagency activity, and what's happening on Capitol Hill. We felt like the lack of progress that the industry had in terms of setting clear regulatory standards was in large part due to the lack of consensus that was there. There was no nucleus to pull it all together. And we felt like this office could, be the tip of the spear in doing that. And I think that we've successfully done that thus far with a lot of different activity happening amongst interagency actors. And, obviously we have a dream team built out in this administration for the digital asset space with, Hester and Paul over at the SEC, with Brian coming in at the CFTC. I'd be remiss not to mention Secretary Lutnick, Secretary Bessent, phenomenal actors for this space. It makes my life a heck of a lot easier. And that's, a testament to President Trump. I've told people many times that, in this administration, I think that we're finally testing a theory that a lot of folks have had, at least in the US, is what would happen if you took private sector actors that have built and developed and sold businesses and injected them into a bureaucratic system. And I think that we're finding out that, we can make this system work. David likes to say that we're moving at tech speed, and I would like to second that. I think that we're moving extremely quickly and effectively for that matter. But with the president's working group that he established in his first digital assets EO, this gives us a streamlined process to engage in the activity that's necessary to provide guidance and clarity.
Well, speaking of speed and its antithesis, we're dealing with the Senate right now. What has been like, I guess you could describe as a bit of a roadblock for crypto legislation in the past, and it looked like things were going pretty well. So this is, arguably the biggest point of current affairs in crypto policy right now is the stablecoin bill to regulate U.S. stablecoin issuers. The Senate has been dealing with this bill. It got a little bit off track. There was a procedural, impediment to it in the Senate. We would hope to hear the latest on that, with the understanding that there may be floor consideration tomorrow. We're hearing very recently on the latest version of this bill.
Yeah, we shall see. Negotiations are ongoing, and just to pull this, backwards ever so slightly. Last week we did have the failed cloture vote, and many viewed this as certainly an impediment. But I remain steadfast in my optimism that we're going to achieve the president's desires to both put stablecoin legislation and market structure legislation on his desk before August recess. And I say that because of the good faith negotiations that are ongoing in a bipartisan way currently in the Senate as it relates to the Genius Act. I think that they've come together and pulled this bill to a place to where we actually get to the best outcome. And our colleagues up on the Hill recognize how important this is to the United States of America and the world more generally. And we're talking about updating very archaic payment rails that have existed for quite some time. We're talking about creating a world in which payments are much more expeditious with instant settlement times, much more cost effective, and much more transparent. This should be extremely nonpartisan in nature. And that's, a lot of the frustration that the American people have, especially, is when issues like this arise, where we're dealing with something that we should be able to come together on and push forward, because it's to the benefit of all Americans. There's really nothing partisan about it. My challenge to my colleagues on the Republican side and the Democratic colleagues over the course of the next couple of days is, let's get this thing home. It's time. The traditional financial players are ready for adoption. We're ready to integrate these technologies, and we're ready to revolutionize the way in which our financial marketplace works.
Well, it certainly looked like it was on fire when it was coming out of the, not to get too procedurally, but out of the Senate Banking Committee, had a very strong bipartisan vote. Obviously, there's, it hit this speed bump. But before I sort of ask a little bit more about that, if you were in the crypto loves the prediction markets, if you were laying a bet, Genius Act clears the Senate by the end of the month. What do you think?
That's a tough
Too
question
ambitious?
there, Jesse. I don't think it's too ambitious. Like I said, I remain optimistic it's going to get done. I think it's going to get done in short order. I'm very confident with where things stand currently, but this is an evolving process, and I'm sure I'll have more updates as soon as I get off the stage. But I just want to thank our leaders in the Senate. Senator Haggerty has done a phenomenal job. Luke on his staff, who's had the pen for most of this and worked diligently to get this to a place that is palatable for both sides, has been extremely effective. And now that we're finally in a place in which we can have good faith conversations and negotiations, and we know exactly what the other side is looking for, it allows us to achieve the best result. And that's where I can say we currently are, is that we're actually having those conversations in real time as we sit on this stage. And that puts us in a good place to get it home. So I remain, extremely confident in the fact that they'll get it pushed through, and we'll see where it goes from there. But we'd love to see it on the president's desk in short order.
In Washington, still talking is good.
That's right.
Yeah,
when the talking ceases to happen, that's when you're in bad shape. But that we're not there.
In the House of Representatives, the discussion draft is out for the replacement for last session's FIT 21 bill that many people may be familiar with, the legislation to install regulatory guardrails for the crypto markets in the U.S. So, cart before the horse, maybe, but where are we on that?
Well, look, we'll make a sequencing decision in short order about how these things should proceed, but we have to see what plays out in the Senate this week and over the course of the next couple of weeks. With that being said, we are absolutely adamant that both stablecoin legislation and market structure legislation need to be signed into law very quickly. One cannot be left behind. There's absolutely zero option for that from the administration's perspective. These things have to run together. That doesn't mean they have to be sequenced together. It just means that we need both, and we need to get them both done and signed into law. So I'm very pleased with where that draft sits. I think it's a much improved version of FIT 21 that we saw in the last Congress, and that's truly a testament to the writers that are working out of House Financial Services and House Ag on that side in that chamber. But I think this is a phenomenal starting point as the foundation to jumpstart conversation as they move this thing into markup. We'll certainly be there to Sherpa this along and get industry feedback and help to inject those comments into the conversation.
I think, if I'm not mistaken, who it was, I think French Hill said from this venue that called them peanut butter and jelly, the two bills. So obviously they go together. So how much should people be concerned that the resistance developing for the stablecoin legislation in the Senate will be even worse for the more complex and sort of wide-ranging market structure bill it's meant to govern all of U.S. crypto?
Well, there's certainly conflicts of interest amongst industry actors on very minute issues that exist within these pieces of legislation. I think that one thing that we've proven with the Genius Act is that we're able to thread the needle to pull industry actors together. One thing that's worth noting is that with Genius, it's the first time ever you've had all three major trades come out and support a piece of crypto legislation in the United States. I think you've seen industry coalesce, all of industry coalesce behind it, including the folks that are competitors in that space and really just go head to head. So, again, that brings us to the conversation of why can't we get this through? You would think if competitors in the industry can agree upon the text, then our Democratic colleagues should as well. But we understand where they're coming from, and we've done our utmost to make concessions that allow them to get more comfortable with the language. And, I think that we're there. But with market structure, to answer your question more directly, this is going to be a drawn out conversation that takes place over the course of a couple months, and we'll be able to consolidate feedback from industry and attempt to thread that same needle there. And so long as we can get all of industry pushing behind this, I think that we'll be in a really good place. I think the problem with pushing legislation, we all know it's very hard in the United States with anything. That's how the system is built. That's how it's designed. But with digital assets more generally, there's a knowledge gap that exists. This is new technology. It's scary for a lot of people when you're only seeing headlines that are negative, like we saw under the Biden regime, in which people are positioning the industry as being a facilitator of illicit activity. It puts you in a tough place with people who don't understand how important this technology is. Now, we all know that that's not the case. We all know how important this technology is to be integrated into the traditional financial systems. Even those players recognize the unlock that this could provide in terms of revolutionizing the way that things work, and they're ready for adoption. That's one thing to point out as well, is these TradFi folks are banging down our door, trying to figure out what the timelines are, trying to figure out who the best players to interact with are in the digital asset space. And the unlock to that was what the president did with the first digital asset CEO. But I'll pause there because I'm sure we'll get there.
Yeah. So the Democrats who've come out to oppose the stablecoins effort, many of whom were in favor of advancing it out of committee, as we noted, have raised objections to the president's personal stake in the crypto industry and whether it presents conflict of interest. So what's the White House's response on that?
There is absolutely zero conflict of interest that exists. And I'll say this, the president's family has the right to engage in this industry like any other U.S. citizen, period. The president is focused on delivering on his promises that he made on the campaign trail to the American people. In the first 100 some odd days, he's delivered on a lot of them, which should be really exciting, not only for Americans, but for the rest of the globe, and just unleashing what this economy can do. And I'm talking about the global economy, not just the American economy. Obviously, our capital markets are in a very good place as we watch these tariff negotiations and trade negotiations play themselves out. We want to establish ourselves as the leader in digital asset financial technology more generally. And I think the fact that his sons are engaging in this is a good sign. If you're a good entrepreneur, my advice to you would be look for ways to get involved in this industry, because this is the next generation of finance, period. And if you're not thinking about ways to get involved, then you're probably not a very good business person.
So you think it's unfair to suggest the president can be influenced by outside parties based on this sort of crypto business interest?
I think it's absolutely unfair. Look, if the president's family was engaged in real estate or any other place, you wouldn't hear anything about it. But the U.S. government certainly has interest in those things as well. Crypto has been treated unfairly for quite some time. And we saw this under the Biden regime with basically lawfare. They've been targeted in a way that no other industry ever has been. We like to call it blue tape. It's traditionally called red tape. You start talking about some of these regulatory structures that were set up that were enormous roadblocks, a lot of which undergirded the Operation Choke Point 2.0. And the president has made it very clear, both at the White House Crypto Summit that we had, which was a monumental step in recognizing industry for what they've been able to accomplish in the midst of headwinds, that we need to eradicate anything that undergirds Operation Choke Point and free up the traditional players from interacting with digital asset firms. And that's something that we're consistently focused on.
How, and I'll move on to the executive order and Bitcoin reserve, because I know people want to talk about that. But how are the Democrats going to be brought back to the table who are raising these concerns? Or maybe they already have.
Look, they understand how
getting a vote tomorrow.
They understand how important this is for the American people. They understand how important this is for the U.S. to lead the charge in this space. This has nothing to do with anything else that's going on with one individual. This can have a macro and global impact in a way that we can't even possibly fathom. When you start talking about stablecoin adoption, what it does for U.S. dollar global dominance is enormous. You talk about the foundation of what you can build in terms of creating these new payment rails. You're looking at tokenization of public securities, talking about the ways in which markets move and operate changing completely over the course of the next few years. That's too important of an unlock for us not to get home on this. And I'd like to see our Democratic colleagues put away political gamesmanship and move forward here and get this done for the American people.
So let's let's get on to this other biggie here. So President Trump put out an executive order that called for a Bitcoin reserve and a separate stockpile of other crypto assets. Those funds are at first only meant to be assets that the government has on hand from seizures and the like.
In its current state.
In the current state. So before we get into the idea of other ways that Bitcoin may be raised for the reserve, how's it going auditing the U.S. crypto holdings currently and getting this reserve off the ground in a more technical sense?
It's been a rather smooth process. Look, things oftentimes move slowly in government. I'd say not in this administration. There were clear outlined goals and dates set in that executive order in which the interagency actors have complied to. But if you look at the authority in terms of what's set up there, a lot of it falls underneath Treasury at this point. So, Treasury is tasked with the responsibility of actually setting up the SPR. They're also tasked with the responsibility of consolidating that report and providing that to the working group that basically describes what we're currently holding and where we plan to go from there. And then you include the Commerce Secretary as well, that was mentioned in that executive order, as they're supposed to come up with budget neutral ways to accumulate as much Bitcoin as we possibly can. And I get asked by journalists constantly, how much Bitcoin do you want? I'm like, that is an extremely silly question. The fact of the matter is we view Bitcoin as being unique. It's a commodity, not a security. It has intrinsic stored value. It has the immaculate conception. It's finite. We want as much as we can possibly get. And we want to do this in a way that benefits the American people. We want to do this in a way that harnesses that asset class. Bitcoin is digital gold, period. I can't say that enough. And we view it in our long-term interest to hold on to it and find ways to harness more. There's limitless ideas in terms of how we can do this, and I don't want to poison the well by speaking to the ones in which we'll move forward on just as of yet.
Oh, I wasn't even going to ask you about
But
that.
I'm sure you weren't. But there are passionate players in the room. They're very intelligent, as President Trump likes to say, the high IQ folks in the building that certainly have very good ideas. And look, it's not one size fits all. We can do this in numerous creative ways. And so we will probably end up moving expeditiously on those that we can enact more quickly, but we can start building out long-term strategies as well on top of that.
And you certainly wouldn't want to name, like, I don't know, 2 or 3 creative ways that this could be accomplished?
Not just yet.
I have to try. So, okay, then, if we're not getting into specifics on it, who is making the call and how are they doing it?
Well, look, this is why the working group was set up, so that we can have these conversations amongst all the interagency players that have some sort of stake in this process. Obviously, the Treasury Secretary, obviously Secretary Lutnick at Commerce. These conversations involve numerous actors, including DOJ, who's a part of this working group, and others. We want to make sure that this asset that's stored is protected and secure. We want to make sure that we're finding ways that will provide longevity in the process. And so we'll come together and flesh out these ideas amongst the group, and then we'll have a consensus decision on how to proceed.
Let's get a sense of kind of the color of your working life. So you're inside the halls every day. Well, White House has a lot going on, from tariff negotiations, border security, what have you. Not to mention sort of partially dismantling some of the structures of the federal government, the executive branch. But in all that, that's a lot going on. In all that, how much of a priority is crypto? I know it's your job, right? So you're going to hear about it all the time. But how much of a priority is crypto, which is admittedly a small corner of finance at this stage?
Well, I think with Genius moving forward and the regulatory environment that we're going to build and the integration of these technologies into the traditional financial system, it's going to be a much larger part of our economy very quickly. I think the president certainly understands that. He's the first openly pro-crypto president that we've ever had. He certainly understands the necessity to move on these things, which is why he's pushed to have these legislative priorities move forward in the first year of this administration. Our colleagues on the Hill understand how important this is for us and how important it is for the president. And so, it is a large part of the conversation that's happening in the building. We view this as a way to, unlock new technology for U.S. capital markets. And we're very proud of the ingenuity of the American people and their ability to integrate these technologies, their ability to be forward thinking We want to give them all the tools at their disposal to build and create and innovate in the United States. Like my message to folks that have gone offshore is welcome home. We are going to create the cleanest and most robust regulatory environment that could possibly exist for digital assets in the United States of America. And we're going to do it very quickly, and we're going to do it on the president's timeline.
I think people a lot of times think of those who work at the White House being sort of, maybe they watched West Wing or something, being sort of in the Oval Office all the time, in and out of the Oval Office constantly. But now we did see the president have the summit, the crypto summit at the White House, which you were, I'm sure, part of organizing. I think I spoke with you there, but
yep.
It's like how involved is President Trump in the crypto initiative? Do you talk to him on any kind of regular basis, or how does that work?
Well, look, there are certainly conversations that are constantly ongoing as the legislative process plays out. There's other offices in the White House that have stake in this. Start talking about the NEC, the National Economic Council, great folks there. Kevin Hassett, at the helm over there is phenomenal as it relates to digital assets as well. We have OLA, the Office of Legislative Affairs. We have OMB inside of the White House. All of these players are constantly having conversations with us about how do we move this agenda forward. And then, the president's certainly invested in seeing, a major priority of his get across the finish line. And so, these conversations happen on a daily basis. And, part of that is soliciting feedback from industry. And the one thing that I did want to mention, because I know we have about 4 minutes here, is that, we certainly believe in industry's ability to teach and educate, especially government actors, whether it be interagency actors and or legislators on the Hill. And the president gave us broad discretion in terms of how we take industry feedback in. I think that's given us, the tools that we need to get to the best, outcomes in terms of what the legislation should look like, in terms of the pain points for industry as it relates to rules and regulations amongst interagency actors. It truly is remarkable. In the first, 100 days, I probably had no less than 200 meetings with different industry players, just soliciting feedback, understanding what their concerns were. As a private sector guy my entire life, I'm very keen on the idea that industry knows best. We need to hear from them and learn from them. And that's not just the Goliaths in the space. This is about learning from builders and startups and people at different stages of development of their enterprises. There's different pain points for each of these folks, and all of those needs need to be addressed in order to create the most pro-crypto friendly environment we possibly can and welcome innovation.
There were certainly a lot of people in the room for that summit, but I'm sure a lot of people. Would anyone want to go to a second summit? Anyone here? Yeah, no, oh, no, you don't have to have another one. Are you sure? It was, okay. Never mind, you don't have to plan another one. Is there another one?
So the way that
the
way that we've discussed this is, pairing this as the legislative priorities move forward and we start working towards this 180-day landmark that was laid out in the first digital assets executive order. For those of you that don't know, it references a report that we have to produce for the president that is a comprehensive look at what the cleanest regulatory environment would look like from the interagency perspective. And obviously we want to work with our colleagues in the Hill to do that. We view it as a means that the legislative process runs its course, to fill in the gaps that might still exist so that there's, immense clarity and there's no stone left unturned. So with that, we'll certainly have, in my opinion, as we continue to flesh this out, probably sub-vertical summits in which we pull industry actors in from different verticals in the space. You can bring exchanges in one time, you can bring miners and energy firms in one time, just so we're actually hitting, and understanding exactly what the pain points are for each category of the industry and being able to address those needs independently.
Now, the U.S. regulatory agencies, such as the Securities and Exchange Commission and the others, they seem to be sort of exploring their own paths with the industry as they await congressional action. Are you for your job, are you in communication with the agencies too on what can be done without the new laws?
Absolutely. Look, this report that we're comprising and working on amongst our group is all encompassing. When we'll talk about stables, talk about market structure, we'll talk about everything that needs to be done and what we can accomplish through interagency activity. And going back to this first digital assets executive order, it was penned this way for a reason. We had the 30-day landmark, which compelled these actors to do an internal audit review of any rule or reg that they touched in the space that affected digital assets more generally. The 60-day landmark compelled the same actors to produce a list of recommendations of what things they could do independently to get us in a cleaner environment. we were hoping through this process, and we've seen this happen just through the guidance and the rescissions and the lawfare that's been eradicated. They're making our life easier with the report. It's less that we have to address. And, with these actors that are currently in their roles, they're doing a phenomenal job of doing that. This report continues to shrink by the day. We're hoping that a 200-page report may only have to be a 50-page report. But, we'll see, and we'll get there.
So you've, as you indicated, probably met with a couple of hundred of the people here at Concensus today. But are you still taking those meetings with crypto execs and founders? And if so, how should they approach you?
Absolutely. So the best way to reach out to me would be through the OPL office at the White House, the Office of Public Liaison. They'll happily set up meetings for us, and please do reach out. We want to hear from you. We want to hear your concerns on market structure as we move forward on this process. We want to hear about your pain points that you're dealing with in the industry, and use us as a resource to be that Sherpa, that administrator that can pull everyone together and voice your concerns for you.
Well, that is our time, unfortunately. Thanks so much for being with us at Concensus, Bo. Really appreciate it.
Thank you, Jesse.
Give Bo a hand.
Welcome back. I'm Coindesk anchor Christine Lee. Our next guest aims to redefine the movement and storage of all forms of value, patenting the open value network that facilitates the efficient movement of value from fiat and cryptocurrency to rewards and digital assets. Please welcome Ali Abudaya, CEO of Transactix. Hello, Ali. Thanks for joining us.
Hello, Christine. Thank you for having me.
So actually, you have some big news dropping right here at Consensus. You are emerging out of stealth.
Absolutely. I mean, you can call it merging out of stealth. We chose Consensus to launch our company, and we centered all our launch activities around it.
I love it. I love it. Okay, so tell me, what is Transactix?
Transactix is a Canadian company. We have a 100% Canadian-made solution. It is called the Open Value Network. It is patented technology that facilitates the movement of all types of value, whether it's crypto, fiat, loyalty rewards, credit, assets, and everything. It's a lot of work, especially all these instruments have different characters and personalities, and all of them operate with different regulations. So that was a lot of difficult work, and we've undertaken the difficult task of making it easy. And if I want to say very simply, our mission is to not just enable that movement, but to make it as cheap and efficient as sending a text message.
Huh. All right. So is this a decentralized blockchain? Is this, okay, it is.
It's not a chain of its own. It operates on many chains. So, I mean, we operate on the 9 most popular chains that exist out there. You can list them if you go on CoinMarketCap and anywhere you see them. So far we support 9 chains, and if the use case or the business case requires it, we're open to support more.
And so is it a layer 2? Is it a roll-up? Is that the idea?
It's actually a platform that consolidates all these layers, but it's not a blockchain of its own.
Okay.
Yeah.
And so, do you already onboarded projects to use the Open Value Network?
So we're our own project in a sense, if you want. What we have done is, so what we announced today was not just the Open Value Network, but we also announced launching CADX, the Canadian-backed one-to-one fiat-backed stablecoin.
Oh.
So CADX was launched today as well as part of our announcement, and more importantly, as an application of all of this, is our smart QR code-based payment system. So you get the smart QR codes, you get CADX, which is built on top of OVN that has a stablecoin as a service embedded within it. So all this trifecta was announced today, and we are our own project.
So I'm wondering, how are you going to get users onboarded onto this specifically? And I'm guessing you're doing real-world assets, just everything that you can tokenize onto.
Yes, we're going in
Value.
phases. 100%. We're going in phases. The first phase, which is the very simple use case that you can experience here at Consensus, we have the Transactix Cafe out in the F&B area, and it has this beautiful yellow umbrella. Go up there, scan the QR code. Coffee is on us, so we gift you 5 CADX so that you can buy your coffee with. And then this is the first use case. It's a very efficient means of paying for small things. There are a number of other assets. When it comes to the real-world assets, these will be launched in subsequent phases.
And you are a Canadian company.
100%.
Based in Calgary. Tell me a
Calgary.
bit about the environment in Canada. Why choose Canada, and are you facing challenges in the regulatory atmosphere in Canada?
That's a great question. As everybody knows, the regulatory landscape in Canada is generally more difficult than other jurisdictions in the world. But we are Canadian, all with the founder and the team and the technology. We're as Canadian as it gets. And this is home, so this is why we set up here. Now, we chose Calgary for where we launched the company, as it had some interesting promises on the blockchain front, and
It's very friendly.
it's friendlier than other territories at the moment. But we don't view ourselves as just like a Calgary company. We are a Canadian company, and we extend our services everywhere in Canada.
And is the idea to capture more, expand elsewhere regionally in the world as well?
100%. You know, like a 1,000-mile journey starts with a few steps. We're starting here at home. We're looking for local services offerings. But as I mentioned in the panel earlier, our vision and the dream is to actually, the dream that we're trying to achieve long term is to be able to go anywhere in the world, transact any currency in the world with just a QR code. There is enough tech and blockchain out there to make this happen. Some hotspots in the world, like in Thailand and Bali, you already see now a lot of prevalence of crypto-based payments. Now we need to build the bridges everywhere. So we're not the only builders. Everybody's trying to build out there. We're building here as well. And soon we see each other connecting everywhere, whether it requires us to expand or them to expanding. We're open, we're talking, we're bridging. This is what we're here for.
Yeah, and I know you want to emphasize this is a 10-year plan.
Oh, at least. Okay. So when we were thinking about this project, when we were planning, when we were designing, whether it's on the engineering side, whether it's on our commercial side, whether on our go-to-market, we're looking to be here for 10 years.
All right. And in crypto, that's a long time. All right. Ali, thank you so much for joining us.
Awesome. Thank you very much, Christine.
That was Transactix CEO Ali Abudaya. More with the Stellar Development Foundation after the break. Oh, no.